over a scanning device. That's how you do it. The first time a shopper uses the kiosk, they have to, of course, insert a credit card to link it with their palm print. But after that, shoppers can pay by simply holding their hand over the kiosk. Amazon said it hopes to sell the palm technology itself, that scanning technology, to other companies, including retailers, stadiums, and office buildings. So another version of maybe Face ID or something like that. Of course, those Amazon Go stores, you just walk in and you walk out and you just leave, which is also amazing. So we'll see. We'll see which of these technologies ultimately wins. Joe?
It's all mad. It's magic, all of it. Coming up, we're going to speak with Hawaii Senator Mazie Hirono about President Biden's infrastructure plan, corporate tax hikes many of the left are hoping for, but also a bill that actually I think that she introduced that could be voted on as early as today. Stay tuned. You're watching Squawk Box on CNBC. Competing figures for President Biden's infrastructure plan being batted around by the political parties, as per usual. Some Republicans want a roughly $600 to $800 billion package. Democrats want more than $2 trillion. Join us now to talk about D.C.'s battle over spending and potential tax hikes. Senator Mazie Hirono, the great state of Hawaii with the lowest property taxes. Senator, thanks. We were talking about that yesterday. Thanks for joining us. We're also going to talk with you about the COVID-19 hate bill, that Crimes Act that you co-authored. In fact, let me mention your memoir first. New memoir. It's called Heart of Fire: An Immigrant Daughter's Story. I want to talk. We're going to talk infrastructure, but I just want to get, since it might be today, are you expecting your bill to be voted on today? Senator Schumer on Monday said it could be as early as today.
It could be today, it could be tomorrow, depending on how the Republicans want to deal with some of the amendments that some of their members want, which mainly have nothing to do with the bill itself. We'll see how that goes. But my hope is that we'll be able to get this bill done this week, because the AAPI community is being targeted for hate crimes and other incidents, and the Congress needs to stand up to condemn these kinds of actions.
It looks, 92-6 to start debate. So I would say that portends, that it would move fairly quickly. 150% increase.
Hopeful.
150% increase in anti-Asian hate crimes in the 16 largest U.S. cities. Exactly what does the bill do to address this? Because there are laws on the books. You can't do this anyway. So how does this extend that or make it customize it to this problem?
There are hate crime laws federally. Not every state has hate crime laws, but all of these kinds of crimes and incidents are vastly underreported. What this bill does, which I call a very non-controversial bill, requires the Department of Justice to appoint a person to expeditiously review these kinds of crimes and incidents, and to work with state and local law enforcement to enable them to do online reporting of these kinds of crimes, and then to expand to advocacy groups in the community, because the AAPI community, which represents like over 40 racial groups and 300 languages, they need to be reached out to so that they know that when these things happen to them, they should report it.
Let's and we will be paying attention to that, whether it's today or tomorrow. And like I said, the certainly seems like something that shouldn't have a lot of resistance, I would think.
One would think.
The infrastructure bill, on the other hand, you've seen Senator Cornyn say, you know what, we will do $700-800 billion of pure infrastructure if you will focus it, focus it more directly. Now, the latest thing is that there are some birdbath concerns about a lot of things that are in the $2 trillion that just by definition probably aren't going to pass muster. So even if you do it through reconciliation, you're going to miss out on a lot of things. Will that make you and your colleagues more inclined to maybe work with Republicans on a smaller bill?
This is not a time for a small half-measure kind of approach that the Republicans like to focus on. 600 billion versus 2.5 trillion. That is a huge gap. This is a time for us to think big, move large, because we need to get our economy back on track. We need to create jobs for people. I realize that certain segments of our economy are doing fine. Wall Street and others are doing fine. The tech industry is doing fine during this pandemic, but there are millions of people still out of work. And this is a bill that would get our economy back on track. And by the way, our thinking, the Republican thinking about infrastructure is really limited. They don't even consider removing lead pipes to be part of infrastructure. And of course it is.
Well, there's probably somewhere between 600 billion and 2.5 trillion where you could address a lot of infrastructure, a lot of much needed infrastructure, and maybe some of the things that it's been expanded to, you wouldn't get there. I guess my real question, Senator, is there any chance this is not done under reconciliation? Is there any chance that the two parties are able to decide on something? Because there was hope at the beginning of the administration that there were going to be signals sent out that President Biden would do things that way on a more bipartisan. I guess you'll blame it on Republicans, but if it's reconciliation, that certainly isn't bipartisan.
But it also means that we actually get things done for the American people. And that's what the Democrats are focused on. When you have not a single Republican voting for the rescue bill, that gives you an idea of where they're coming from. And they're not coming from a place that says we should be helping the vast majority of people in our country. They're very focused on helping Wall Street. Good for Wall Street, good for corporations, but it's not good for the rest of our economy. Even Jamie Dimon has said when we don't pay attention to providing resources for hard-hit communities, economically distressed communities, that is not going to help our overall, the health of our country. And coming from Jamie Dimon, I think we should all listen.
It's not just Republicans. You might have trouble paying for it with a 28% corporate tax because of a Democrat, or maybe a couple Democrats, Senator Manchin. Do you think that would you support, and do you think that there will be a compromise on that part of the legislation, the 28, maybe do 25? Corporate tax.
There could be, because there's no question that the corporations benefited hugely from the tax cuts that the Republicans handed to them without a single Democrat voting for it. And so we're in a situation where everybody should be paying their fair taxes and the corporations are not. So if we're going to argue about the amount of the increase for corporate taxes, maybe there's a compromise there. But of course, where I am is that we should raise the corporate taxes to 28%. Mm-hmm. Then there might be compromise there, but there are other issues that have to do with tax overhaul. I mean, ending the tax breaks for fossil fuels. My goodness, that should have been done years ago, to close tax havens for corporations.
Senator,
there are a number of other things.
When you say that the tax cuts benefited corporations greatly, that almost sounds like you're saying that in a negative way. Can you explain why it's bad when I don't know whether you just think a corporation means the CEO or means, like a corporation, I think, includes shareholders, it includes employees, it includes, being able to invest in research and development and to expand and to compete globally, and all these things that work to make the private sector the economic generator of all the tax dollars that we're using. Why is it a bad thing that corporations benefited from that bill?
When that bill was passed without any input from Democrats, that was supposed to be, it was kind of like a trickle down situation. They were supposed to create jobs, et cetera. They were supposed to increase massively the pay for CEOs, et cetera. So there's all kinds of evidence that says that the 1.5 trillion in tax breaks for the 1% of the richest corporations and people in our country certainly did not trickle down to create good paying jobs for people. It was mainly benefiting corporations, and so they are not paying their fair share in taxes. You have some corporations that pay zero taxes. That is totally unfair, to say the least.
All right, Senator, we didn't get to talk about Heart of Fire. It's a pretty great story, coming here when you were 7 years old. But you know what? You got to coming to Hawaii. What island? Just so I know, are you on Honolulu?
I live on Oahu, Honolulu, which is where the majority of people live, but we have a very diverse state, and every island has unique charms, as you probably know.
You're right, I do. And I've said that many times, that the absolute worst island is otherwise the greatest place on Earth. So it's kind of...
there you go.
Am I right or am I right? Yeah, I have not been...
You're right.
Haven't been to Lanai, because I don't think... Steve Case hasn't invited me. So that... Anyway, I'm kidding. Yeah, I think it's Lanai.
There's another guy who mainly owns that island now.
Yeah, exactly. Senator, great to have you on today.
Thank you.
Hope to see you again. Good luck with the book, Heart of Fire, for your memoir. Thank you.
Aloha.
Molokai. I have not been there yet. Anyway, when we come back, we're going to break down the new lineup of products that Apple just teased, and we'll dig deeper into Netflix's earnings, the subscriber numbers there, and the guidance that they've given the street. Are investor fears big enough to justify that 8% drop that we saw in the stock? Stock was down as much as 11% last night. We've got those stories and much more next. Squawk Box will be right back.
Welcome back to Squawk this morning. We got two FANG stocks in focus right now. Shares of Netflix, they tanked after the company missed first quarter subscriber addition estimates and gave light Q2 guidance. Julia Boorstin joins us with that in just a moment. But first, I want to go to Josh Lipton, who's got a wrap up of Apple's latest product unveil. Josh.
So, Andrew, Apple packed a lot of news into that 60-minute show. Let's start with those new high-end iPad Pros, the first to feature the new M1 chip. That's Apple's new custom-designed chip that's faster and more efficient. The iPad, we know, has been a bright spot for Apple, revenue surging 41% in the company's Q1. Apple also unveiled a new iMac, which uses an M1 chip too. The integration of that chip helped Apple design a lighter, sleeker machine. Both the new iPad and Mac are going to be available for delivery in the second half of May. Evercore's Amit Daryanani says that indicates to him that the chip shortage is not having much of an impact, at least on these new products. Apple also debuted the AirTag, which helps you track and find misplaced items like your keys and wallets. It costs $29 and is a direct challenge to Tile. It wasn't just hardware, though. Apple also announced a new podcast app, including a redesign and subscriptions, adding fuel to its rivalry with Spotify and others in this audio streaming war. No surprise that Tim Cook is interested in this space. This year, eMarketer says nearly 118 million Americans are going to listen to a podcast at least once a month. Now over to Julia Boorstin for a look at those Netflix numbers. Julia.
Thanks so much, Josh. Well, Netflix may have beat expectations on the top and bottom line, but it's disappointing subscriber growth and guidance, which sent the stock down about 10%. And after hours trading, it's now down about 9%. They do tell an important story about the impact of COVID and the streaming landscape. Now, Netflix was right that its massive 2020 user growth, it added over 20 million last year. It was a pull forward from this year, with first quarter subscriber growth of 4 million coming in less than 2 million lower than expectations, while guidance for 1 million additions in the second quarter, that's less than a quarter of expectations. And this comes as the domestic market does mature. This was the third straight quarter of under 1 million net additions between the U.S. and Canada. And Netflix co-CEO Reed Hastings says that the user growth decline is not a result of competition. They say their largest competitor is still linear TV. The second is YouTube. But he said rather it's the impact of the pull forward and COVID.
It's intensely competitive, but it always has been. I mean, we've been competing with Amazon Prime for 13 years, with Hulu for 14 years. It's always been very competitive with linear TV too. So there's no real change that we can detect in the competitive environment. It's always been high and remains high.
Hastings and his co-CEO Ted Sarandos saying that they're optimistic about growth in those user numbers restarting in the second half of the year. They noted that churn has decreased despite price hikes, and they say that there will be more shows and original films launching on the service in the second half. That should really help bolster that growth, Andrew.
Julia, so Netflix is experimenting with cracking down on password sharing. That's one of the other features of this quarter. What's the company's plan there?
Well, it was interesting. It came up a couple of times on the call, and they said they didn't want to turn the screws on their users. They didn't want people to feel upset or uncomfortable about the way they were starting to enforce this crackdown. But they said they did want to make sure that the people who are watching Netflix were paying for Netflix. So I think they're going to be addressing this very carefully moving forward, but they are going to really try to limit the amount of password sharing that's going on. We didn't get any details of how many people are sharing passwords, but a number of estimates say that over half of households, or about half of households, are sharing passwords. So I think they're going to move carefully and slowly in that direction.
And real quick, any estimates of what they can capture of that? So 50% of these things are being shared to a second. Do they get, 10% of those people end up signing
No
up
estimates. They were very cautious. They just think that they're going to be able to figure out different types of subscription offerings. So maybe you would have more than 4 streams, but they didn't even address the numbers. They just said, we don't want anyone to feel like we're turning the screws on them.
Okay, we'll see how they feel about that. Julia, thank you. It's great to see you. Joe, over to you.
Thanks, Andrew. Coming up, we've got some additional commentary on those Netflix numbers that you don't want to miss with Lightshed Partners' Rich Greenfield. He was right. He was right about What's My Agent. I really think I might be learning how to speak French just from watching it. We're also going to get him to weigh in on the NFL's announcement that its Red Zone and NFL Network channels will be available on Hulu's live TV service by August. Stay tuned. You're watching Squawk Box on CNBC. Sacre bleu.
Welcome back to Squawk. Before the break, we heard about Netflix's disappointing subscriber ads in Q1 and the company's disappointing Q2 guidance. I want to dig a little bit deeper into the stock story of the morning with Rich Greenfield. He, of course, is Lightshed Partners co-founder and recommender of all good shows, including Ask My Agent. Joe just mentioned it. You got to watch the subtitles. It was a good rec. It was a good rec, Rich. We appreciate it. Let's talk, though, about the stock. Were you surprised? And more importantly, what does this portend, not just for Netflix, but for frankly, all of the sort of stocks that have won during this pandemic, and even the subscription business model itself, which seemed to just take off like a rocket. And now I think there's real questions about its staying power.
Well, I'd say, first of all, Andrew, obviously this quarter was disappointing. There's no way around the fact that probably the guidance even for Q2 being more disappointing than the Q1 results. That said, I want to remind everyone that's watching today, this has happened before, many times, actually. I mean, the reality is forecasting Netflix on a quarterly basis has become increasingly more challenging as the subscriber base has grown. The size of the beats and the size of the misses have grown pretty notably. I mean, if you go back, I remember being on Squawk, in the middle of 2019 after that Q2 print. We tend to all have a habit of over extrapolating any one quarter and trying to change the entire future of where the world is going. I think if you take a step back, though, and I want to get to your question on all the other platforms, the reality is what's going on. Everyone is shifting to streaming. You've seen, obviously, your parent company jump in with Peacock. You've seen Discovery. You've seen Paramount Plus, part of Viacom. Everyone is moving towards streaming. All of the best content is moving towards streaming. Cord cutting is accelerating. I mean, Verizon just reported, you had Hans on, they are 7% lower in video subscribers year over year. That's a pretty crazy rate of decline in video subscribers. Your parent company, Comcast, is talking about losing upwards of 2 million video subscribers in 2020. So the underlying trend of the shift from linear to streaming is just beginning. And remember, on a global basis, just keep this one stat in mind. In all of Asia Pacific, Netflix has 27 million subscribers. It's a market with hundreds of millions of potential subscribers over time. So again, it's very easy to get caught up in the negativity and being upset about Q1 numbers. The reality is there's a long way to go, and we're still pretty early in the transition to streaming television.
Okay, fair enough. I think but the larger question is, what does it portend for the subscription business more broadly in terms of just the pace of growth? And how much was sped up by the pandemic, and therefore, how do you calculate what comes next?
Well, I mean, look, there's the way we were trying to thinking about it is if you were to look at, if you take Netflix's Q2 guidance and you sort of look at the prior 4 quarters, so from Q3 2020 through Q2 2021, so that 4-quarter period, they're projecting roughly 16 million subscriber net adds over that period of time. In the 4 quarters before that, which was obviously driven by the pandemic, both really Q1 and Q2, as well as a really good end to 2019, they added over 40 million subscribers in that prior 4 quarters. But again, if Andrew, if you go back to like, what does this mean for the future? The average of those 2 periods is obviously, in the high 20s. I think the reality probably lies somewhere in between, right? Like this is not, you probably went a little too far, too fast for look at Disney. Think about the explosive growth of Disney. Does anyone really think Disney's going to have the type of growth in the next 3 years that it had over the past 12 months between launching and the pandemic surge? All of these factors have, I think, led to, really exponential growth that is going to be hard to keep up with. But the underlying trend, especially as the rest of the world starts to catch up in terms of demand for streaming television, I don't think the underlying trend has changed at all. There may be a bit of a pause, but the one other thing I want to highlight, because I think you and Joe just highlighted the comment about Call My Agent. The reality is Netflix, I think, and all of these services are really driven by, blowout content. And when they don't have a blowout content or show in a given quarter, I do think that they end up suffering. And so I think we do realize that net ads, not churn, but net ads are really, or gross ads, are really driven by huge programming. If you listen to Netflix, they could be lying, but at least the comments all seem to center around the second half slate is incredible and really heavily weighted. And so the type of numbers that you could see in the second half of this year, my guess is really going to surprise people. And I think we'll be having a very different conversation as we move into Q4 than we're having right now.
Yeah, Andrew, you called it Ask My Agent. Actually, the agency is called Ask. It is actually called Ask.
Yes.
And so it's sort of close, but in French, had a different title. You know what the title was in French, Rich? 10%.
I don't.
10%. Well, in the French words for 10%, which I thought was fine. But it's phenomenal, isn't it? Have you noticed that, I'm listening to French. Every French sentence ends in a word I know. It's just all the stuff before it, like facade or controversy or whatever. And I'm almost getting where I can speak French now. But Rich, give me another, because I really love it. My wife loves it. It's all set in Paris and real locations with real French movie stars, by the way, too. What season are you on now, Rich?
I'm on season 3. If you haven't watched Lupin or Le Pen, I'm probably saying it wrong. You should watch that. Season 2 is coming out in Q3. That was their most watched show. It was only 5 episodes, but that was their most watched new series in Q1. But again, I think when big shows come back like Casa de Papel, I mean, you've got a really heavyweight Q3, Q4 slate and movies.
Rich, but one of the questions I wanted to get to is this idea of churn, which was not as high as I would have anticipated. In part, I thought it would be higher simply because we are, and I want to say, Call My Agent's a great show. It's obviously in French. It's a show with subtitles. There aren't those sort of marquee shows on these services right now because of the production issues that happened before. And so my question, I think longer term, is what kind of churn are we going to see, or do you think that everybody is going to have such a fabulous slate, come Q4 that nobody leaves any of these services?
Well, I think the question you're asking is, can everybody win? I mean, we tabulated recently, we did a blog post and we tabulated if you took everyone's projections out to 2024, global SVOD subscribers would be like 1.2 billion from like 600 million last year. It's pretty staggering in terms of sort of that growth. My guess is, yes, there are going to be clear winners and clear losers. I mean, I don't think everyone's going to be able to achieve their expectations. I think there's these services. It's really quite easy to add subs in year one for all of these new services. As you start to get into year 2 and 3, like consistently adding subscribers year after year, just a lot harder. And I think that's why you're seeing Disney. I mean, I give Bob Chapek a lot of credit. He deserves credit. He is dramatically ramping the spend at Disney Plus after realizing how hard this is in year 1. And that's why the content budget has doubled. And so I do think it's going to be, the answer to your question, Andrew, is it's all dependent on spending. If they don't spend enough, they're going to have churn. The reason Netflix doesn't have churn is that there's so much content to watch that it's hard to leave once you're there. Are they bringing in as many new people? No, but the people that are there are sticking because there's just so much content there.
Right.
Everyone's going to realize there's a reason why Netflix spends $17 billion on content. They need to keep people, and it is really hard in SVOD to keep people.
Rich, thank you. At some point, I want to come on back because I want to talk about the NFL and Hulu. But another day, another topic. Talk to you soon.
Great for Hulu subscribers. Not so good for Fubo subscribers.
We'll talk about that. Bex?
Thanks, Andrew. Hey, Joe.
Yes.
Parlez-vous français?
Super. Oui, oui.
Good. Good.
I'm picking
I
up a
laughed
few
out loud
things.
when
I'm
you
not
said
kidding.
You could speak French now.
Every sentence, when you see the subtitle, it's like,
Portmanteau.
it sounds just like, but there's a lot of words that I actually.
A lot of crossover.
I'm sounding like such an ugly American, and I am an ugly American. I'm like the ugliest of all. But God, I love Paris. Love Paris. Favorite place.
Me too. Let's get over to CNBC headquarters, check in with Jim Cramer. Hey, Jim, 16 hours ago, you tweeted that you weren't sure there was enough to really figure out how to trade Netflix on that right now. But you've had a lot of time to look this over and do your research, and I just wonder what your takeaway is now. What happened?
I think
how do you trade this?
I think it's true. I mean, I do believe they de-risked it. I do believe that they created, as Rich Greenfield said, an outlook that basically can be beaten and is not necessarily the correct one. These guys have not been that great at forecasting. I think the most important line in the whole call was that Reed saying, listen, there's 800 million TVs, at the top other than China. That's a lot of room to grow. I agree with that. I think that they were constrained by what they were showing. I don't know. I mean, I think that this is an opportunity. I really do. I mean, maybe they can take it back to 490. But Bex, I like that. I like the Bex. I do very strongly believe that these guys are so confident, and it's not made up. $5 billion buyback. They're fixing the balance sheet. There's so much that's good that I still think they're having a great time. One day there'll be a conference call where they literally say, okay, maybe things have run out. That's not this one. I mean, this one was just basically pull through and don't worry about it. And I agree with them. I think that this is a very good story.
There is the call. Stock's down 8.4%. Can't wait to hear more. Thanks, Jim. We'll see you in just a few minutes.
Thank you, Bex.
Thanks. Squawk Box will be right back.
Welcome back to Squawk Box. We've got some notable analyst calls driving some pre-market action today, starting with shares of Norwegian Cruise Lines, gaining over 1%, roughly 300,000 shares of volume, helped along by Goldman Sachs analysts. They upgraded to a buy from neutral. They raised the price target to 37 from 27. They cited factors like better fundamentals on the horizon once sailings resume, with demand being driven by that pent-up kind of leisure demand travel. So watch those shares as well. Next up are shares of Coinbase, down about 1%, 100,000 shares of volume. The recently public cryptocurrency exchange gets started with the coverage at Rosenblatt with a buy rating of $450 price target. They cited optimism over the long-term prospects at Coinbase, given more widespread adoption of crypto, and call it a long-term category leader. And then we're going to end on shares of Amazon, down fractionally, 10,000 shares of volume. The online retailer and web services giant gets named a top pick by analysts at Oppenheimer, already an outperform rated stock, but it gets upped by a target price to $100 to $4,200 per share. They call it, guys, their best large cap pick. They cited things like anticipated investment, Joe, in categories like grocery, pharmacy, and advertising markets. Joe, I'll send things back.
I just like that you describe what Amazon was. What do you call it? That's nice that you do that. I wasn't familiar with it.
Just in case some people aren't familiar.
Thank you, Dom. Thank you.
Thank
you, Becky. Thank you, Andrew. Make sure you join us tomorrow. Squawk on the Street is next.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber. Futures are soggy again after the worst day for stocks in about a month. Investors reacting to Netflix, Verizon, the Apple product announcement, and we'll see if we can avoid 3 days down for all major indices. We haven't done that since early March. Our roadmap begins with that Netflix sub stumble. Shares are down ahead of the open, on track to be the only FANG stock now negative for the year.
Plus, it's all about Apple, a big product unveil, an analyst price boost, and news of a ransomware attack on a key MacBook supplier. And we'll talk about, it really is, the SPAC collapse. Transactions coming to a near halt amid a potential SEC crackdown, and just overall a cooling of interest, Carl, for that product, at least as of now. The liquidity providers, as they say, Carl, not quite there anymore.
Yeah, the charts are going to be interesting for some of our viewers to look at. But we'll start with Netflix this morning, guys. Jim, we went into the print last night with pretty muted expectations, but I'm not sure that the street was counting on some of the sub-guidance we got last night.
Look, I don't care so much about the guidance as the attitude. And the attitude was, once again, terrific. I know that this is an attitudinal stock in the sense that this time they had Nidhi Gupta. Nidhi Gupta was the, you have to watch these conference calls, they're so great. A Fidelity analyst who asked a series of very hard questions, I think harder questions than you get from a Wall Street analyst. And I liked all the answers. And the answers are basically, look, things are on track. I mean, the biggest competitors, once again, are linear TV and YouTube. There are 800 million TVs outside of China. So therefore, that's what we're going to get. The actual content was constrained by COVID. We did pull through mentioned 3 times. But, David, in the end, the level of confidence, whether it be the $5 billion buyback, whether it be the pay down of debt, or whether it be the just overall sense that we're just scratching the surface still, made me feel like Netflix isn't going to get its forecast right. It's going to beat its forecast.
Really? I'm
Yes.
a little surprised to hear that. Because,
Yes, I really feel that way.
You know, I think you could also talk to some people, though, who say this is a company that guided to, what, 4.5 million? That was mid-January, so they already had some of the quarter.
Right.
And they were seeing the cadence, and then they came in below that. And now they're guiding to 1 million for the second quarter, and we're into April a bit already, so we're already getting a sense there. There's a concern. And they say it's not competition, and yet churn is very low.
Right.
So it's the top of the funnel, Jim, but they don't seem to be adding that many people. So how could it not be competition?
They have to add more content.
But more content would be designed to what? Entice new people or keep the old people?
No, entice new people. Because the churn's so low. I mean, honestly, David, I thought it was a de-risked conference call. I felt that I'm taking the other side of the trade here, of even themselves.
Right, so you're a buyer on this dip, is what I hear you saying.
They're going to take it down another 10 because usually $10
or 10%?
$10.
Okay.
They'll take it down $10. They'll find I believe, a little floor there. But Carl, what I like most about Netflix is, once again, it's their belief in their product and the strength of their coming slate. And that does make me feel that if this stock gets to 490, you got to stay in there and buy it, all right?
Yeah, you're not alone, Jim. Stiefel today says they were waiting for the moment when the pull forward became evident. This was the print that did it. They see 3 to 9 months of working through the comp issues, and then we get back to a period where the stock can compound consistent with revenue growth. They go to buy 560. Here's what Reed Hastings said last night about competition.
It's intensely competitive, but it always has been. I mean, we've been competing with Amazon Prime for 13 years, with Hulu for 14 years. It's always been very competitive with linear TV too. So there's no real change that we can detect in the competitive environment. It's always been high and remains high.
Really?
Yes. Well, they need more
Always
than
a good time, Jim, to be a showrunner or a content creator. These budgets are creeping up on $20 billion.
I thought they paid too much for the Sony product, but maybe they did. Although I think my most enthusiastic part of the conference call was Lupin and how much Lupin is loved. And the more they make content,
loved globally.
The more you make content local. I mean, let's say they made something, David, right now in, let's say, Honduras.
Right.
Well, and it speaks the language, that particular dialect.
Yes.
I think that people would love it.
I think you're right, but again, in speaking to a couple of people this morning who are sellers of the stock, there is just concern, to miss a guide from January where you're already into the quarter, to then lower this guide now to where they are, and the compounding impact of missing sub-growth targets over time will have an impact on future revenue. And I just don't know how to think about what his answer was on competition. And by the way, listen, he's not a guy you can doubt. I mean, they've delivered.
That's my problem.
I understand that, but you know what? Hastings can talk about. Well, we've been going up against Hulu and Amazon, but you know what? Disney Plus, Peacock, Discovery Plus, Paramount Plus. I mean, there is a plethora of new platforms out there that may be enticing people to some extent. Who are saying, "Well, I'm going to give that a shot on my limited budget before I get into this." Well, I don't know.
Look,
and it's not U.S., Jim.
No,
it seems to be Latin America and some other areas that perhaps are more problematic.
There are real issues here. I'm not denying that. I am saying that they've now made it so that things have been lowered. Everybody knows what you know. I'm not slating what you know, but everybody knows what you know.
I have a keen sense for the obvious.
Yes. But I do think, and Carl, this is something that Strauss Zelnick has taught me from Take Two. The competition is not linear TV, and it's not YouTube. It's ours. It's the clock. And the one chink in the Netflix story is we are going out. And when we go out, we don't watch as much Netflix. And I think that the great boom is all about being outside of the house after being imprisoned. So I do think that that's my worry, but they took care of that worry by constantly talking about pull-through. They've made it clear, Carl, that, listen, we did not do well. We did not do well. And next quarter, we're not going to do well. Well, you know what? If you keep saying you're not going to do well and you do well, you have an explosive situation. Let's say they come up with a Lupin that's based in Vegas. I don't know. I loved Lupin. I watched Lupin twice. I haven't. Yeah. Well, I was in the hospital. I had nothing else to do.
Yeah.
They had Netflix.
Right.
It's not bad.
That's subtitled, right, Lupin? It's in French.
Well, David, I speak French fluently.
Of course you do. I forgot that.
I was the French scholar. No, Carl, I actually walked into a literature course at college that was French lit, and it was in actual French. I said, I'm going to get blown out and ruin my transcript. I'll never get to law school. So I knew better. But I do think that this was one of those conference calls where they didn't say, you know what, and we've got these 7 movies that it's all you're going to be talking about. They didn't do that, Carl. Yeah. And that was many ways more important.
Jim, you are bringing up a broader question about the reopening, and that is why the street is starting to give the reopening story a second look. Why is United guiding below? Why is gas demand creeping a bit lower? Are these problems in India going to somehow migrate to North America? There's a report in one of the North Carolina affiliates this morning, Jim, that the number of vaccination slots at one site for this week, the number that are taken are 3%. Times has a piece up this morning saying if this is a war, getting people vaccinated now, we're in the hand-to-hand combat portion of that war.
Well, I think that that front and center in the anti-vaxxers is the CDC. The CDC basically made you feel that if you take the J&J, well, you're going to face death because a person died. The CDC is atrocious in doing that. The NIH, by the way, not very helpful in terms of once you get in.
It's a very weird time.
It's a weird time.
If
David,
you are fully vaccinated, it's not clear yet that what the reward really
There's
is.
none. I went to Mexico. I came back. The scrutiny of being fully vaccinated. No one asked me whether I got vaccinated the whole way. I was asked 10 times.
Seem to be,
Delta 6 times.
You know, pushing against the closed door here that won't open in terms of really fully changing behaviors as a result of being fully vaccinated.
No, you get
And so
vaccinated.
you
what it
can't
does is you
understand why
get a
some
bad
people are
second
like,
day.
What's the point?
Right. Well, how about the fact that the Moderna made people sick, so let's not do it.
No, but
the
Jim, I don't know.
Being like what the CDC is basically not even mentioning that the Moderna gets sick, but what they are talking about is the death rate of J. What's the death rate, David, on the J&J?
Well, it was 1 out of 6.8 million.
Frightening.
Right?
That's why any one death we know is bad, but there are how many people die from the flu if they're not
ability
vaccinated?
to analyze risk seems
What
to
happened
be-
to the
I know,
CDC?
I know.
What happened to
you got
them?
a lot more risk every day you get in your car, that's for sure. Or you
Well,
have
yeah,
more
but
chance of getting hit by
what
lightning.
is with the CDC?
I don't know.
Impending
I don't know
doom.
what's with
How about the
CDC.
impending doom?
I don't know. I don't have
Is
an answer
Stephen
for
King
you.
writing their press releases?
I don't know. At some point, they've got to start to make it more, I guess, more of a reward to actually be fully vaccinated.
Yeah, like
At least
a
we got to
rewards
be on the same
program like
set
they have
together.
at Panera.
That was our reward. But,
right? How about a
yeah.
rewards program like Starwood
You
used to
also
give
have
you?
people who are simply refusing to be vaccinated because they're concerned somehow for any number of reasons.
Right.
Whether they be health,
Well, they're going to get it.
or
We know that.
privacy, or the government's implanting a chip, or who knows.
They're going to get it. They'll get you. There's no national defense
What's
to
interesting
it.
right now, and Carl, I want to get to Verizon earnings because we want to get back to that, is I think a lot of companies are trying to understand what their obligations or what they can do in terms of compelling their employees to get vaccinated.
And cities got a program.
And that is a conversation that's going on, I know, at high levels in a lot of companies right now. Can we do that?
But they have to make it so that it does matter if you're vaccinated. Right now, it's kind of a joke. I was vaccinated by Moderna. Sorry. I tried to get into a doctor to see it, and they stopped me at the gate. And they said, "What? How are you feeling?" I said, "I'm feeling great." "Did you go anywhere?" "No." I said, "None of that. I've been vaccinated." "Oh, really? Okay. Have you been to Florida?" I said, "Yeah."
Yeah.
Well,
no,
you can't go in.
It doesn't.
Florida.
Doesn't compute.
The country of Florida.
0.008 doesn't.
Every hedge fund manager goes to Florida, and they get in anywhere.
Let's talk Verizon briefly, guys. The stock doesn't look like it's going to do much this morning. The company reported earnings. Hans Vestberg was a guest on Squawk Box this morning. The one number that I am focused on, though, is, you had wireless revenue at $16.7 billion. That was up 2.4%. But you did have 178,000 phone net losses.
Yes.
And that does differ from previous quarters. Jim, it's interesting. Our parent company, Comcast, resells wireless service. Of course, they actually sell the network. They're renting the network from Verizon, but they're reselling. Spectrum has a pretty compelling offer in the marketplace as well, in addition, obviously, to broadband I'm talking about, wireless. You wonder whether it's starting to take a bit of a bit. I mean, we're not talking about a large number here, but it was negative.
Well, how about the fact that maybe negative, but the Spectrum that they bought, they paid a fortune, and he obfuscated Hans on the next. He did basically said, "Listen, we may not need the next auction." I want to know how many towers they need. I want to know quality versus T-Mobile. The quality, David. Remember, it was always Verizon was number one.
Yes.
Carl. Yesterday, I got pajamas from T-Mobile. They sent them to me, and they had.
I got a blanket.
Yeah.
Did you get it? Was it a blanket or?
Please do not put that anywhere near anything that has flame.
No, I'm leaving that thing in the box.
Yeah, that thing is just one of the...
Yeah, it came out of that box smelling not
I
good.
think that could be spontaneous
They
combustion.
got to stop wasting money on things like that. I'm sorry. No offense.
But Carl, they're as aggressive as even when John Leisure's not there. Although John Leisure, some of his stuff was half cotton, half poly.
Right. Although there is a belief that overall this is now 3 players and they're all going to grow at nowhere near the rates that T-Mobile previously was growing as well, Jim, that it's just all going to moderate.
Well, I don't know. I mean, I think that 5G is a big deal.
It is a big deal. It is a big deal. Churn stays very low. Retail postpaid phone churn 0.81%, Carl, at Verizon. Stock not doing much.
No.
Hasn't done much for a while.
Hasn't done much since it's a bond.
Yeah. It's about the dividend.
Carl, if we just talked about Verizon, no one would watch us.
So we'll stop talking about it, Carl.
It does not move a lot on earnings, guys. But it gives us a window to talk about Apple in a little bit. We do want to take a moment, though, to talk about the verdict in Minnesota yesterday. Former police officer Derek Chauvin convicted on all counts. Our Frank Holland is in Minneapolis this morning. Good morning, Frank.
Good morning to you, Carl. Well, the death of George Floyd and the trial of Derek Chauvin that took place in this courthouse you see here behind me, seen as a major inflection point in this nation as far as justice, race relations, and law enforcement. Hundreds of people gathered outside of this courthouse yesterday awaiting the verdict. When that verdict was read, people, they really expressed a range of emotions. Some people crying, some people hugging, some people shouting, while hearing that Derek Chauvin was found guilty on all 3 counts. Many in tears, saying that this was a victory for this city, for the nation, and especially for the black community. It was a dramatic reversal from the day before when the jury first deliberated. So many were anxious, tense, and concerned about social unrest related to this trial.
My emotion during the trial was anxiety. I mean, a heightened level of anxiety, concerned about which way that this would turn out and what the reaction of the city would be. But to look at it now, it's like the day of Jubilee.
Voice alerts on.
You know, a celebration and what we're here for. But also, let me be clear about this, it's also bittersweet.
Now, bittersweet, that's a word that we heard over and over again yesterday. So many people saying it's important to remember that George Floyd lost his life, and that was the catalyst for this global movement. President Joe Biden addressing the nation about the verdict last night.
Nothing can ever bring their brother, their father back. But this can be a giant step forward in the march toward justice in America.
Now, what this means for the nation, for this city, for law enforcement, especially related to communities of color, that, of course, remains to be seen. But here, in this moment, it certainly feels like a page in history has been turned. Carl, back over to you.
No doubt about that, Frank. I saw some comments yesterday from Business Roundtable and Chuck Robbins of Cisco. We appreciate that, Frank Holland in Minneapolis. We'll take a break here. We'll talk about Apple's product announcement when we come back. The new iMacs, the iPad Pro, what Katie Huberty of Morgan Stanley is saying about the company today, and what they may say in the earnings print next week. For the meantime, futures are red again. We're back in a minute. Big day for Apple yesterday, unveiling some new products at its spring-loaded event, including the iPad Pros with the M1 chip, of course, 5G support, the Liquid Retina display, slimmer iMacs, that lost item tracker for iPhone users called AirTag. Jim, Katie Huberty's out, says the strength of the portfolio could help re-rate Apple shares, although she only takes the target up $1 to 158.
Yeah, she's been cagey about the price target, but this note has what I've been waiting for her to do. It says, see significant upside versus consensus for Mac and iPad. Those haven't mattered. They haven't mattered in a long time. All that's mattered is the cell phone. What I like about what Katie's saying is it's sticky. She thinks it could be here to stay. Now, Goldman's got a sell on it, Rod Hall, and he says point blank, that's just going to be a blip. Don't trust it. And how they make the quarter matters. And if they make the quarter with these new products, then you can bet that it's one time only. David, I think that the Office at Home has made it so that the consumer is like the enterprise buyer. But the question is the enterprise consumer buyer almost done buying?
Because they're done at home.
They're done at
They've
home.
had a year.
They had the hybrid. Yeah, they're done at home.
And maybe they actually go back to the office, or they're fully outfitted already.
Right. I mean, these chip makers are saying, listen, let's be careful. It's the enterprise that we're worried about. We know that it's a blip for the personal.
Right.
And if that's the case, then Rod Hall is going to be right. The Goldman sell. Now, I happen to be a huge believer in Katie, and Katie's been the way to believe. But I do think that the idea that these new machines have more staying power than when they first come out is new. And if Katie's right about it, then you really do have the service revenue, you have the cell phone revenue, you have the wearables revenue, and then you're back to the original. You have the PC revenue. It's a lot of streams of revenue, David.
Yes, it is. And Carl, it's for a stock, of course, it's been flat so far this year, but maintaining still the largest market cap out there at over $2.2 trillion.
She talked about big buyback, too.
Yeah.
Dividend boost.
Yeah, she talks about returns. And by the way, Huberty did a 90-page report last week, Jim, about how corporations are going to have to completely reinvent their IT budget as they figure out who's going to work from where other than the office. And she took her PC estimates up for the aggregate market up to 16.5 year on year for 2021.
I'm up to the Battle of Borden. I'm up to page 48. That's reference, David, to War and Peace.
It's a long one.
Thank you. I appreciate that. You filling me in on that, as you well know.
What, do you know the Battle of Borden?
I do not.
Do you know that was actually, he traced it, what Napoleon did? Unbelievable. Unbelievable what a great writer he is.
Leo.
Yeah.
Yeah. I go by Leo. I don't.
Well, we'll take the course, the full year course that I
Will we?
Yes, I'll do. I can teach it now.
I think actually you should start to do that.
Carl, it's about time we injected some, really English reading, Russian literature. Shouldn't we? Or do you want to stick with Verizon?
I was an English major.
Let's stick with Verizon. That's like Moby Dick.
I like Verizon.
Right? Melville, Verizon.
Well,
Sleepy.
So far, we've gotten some French and some English lit, so we're working our way through it. It's only 21 minutes into the show. We'll get a mad dash in a moment. Don't go anywhere.
All right, time for a mad dash as we get you ready for an opening bell as well. Just 6 minutes away. What do you got?
Okay, logic and proportion are being thrown out on the ASMLF conference call. ASMLF makes machines that are as big as buses, okay? But you need them for memory chips and for logic chips. And last night, this company guided up. I mean, they were saying, look, we thought that memory demand would be, 20%. Looks like it's going to be 50%. Logic, they thought it was going to be 10%. It's 30%. This is the chip shortage. This is the chip shortage writ large. And it is right in our faces. It's because they just don't have enough of these machines. Everybody misjudged the demand. Speaking of, we talked about Apple. Yes, the demand for devices shocked people. Nobody was ready for the stay at home. It seems like nobody's ready for 5G. Nobody's ready for high performance computing. No one can get any chips. And David, if you're United States, you're United States, right?
Yes.
Okay, well, there's a picture. Regions where they ship to, David, U.S. is 3%. South Korea, 44. Taiwan, 43. China, 15. David, we are a pitiful, helpless giant, to quote one of my favorite presidents, Richard Nixon. I'm bringing him back.
From the dead?
He was not a great president. But he did correctly identify that we...
His moment.
He had a great speech.
Short of the EPA. All right, we got an opening bell a few minutes from now. Stay with us.
Got some action in the cruise lines this morning. Goldman takes Carnival from 21 to 26, Jim, and ups Norwegian to buy 37, talking about smaller fleet, more flexibility. They even raised the notion, at least, of vaccine-only sailings, depending on what regulators may say down the road.
Well, I think that one of the most frustrating things that Frank Del Rio, the CEO, excellent CEO of Norwegian, has had to deal with, the CDC won't speak to him. Now, he has said, listen, everybody has to be vaccinated. The passengers have to be vaccinated. The crew, we're not going to have any children, even though 1/4 of the people who go usually have children because we don't vaccinate the children. He says, let's sit down at CDC. Let's have a conversation. CDC, I'm hoping that Goldman knows something about the CDC because I think the CDC wants to put these guys out of business. And they're being very effective at it, David.
You really have it in for the CDC right now.
I would say
You're
that.
very upset.
PRC, CDC, don't come into me with alphabet soup.
Right.
I just am very worried about I'm very worried about their balance sheets. They need to cruise.
Yeah, they do.
And the CDC needs to give them
Mara.
the high sign.
33 calls.
We got to figure
May
this out.
14th,
Once again, Carl, if you're
2021.
vaccinated, it doesn't seem to mean
200
anything.
contracts.
How is that possible?
Excellent question, guys. We're definitely wrestling with that one as we are in the sea change here. There's the opening bell on the CNBC Real-Time Exchange. At the big board, it's UiPath, maker of software for automation systems. The
Check.
founder and CEO,
19
Daniel
clicks.
Dinez, will be our guest on Tech
May
Check at
7th,
11 a.m. Eastern.
2021.
At the NASDAQ, it's Angie, an
500
online marketplace
contracts.
for home services. One more note on some of the travel names, Jim. Deutsche adds UAL as a catalyst buy idea on this 15% drop in the last couple of weeks.
It reminds me of
a name that
Netflix.
they say is very much leveraged to corporate travel and, of course, long-haul international.
Right. It reminds me of Netflix, and it was a really bad call, UAL. I mean, it was just bad. And we'll hear from Gary Kelly tomorrow, Southwest. But everyone, I think one of the things that happened yesterday, Carl, as you correctly pointed out, is United Airlines had a bad quarter, and people were starting to talk about maybe things aren't going to be as robust. I think they're not as robust at United Airlines. And I think that others are doing better. We heard from Delta
TSN.
last week, and I thought Delta was encouraging.
190
I think we're
calls.
going to hear, when we hear from Gary Kelly, I
April
think he's going to say happy
23rd,
days are here again.
2021.
I really do.
400
We
IQ.
keep coming back to business
16
travel
calls.
in terms of trying to assess the
May
long-term
21st, 2021.
profitability of the airlines. The importance of business
528
travel can't be
contracts.
understated,
No, it
Jim.
can't be.
And we just don't know. I mean, I am hearing people are getting back on airplanes to some extent, but then I also hear things, Pfizer not letting anybody travel this year.
Pfizer?
Yeah.
What, they're that confident in their competitive drugs?
I mean, I
that
don't
they're
know.
not
My
going to
point
send
is,
reps
and
out?
by the way,
detail reps?
Who can get anybody vaccinated more than them, right? I mean, and boosters.
Why are-
There are a lot of companies that have basically said, no corporate travel this year.
They think that.
They do think that, and then maybe they will change. But again, back to the idea that we keep talking about, what do you get when you're fully vaccinated? And yet a lot of companies are still grappling with. And then you're also, on the other side, I hear obviously bankers who live on airplanes want to go visit people, want to go say,
Dell.
and the clients are like,
43 calls.
we don't need to. Or
April
I can't let you in the building.
23rd, 2021.
Because I have people
630
and this is really brutal. I've
contracts.
got guests who want for Mad Money who very much want to come in, and they'll ask me, "Are you vaccinated?" I'm vaccinated, and I have to say,
BAC.
"Well, vaccinated's got
38
nothing
calls.
to do with it. It's like deserves,
April
right? You know, deserves
23rd,
got nothing to do with it.
2021. 1,000
Clint Eastwood,
contracts.
Gene Hackman, no.
Yeah.
Deserve. But it is amazing, Carl. Like one of the executives who said he wanted to come on, he goes, "Why
Baba.
won't you let me in? I'm fully vaccinated."
222 puts.
And I'm like, I don't know.
April 23rd,
It's our rules,
2021.
and we have
Oh, well,
rules
that's
like
good.
a lot of others. Our rulers are not
359
letting-
contracts.
Almost no one's letting anyone outside. I mean, we're barely letting anybody in here who
You know
works here.
Do you know that there was a giant wild turkey trying to get into the building today as I was? Same time.
Was it fully vaccinated?
I think it had Moderna and was feeling sick, and that's why it
IQ.
was there. Second shot
13
Moderna, Carl, can
puts.
do that to you.
There are some
May
nice wild
7th,
turkey families
2021.
around here.
Yeah, I get my second shot this weekend, guys.
2,213
I'm sort of,
contracts.
bracing for whatever it brings us.
Netflix.
Yes.
You're gonna be
by the
watching
way,
Netflix.
Maybe. Journal's got
IQ.
quite a piece about
13
Pfizer
puts.
identifying now, Jim,
May
fake
7th,
vaccines,
2021.
especially in Mexico
3,000
and Poland.
contracts.
And
Sends
I guess
one
it
puts.
had to be expected at some
January
point. But the ability
21st,
for some of these criminals
2022.
to bring a load of
747
counterfeits,
contracts.
and people obviously scrambling for them, use them right away. That's something that Pfizer now has been able to pin down at least some instances of actual counterfeit vaccines.
I think the stock is starting to react to the fact that we're all going to have boosters and it's going to cost money. And so this has become the franchise for Pfizer. And if you take a look at the numbers for what the analysts are predicting for 2022 is a big drop off. If there's a booster, that won't happen. And I do think that Pfizer, I really believe Pfizer, David, is I think I think it's too cheap.
Do you?
Yes, because of the booster.
Because it will keep coming back.
Yes.
It's not going to be a one-time and you're done thing.
No, it's going to be more like the shingles vaccine that I hope you've had.
Not yet. I need to get that. Yeah.
You don't shop and you don't even get the shingles vaccine?
Actually, it was hard to get for a while and whatever. There's been a pandemic going on. I got to get to that.
I'm getting the Shingrix booster this weekend, which reminds me, Carl, that when the doctor says you have to have a booster, that's money in the bank. And it's going to be money in the bank for Pfizer. And I really think that Pfizer stock is too cheap because this franchise turns out to be bigger than anyone thought. Remember, they also didn't do Warp Speed.
How about Moderna then?
I think Moderna's stock is cheap.
Cheap?
Moderna has a vaccine. This is different because Warp Speed. But Moderna can use that technology, that RNA, to
NFLX.
solve a lot of illnesses.
520 calls. April 23rd, 2021.
Dow last year was the day that Moderna said,
213 contracts.
We have one person and we're 1 for 1. That was the bottom.
Was it really?
Yeah, it was the bottom. Cruel irony, David.
Yeah. Cruel irony. Carl, taking a look at Netflix shares right now, Jim's going to get his chance. He did say down another $10 from roughly where we are right now, but we are down 7.7%, about $41. You can see it right there as people adjust to the new guidance from the company.
Okay.
We will see.
And Tesla and Dogecoin, what are you doing, Tesla?
What?
Tesla.
What about Tesla?
You see the video?
No.
You didn't see the video in China? Carl, did you see the video in China?
Of where he was.
How slow were those guards to take down that woman who was saying that Tesla doesn't work? They kind of bided their time, I think. Eunice Yoon may not feel exactly as I do, but Carl, I think that the Tesla Chinese franchise, they better start behaving. Initially, they came out and said that the woman who attacked them was kind of a serial complainer. That didn't fly with the low-level Chinese government. You don't want the Chinese government, the lowest levels, were putting out negatives about Elon Musk. If he doesn't play ball, Carl, it's going to be higher level. And you don't want to get to be where Boeing is right now with the Chinese. Which is just so, they've got to get a deal with China. And we're waiting for
May
Xi
28,
to make a move.
2021.
Where I work for Boeing.
600 contracts.
Okay. Yeah.
Baba.
What, do you work for Boeing?
230 calls. April 23rd, 2021.
It is.
325 contracts.
You know what? We haven't talked SPACs in a few days, and we haven't.
what's going on?
We haven't in part because there's not a lot new, so to speak, except for this continued sell-off, which is
AMC.
worthy of at least
9
spending a
puts.
bit of time on. I called
April
it weeks and weeks
23rd,
ago, SPAC out, which
2021.
I was happy you
People
adopted.
500
that from
contracts.
Everybody but Jagdeep loved that
Man,
one.
well, the lights haven't been turned back on. No, in fact, it gets worse. I said earlier at the very top of the show, the liquidity providers aren't there. One question, of course, is have you had the cohort we've talked so often about, namely retail investors and the likes of people who are focused on Wall Street bets to a certain extent may have provided some of that liquidity for SPACs. Have they gone away? Is that contributing to it? But we also know, as we can take a look at any number of them that
April
are trading below
30th,
$10, which, by the way,
2021.
is
500
free call.
contracts.
Yes, in many ways. Remember,
The
'cause you can
IAC.
just say, no, I want my money back.
55 calls.
And so there
January
is some interest there. You can
21st,
split warrants. So a lot of
2022.
different things that more
500
sophisticated investors
QQQ.
do here when they trade below 10.
325 puts. May 28th,
The
2021.
SEC's continued focus on it is
602
also
contracts.
a concern, both from the projections side of things and whether they're going to crack down on their ability to offer these not outlandish, but certainly far-reaching projections that they don't have to be beholden to in any way. And pipe investors, Jim, there is a certain allocation from many of the big firms. You see Fidelity is involved, BlackRock, they're all in these pipes. But it's a certain percentage of assets that they like to keep it to. And right now, with the SEC focused on pipes and how long you may have to hold, and the warrants, and how long you may have to hold your
AAL.
investment,
21
it's making it
calls.
very difficult for
April
these
23rd,
companies to
2021.
allocate new funds
1,400
for pipes because they don't know
contracts.
how long they're going to have to hold on to their existing ones, and they want to keep their allocation level overall at a certain percentage of assets.
So you're talking about, let's say, Starwood, Barry Sternlicht, if he does like 5, 6, 7 deals, you're saying that that's the guy that he's very good.
Well, he's very good. No, my point is that
PLBY.
overall, they're like, we allocate
60
whatever
calls.
percent of this portfolio to
May
pipes.
21st,
But right now, we don't know when
2021.
the turnover is going to be. When are we really going to be able to sell?
568
And so we're not
contracts.
going to necessarily commit to
That's a
new
hammer.
pipes until
That's
we
a
know.
hammer.
And so, I mean, it comes back to Gensler at the SEC, which we're going to continue to stay focused on.
I made a joke about Jagdeep, and you introduced me to him. Jagdeep
QuantumScape.
Singh.
I didn't introduce you to him. He did the first interview here, and we focused on the company at that point. And then
Carl,
you took him, as you always do, and have now made him your guest. Yes.
But Carl, he came on the show last Friday, came on Mad. The stock's now down 64%. There was a short seller basically saying that the thing is a fraud. And I don't think it's a fraud, but the problem was people got more excited about his data than even he was. And Carl, these SPACs have forecasts, and the forecasts are so fabulous that you almost feel compelled that it's free money until you realize that.
And we've gone through that so many times. You can take a look at CCIV, of course, which is Lucid Motors. They haven't yet, obviously, de-SPACed. I haven't seen that stock below 18 in quite some time, 1782.
There's a commercial.
Chamath Palihapitiya's Clover Health, which, of course, is de-SPACed. That has been a very poor performer, although we did put his performance out on Twitter, I think it was yesterday.
April
claiming, of course, things have been quite strong. And it's true. If you invested with him at the right time and sold at the right time, you would have done fine.
40
ACIC, Flying Cars,
January 21st,
Atlas Crest, that's
2022.
at 989. I mean, you can go on and on here, Jim.
APL. 130 puts.
I like to say
May
Flying Cars.
21st, 2021.
Air taxis.
500 SQ
I think they are.
235
Yeah, Arc's in that
puts.
one. That's Moelis.
April 23rd, 2021.
Jim, you want to talk railways a little bit?
591
David,
contracts.
I've been thinking, if you're not going to talk about Canadian Pacific, then I don't even want you as my partner.
I figured I'd do it as a favor report, even though you can be part of it if you want to be. Did you see this morning? The news we got this morning is that CN, of course, Canadian National, does come out and they file their notice of intent to set out that they will proceed under the Surface Transportation Board's current merger rules. They need to do this. This is the new news of this morning. They're getting started very quickly here. They will maintain service and competition after the combination, they said, and they do intend to seek approval of the so-called voting trust. Of course, that's the way they're going here. That trust would enable KCS shareholders to receive the full payment in consideration of what is a roughly $325 per share proposal, a bit less given the fall in the stock, without having to wait for final STB approval. They also say that CN supports the STB reviewing this combination under the modern new rules, as opposed to seeking to have a combination with KCS reviewed under rules from 4 decades ago that have been opposed by virtually every other party to have filed before the STB. So they say, hey, new rules for us, which, by the way, are not new. They're 20 years old, but KCS might have been exempted from them. They say they don't care.
T30
and
calls.
of course, you heard the CEO yesterday.
April 23rd,
but here it again, this is what he had to say in terms of their
1,000
bid
contracts.
versus, of course, the current deal that Kansas City Southern is in to be acquired by Canadian Pacific.
We definitely have the best value to offer. We have the better bid. We have the better railroad and better partners to crystallize even more value at a time where they've decided that they want to combine with another railroad. It's a growth story. It's about creating new business. It's about converting freight, which is on the highway, to put it on the rail. And it's also to enable customers to do more trade and connect to more customers. It's not about removing any competition.
Yeah. Of course, for its part, Jim, Canadian Pacific yesterday came out, by the way, pointing out that their CEO's from Alabama, which I thought was kind of interesting.
Yeah, it was kind
They're going that route.
Yep.
But they also went on to say the proposal that JJ was just talking about there is illusory and inferior because it creates adverse competitive impacts and raises other serious public interest concerns. Going on to say as well, CN's proposal increases regulatory and antitrust risk for
June 18th,
Kansas City Southern.
2021.
Did you see how meager
1,391
Did you see how meager
contracts.
the overlap is, the anti-competitive? I mean, give me a break. I'm going to take the Canadian Nat side for a second.
Okay.
They're worried there's a Baton Rouge to New Orleans overlap. David, listen, there is a southeastern Iowa overlap. Northern Missouri, there's overlap. I mean, holy cow. David, those are very anti-competitive. Grain, French fries.
PLBY.
I don't
60
think there's
calls.
much
July 16th, 2021.
Well, we'll see.
And every one of those,
287
the way these
contracts.
things get solved is they give them to CSX, which, by the way, had a double-digit forecast last night, Carl. 11. They did the first time they've done double digits since 2011. So the railroads are heating up. CSX can take the ones that are anti-competitive. The deal gets done. There's my thing. Deal gets done.
All right. Good conclusion.
Thank
the Faber report.
So, Carl, I'm very bullish on this deal. I am.
Fantastic, guys. In the meantime, Fang, some travel names, some financials with some moderate losses this morning. We're going to start with Santelli this morning. Hey, Rick.
Good morning, Carl. Well, 10-year note yields hovering at 155.
337 puts.
Point. We had some data
April
today.
23rd,
So 2021. Really start in earnest tomorrow, but we did have mortgage applications from the Mortgage Bankers Association.
275
The reason I'm
calls.
bringing them up is the
July
most recent week
16th,
was up
2021.
8.6%. January of this year
489
was up
contracts.
16.7%. First week. So if you look at those two numbers, they are the best as you see on this chart going all the way back pre-COVID, so March of 2020. And I think that's something we need to bring up. Even though some of the housing numbers have been less aggressive of late, it's still a sector you want to pay attention to that's definitely in the contribution camp. As far as rates, 156 down 1. Let's look at what's going on 24-hour chart. You can see we're hugging the 150s, and if you put a 2-day face on it, you could really see what the score is in Treasury yields. We've lost some mojo, to be sure, so have equities to some extent.
CCL 25 calls.
The last day of March's
April
closing
30th,
yield of 174 is going to remain the high
500
closing yield
contracts.
for a while, and it certainly seems that way on the charts. If you go to a a month-to-date chart, this is very important because the month of April hasn't been kind to interest rates, hasn't been kind to the dollar index. We're down 18 basis points from that high close at the end of the month, which is 174, as I mentioned. So that's down 10%. I hate using percentages on yields, but I do want to show how aggressive the move has
M16
been, even though
calls.
it's been very
April
orderly.
23rd,
Now, if we switch
2021.
gears a second and go to the
500
foreign exchange
contracts.
markets, the dollar hasn't had a very
M16
good
calls.
time. Basically, yesterday
April
it closed at a
23rd,
6.5-week
2021.
low, as you see on this chart starting at the end of
509
February.
contracts.
But what we really want to
INTC.
pay attention to is how
56
much
puts.
staying power the European
May
currency,
21st,
the euro, has,
2021.
as of course they're trying to wrap their arms around
1,650
COVID,
contracts.
and their interest rates, of course, are much closer to ours than they were at the beginning of the year. Carl, Jim, and David, back to you.
All right, thanks very much, Rick Santelli. Still to come this morning, Morgan Brennan's exclusive with the new Lockheed CEO, Jim Taiclet.
Plug.
It's his first broadcast interview since
25
taking
calls.
the top job at
April
the company. In the
23rd,
meantime,
2021.
small bounce here at the open. Dow goes green, trying to
4,191
avoid the first
contracts.
3-day loss since the early part of March. We're back in a moment.
VIAC. 45 calls. May 21st, 2021. 694 contracts. KO. 54 calls. April 23rd, 2021. 1,700 SDC. 11 calls. May 21st, 2021. 500 contracts. Mile. 10 calls. May 21st, 2021. 553 contracts. AMZN. 3,400 calls. April 23rd,
Getting some breaking news from the
2021.
FDA this morning and its inspection of emergent
NFLX.
biosolutions. Let's get to our Meg Terrell. Morning,
505
Meg.
puts. April 23rd, 2021.
It's completed that
100
inspection of the
FB.
emergent biosolutions
305
plant in Baltimore
calls.
that's making the J&J COVID
April
vaccine. And
30th,
it's issued
2021.
what's known as a Form 483,
580
which is essentially
TME.
a serious list
27
of
calls.
discrepancies at
January
a plant that the
21st,
FDA requires it to fix
2022.
before it'll allow the plant to
500
start
FB.
making material again,
305
and before it'll
calls.
be comfortable releasing
April
any material
30th,
from that
2021.
plant. Now, this, of course, is the plant that
1,300
we know
SOS.
had lost a batch of up to
15
15
calls.
million doses of the J&J
August 20th,
vaccine
2021.
because of what seemed to be
3,800
cross-contamination with
contracts.
the AstraZeneca vaccine, which was also being made on that location. Now, after that, the AstraZeneca vaccine was moved to another location. We don't know where
SLB.
yet. They are only making the
32
J&J
calls.
vaccine. But with
August
this inspection,
20th,
the production there at the
2021.
J&J vaccine is
9,000
still stopped
contracts.
until they address
SLB.
the issues that the FDA
32
lays out in this
calls.
letter. And there are at
August
least 9
20th,
of them
2021.
here. One of them, the first
10,000
one, that the FDA
AMRS.
essentially says the cross-contamination
22 calls.
hasn't been thoroughly
June 18th,
investigated. There are other issues they
2021.
lay out, like the building
500
isn't
contracts.
maintained in a
Aisle.
clean and sanitary
2 calls.
way.
May
It's not a
21st,
suitable size.
2021.
There are
859
components that weren't
Uber.
stored properly.
58
so
calls.
a lot of these things that
April
Emergent here will
23rd,
need to address, and Johnson
2021.
& Johnson as well, as it's now
500
taking control of this
contracts.
facility and the
FB.
manufacturing of its vaccine.
305
this, of course,
calls.
guys, is key
April
to
30th,
J&J being able to
2021.
make the vaccine here in the
2,000
United
Uber.
States, getting this plant
58
fixed.
calls.
So more news
April
on Emergent
23rd,
Biosolutions. There's an
2021.
investigation going on into the company as well from the
760
congressional
FB.
level, so it will be a story we'll
305
continue
calls.
to follow, guys, as we
April
also
30th,
follow the pause of the
2021.
J&J vaccine. Guys.
2009
First,
AMRS.
can Robert Kramer
22 calls.
possibly
June
survive
18th,
this? The
2021.
CEO. Second,
518
J&J,
contracts.
they must have had, what, no facilities to make vaccines in this country? Because the choice of this company is very un-J&J-like, given what we're hearing.
Yeah, Jim, you bring up a point that I've heard from other folks as well. You know, the fact that J&J used a contract manufacturer on this vaccine. You know, Emergent Biosolutions essentially exists because of emergencies like the one we're in right now with the pandemic. It is supposed to be a place that can ramp up
April
production quickly
23rd,
of vaccines
2021.
in a pandemic-like situation.
2,791
there are
contracts.
a lot of issues at this facility, and it is pausing the production of this vaccine. And J&J is bringing Merck on board as well to help it manufacture, but this is going to take months for Merck to be able to get everything up and running, guys.
Very good.
Meg, we'll watch that with your help. Thank you, our Meg Terrell. Keep an eye on the markets this morning. Dow getting a nice little gain led by some industrials. Not so much on the travel or financial front. Disney currently the worst performing component. We're back in just a moment.
AAL. 22 calls. April 23rd, 2021. 1,300 AAL. 22 calls. April 23rd, 2021. 1,462 contracts. AMD. 86 calls. April 30th, 2021. 557, Lee 21 calls. April 30th, 2021. 759 contracts. Plug. 26 calls. April 23rd, 2021. 593 contracts.
Let's get a Wednesday edition of Stop Trading with Jim.
Yes, there's a big transition going on. Craig Smith stepping away. He's the CFO.
CLF 16 calls.
Boeing. He's
April
going to be there for a
30th,
little bit.
2021.
But CFO
500
who
contracts.
was an operational
BA.
CFO, Greg, which is
235
very highly unusual.
calls.
He will be replaced
April
by more of a
23rd,
strict
2021.
CFO. The thing that Greg is known for,
251
besides just having a
contracts.
tremendous grip on things, is he did say, listen, we don't need to sell equity. Maybe a traditional CFO would be more willing to sell equity, but that's why the stock went down 10 yesterday. And I think that Mr. Calhoun is very sensitive to the idea that if he does that, it will crater the stock. So I remain in the camp that you can own Boeing.
Yeah, they made a couple of comments. No dividend reinstatement in the near term, and positive cash flow in the medium term. Jim, we'll see what happens.
SNDL.
So you got
2 calls.
Yeah.
July 16th,
You got a big show tonight.
2021.
Yeah, we got 3 companies that are all blew out
1,000
numbers.
contracts.
Which is, of course, coatings, not glass anymore, the PPG coatings. Qualtrics, which is a company that really can figure out what you need to do and buy. I really like these guys. And then Marvell, which is one of those companies that is at the center of everything, high-performance computing, cloud, and 5G. And they are doing so well. It's incredible. They just closed a deal with Inphi that the Chinese were willing to let them do because there's no overlap. This show is going to be the state of the world, Carl, and I'm very excited about it.
Interesting. I know Xi Jinping is going to attend that U.S.-led climate change summit on Thursday. First big meeting between.
That was an olive leaf. I thought that was an olive brand, maybe an olive. I mean, I got an olive.
Yeah.
I manufacture olive oil. I'm just an olive. Lisa's none better.
It's some olive
I'll
oil.
bring it into everybody.
Still waiting for mine.
Oh.
Still waiting for my olive oil.
I have Lisa's none better coming right at you.
Yep.
We'll see you tonight, Jim, 6 p.m. Modest gains here. Dow's up 114.
COMM 17 calls. May 21st, 2021. 757 NCLH. 30 calls. April 30th, 2021. 1,500 SOS. 4 calls. April 23rd, 2021. 1,250 contracts. TSLA. 710 calls. April 23, 2021. 142 contracts. Baba. 200 puts. September 17, 2021. 300 contracts. AAPL. 135 calls. April 23, 2021.
Good Wednesday morning. Welcome to another hour of Squawk on the Street. I'm Carl Quintanilla with David Faber and Morgan Brennan.
May 21st,
Dow's up 100 plus, S&P up about 11, trying to avoid the first
591
three-day
contracts.
loss since the early part of March. So far, doing okay in that department. NASDAQ's going green as well, up 12.
All right, well, in just a few minutes, we'll hear from my exclusive interview with Lockheed Martin CEO Jim Taiclet in his first TV interview since taking the job. But first, we're 30 minutes into the trading session. Here are the three big movers we are watching, starting with Verizon, beating on both the top and bottom lines. The company did, however, lose more wireless subscribers during the quarter than the street had been anticipating. Shares are down slightly right now. Plus, we continue to watch the rails, with CSX seeing its Q1 profit dip about 8% thanks to pandemic-related disruptions and higher fuel costs. But the Eastern Railroad does expect revenue to grow double digits this year, with volume growth outpacing
17
GDP.
calls.
Shares are up about
April
2.5% right now. Lastly, the biggest mover of them all this morning, Netflix. Shares sliding following its big subscriber miss and what's expected to now
May
be
21st,
an even weaker subscriber growth for this quarter as well.
1,580 contracts.
That's where we're going to pick it up, Morgan. Beating estimates on the top and the bottom line. But as Morgan said, sub-growth slowing due to, quote, the big pull forward of COVID-19 in 2020 and lighter content slated for the first half of the year. With us this morning, former Hulu and YouTube Director of Content Partnerships, Heather Musnick, now CEO at Musnick Media Consulting Group, and Will Power, Senior Research Analyst at Baird. Morning, guys. Good to see you both.
Good morning, Carl.
Will, part of the consensus line of thought this morning is that we knew there was a pull forward. We knew there'd be a quarter in which that was evident, and that the pullback, according to at least some on the street today, is that would bring an opportunity to buy. Are you in that camp?
We are firmly in that camp. We think there's still a lot of runway ahead. And look, you got to keep in mind, this is a business with 200 million, plus subscribers. And so whether you add 4 million or 6 million in a given quarter really doesn't move the needle all that much. And I think, a couple of areas, Carl, where we take a lot of comfort is the fact that engagement, according to the company, is still up year over year. And that
April
speaks to the long-term
23rd,
opportunity,
2021.
pricing power of the model.
1,000 contracts.
The churn remains
LAZR.
fairly low and lower than I
20
think folks
calls.
would have expected probably
June 18th,
coming out of the
2021.
pandemic. And so,
1,200
as we look at the long-term opportunities, the penetration
18
upside,
calls.
we do like
April
this as a buying
23rd,
opportunity.
2021. 500
Heather,
contracts.
I wonder how you think of the name now that we're in this new environment, and Reed himself said it's a little wobbly right now, where it's really going to depend on the slate,
IAC.
and budgets are going to count,
37
and what
puts.
Disney does is going to count.
April
It's not having the
23rd,
sandbox to yourself
2021.
like they used to.
500 conch
Absolutely. I
BB.
think in many
8
ways,
calls.
this Q1 story
April
is a story
23rd,
of major Hollywood
2021.
studios winning the battle.
1,000
It remains to be
contracts.
seen if they're going to win the
LAZR.
war. Now, I
23
agree that
calls.
there's a huge amount of
May
headroom still
21st,
for Netflix and
2021.
the other streamers as well.
2,000
With
contracts.
200 million subscribers worldwide, they're really going after the linear TV space, right? So there are nearly 800 million TV subscribers worldwide outside of China. And that leaves a lot of headroom still for them. But in Q1, we're seeing some really interesting trends happening with the Hollywood studios
May
launching their
21st,
services.
2021.
Disney Plus reaching over
2,000
100
contracts.
million subs.
BB.
And
8 calls.
over 95%
April 30th,
of the new subscribers in
2021.
the US to video
900
streaming
contracts.
services were not Netflix
BB.
in Q1. So
8 calls.
that speaks to the rise
April
of these
30th,
Hollywood direct-to-consumer
2021.
services.
Yeah, and yet, Heather, they
625
said during the call they
contracts.
don't believe
Not.
competitive intensity
12
materially
calls.
changed in the quarter or
May
was a material
21st,
factor in the
2021.
variance as the
500
overforecast was
contracts.
across all of our regions. Does that make sense to you?
No, I think they're soft pedaling. I think that this is really the beginning of what they
TME.
knew was coming for years.
17
Disney
calls.
pulled out of their film deal
April
with Netflix
23rd,
2 years ago to launch Disney
2021.
Plus. Smartly, Netflix did just sign a deal with Sony Pictures, so that's going to
185
help
calls.
them over the
April
next 5
23rd,
years. Questioning whether or
2021.
not they should have just bought them.
Spy.
But you know, I do think that
419
there are
calls.
headwinds here on the
May
competitive
5th,
side that
2021.
Netflix really has to face.
558
Well,
APL.
so what does that mean for the top of the funnel? I mean, we know churn
125 puts.
continues to be low, so
April
current subscribers
30th,
seem happy with the
2021.
level of content. Heather, but
507
what does it mean for new
contracts.
subscribers then, and given these competitive, the competitive landscape that you're describing?
Subscribers are really going to have to choose how many services they want to subscribe to. Now, we've seen an expansion of that in COVID. So now subscribers, on average, the household has over 4 services in the video streaming space. So there is an increased appetite, especially as they start to cut the cord and save on their
18
cable
calls.
bills, to
April
subscribe to
23rd,
streaming services.
2021.
But there is going to be a reckoning over time and sort of a
GOGL.
right sizing. And I think we're going to
7
start
calls.
to see Netflix's
May
churn
21st,
rates start to stumble a little
2021.
bit. And we're even seeing some signs of that now.
776
Well, I mean, given the
contracts.
fact that we now have so much more competition across the streaming landscape in general, I mean, content continues to be more and more important. Everyone seems to be spending more and more on content. I mean, Netflix is up against our parent company, Comcast, and Disney, for example, that have other sources of revenue to help arguably subsidize that content. How does Netflix navigate that? Is it going to have to find other ways to generate money?
TME.
Well, look, there's no
17
question
calls.
it's more competitive
April
out there.
23rd,
No real
2021.
surprise on that front. And I think,
907
Heather's spot on,
GM
though,
63
that
calls.
The principal opportunity
May
is still to take
14th,
share, from linear.
2021.
We think there's still room for multiple
1,089
winners. And I
contracts.
think at the top of that is
BAC.
going to be Netflix. We're going to have
44
Disney
calls.
Plus, and you're going to have some combination
August
of
20th,
HBO and others.
2021.
But as you look at the breadth of content,
573
technology
contracts.
they bring to bear, the analytics they have, we think Netflix is still really well positioned. And remember, they're still very early in terms of pushing localized
SKLZ.
content, right? So you look at
15
Europe as
calls.
an example.
April
the US today
23rd,
has almost
2021.
50% broadband.
306
Netflix has 50%
SKLZ.
penetration of broadband households.
15 calls.
You know, in Europe, that number's closer
April
to 20%.
23rd,
And it just kind of speaks to
2021.
the opportunity as they roll out more
350
localized
SKX.
content, not only in Europe, but
45
particularly in Asia
puts.
Pac and other regions. of
April
the world. So we think
23rd,
there are still
2021.
nice growth opportunities.
500 contracts.
And I think that
AMZN.
question that on additional growth opportunities, sure, I think over
3,350
time
calls.
they could look to edge out, right? As they
April
look at more interactive
23rd,
programming,
2021.
lead them down a path towards more gaming
AAPL.
opportunities as well.
140
Heather, it
calls.
sounds like you have thoughts on this as well.
June 18th,
Yeah,
2021.
I completely agree. I
500
think
and
that you know, they're
IYR.
just getting started with
100
gaming and
calls.
merchandising.
May
and
21st,
so, you know,
2021.
That is some untapped opportunity. But you really have to have globally, universally
125
popular
puts.
IP to go
June
all
18th,
out the way that your parent company
2021.
Comcast or Disney has done with theme
614
parks and
contracts.
with merchandising. So I think, you know, Netflix is going to have to really invest in some broader reaching IP if they want to dig deeper into other revenue sources outside of streaming.
Will, before we let you go, I want to get your take on what Apple told us yesterday. Remarkable how much the M1 chip was sort of the star of the show in these new products. I just wonder what you thought of yesterday and what you're looking for going into the quarter.
Yeah, look, I thought it was a great overall event. I mean, it's one of the rare events where I think they hit all of the widely expected ideas or possibilities along with some of the, you know, nice to haves. I mean, I think high
AAPL.
expectations, for the new Mac,
125
iPad Pro,
puts.
etc.
April
But, great
30th,
to see
2021.
AirTag finally unveiled. I mean, as you all know, I'm sure
682
that's been much
contracts.
rumored for several years. And that opens up a whole other product category for them, right? And just kind of feeds into this broader ecosystem opportunity, which again, is driven by the fact they have 1 billion iPhones, globally, right? So how many of those are going to buy AirTags? You can build a significant business very
GOGL.
quickly.
12
and candidly,
calls.
Carl, yeah, just having a new
December
Apple TV remote,
17th,
right?
2021.
I think could, be a positive for them.
560
So I thought
contracts.
across the board look positive. We have high expectations going into next quarter. I mean, we have most of the segments growing close to 20% for a business its size. I think that's still pretty phenomenal. So we still like the overall setup there. And at the end of the day, we think this is a core work from anywhere beneficiary.
SRAC.
We've seen that. We expect that to
15
continue
calls.
to resonate in numbers next couple
August
of years.
20th, 2021.
And Heather, I want to throw one to you as well,
550
mostly because
SRAC.
of what they said about
15
content
calls.
and specifically
August
the
20th,
podcast subscription business. I
2021.
wonder if you think their
600
content delivery is
contracts.
getting a little more sophisticated now.
Yeah, absolutely. I think another big trend in 2020 and into 21 is really the growth
MBIS.
of audio only as
35
a
calls.
core entertainment experience.
August 20th,
and I think that
2021.
Apple is leading the path there
500
along with Amazon
SRAC.
and what they're doing
15
in Audible.
calls.
So I think it's going to
August
be a
20th,
really interesting space to
2021.
watch, and it's giving rise to
544
new
contracts.
TV shows and spin-offs and opportunities to create even more content. So, as consumers become fans in audio
DDOG.
only, we are seeing
90 calls.
some great
April
new
23rd,
revenue opportunities in
2021.
the content development space. coming from
300
there.
contracts.
Guys, great overview of both Netflix and Apple today. Appreciate it, Heather. We'll talk to you later.
Thanks for having me.
As we head to a quick break, here's a look at our roadmap for the rest of the hour, starting with another SPAC on the street as NFL data rights owner Genius Sports closes its $1 billion SPAC merger.
Plus, it's a busy week for NASA. We're going to talk with the acting administrator ahead of another big SpaceX launch on Friday.
And it's his first TV interview since taking the job last June. Do not miss my exclusive with Lockheed Martin Chairman and CEO Jim Taiclet.
At the end of the day, we may not have the numbers of a China or a Russia, but if we can manage and integrate our systems better through a network-centric approach, I think we can
DDOG.
maintain our deterrence
90
and maintain our
calls.
operational capability
April
as well.
23rd,
so I think it is a
2021.
new era of competition where we're going to have to bring the best
267
of
contracts.
U.S. technology, both in the defense industrial base, Morgan, and beyond it in telecom and tech industry, and we're really striving to do that here at Lockheed Martin, is bring some of those partners in and work with us.
Riot. 37 calls. April 23rd, 2021. 199 contracts. Lee 17 puts. May 21st, 2021. 2,100 contracts. Nah. 15 calls. July 16th, 2021. 778 contracts.
Welcome back. Check out shares of Lockheed Martin. Those are slightly higher this morning after the world's largest weapons maker reported earnings yesterday and upped its full-year guidance. I spoke with Lockheed Martin CEO and Chairman Jim Taiclet in his first broadcast interview since taking the helm last summer.
The big drivers of the performance are, the F-35 program, for example. We're going to be growing sustainment, stable and growing a little bit in production. And also, we're continuing to do development programs to increase the capabilities of the aircraft in conjunction with our customers. So that's a strong driver. We're having really good success at Sikorsky, ramping up production of helicopters as well. And across all of our business lines, including space, we're winning programs across the board, and we're going to be putting those into development and production as well.
All right, let's talk about defense budgets. It's something that investors continue to be so keyed into right now, at least from a stock perspective. I mean, the Biden administration's position on defense certainly starts to be materializing. Now that we just got that skinny budget
500
proposal.
contracts. Ms. 81
you and I have
calls.
talked about this before, and I
May
think your expectations
21st,
before were that we were
2021.
basically going to see a potentially a flattening out of the budget.
1,632 MLCO.
How do you see it now,
19
and
calls.
how do you find ways to grow and
July
continue to add value?
16th, 2021.
So for FY22, the proposal
MLCO.
for the top line Defense
19
Department's
calls.
actually a little bit up, about
July
1.6%
16th,
higher,
2021.
which is encouraging for the industry, but also
552
it's
contracts.
reflective of a recognition, I think, by the government that, we're in a renewed era of great power competition.
IQ.
Companies and
12
countries
puts.
rather like China
June
and
18th,
Russia
2021.
continue to build their military capabilities.
1,051 contracts.
They are acting as
Riot.
if they wish to expand
45
their,
calls.
degrees of
April
freedom
23rd,
and their
2021.
realm of power.
784
and that would be
contracts.
contrary to the national security interests of the United States. And I think the administration realized that this is a growing problem rather than a shrinking one. So as a result, the defense budget should stay stable and perhaps growing slightly as we now see it going forward.
Yeah, how is the threat environment changing, if at all? I mean, how do you see
May
those missions
21st,
changing, I guess, over the
2021.
longer term?
2,000 contracts.
Well, I think over the
MLCO.
longer term,
19
we're going to
calls.
have to face,
July
especially
16th,
in respect to China,
2021.
a country
800
that
contracts.
has a strong production capability. They'll be building ships and aircraft and other military equipment and forces, just as Russia will do. And they're not just doing it in low-tech spaces. They're doing it in high-tech spaces like hypersonics, space, weaponry, and cyber capabilities that could be really disruptive to us. And that drives us at Lockheed Martin to trying to create a higher deterrence through a network-centric architecture where we can tie the systems we have together. And at the end of the day, we may not have the numbers of a China or a Russia, but if we can manage and integrate our systems better through a network-centric approach, I think we can maintain our deterrence and maintain our operational capability as well. So I think it is a new era of competition where we're going to have to bring the best of U.S. technology, both in the defense industrial base, Morgan, and beyond it in telecom and tech industry, and we're really striving to do that here at Lockheed Martin.
21
bring some of
puts.
those partners in and
April
work with us.
23rd,
Yeah, and certainly you have
2021.
laid out this vision for a 21st century
630
warfighter. Your background,
27
is
calls.
in telecom. You've
April
laid
23rd,
out a
2021.
strategy around 5G.
506
What
IQ.
specifically does that look
12
like?
puts.
Is it Lockheed building
June
out
18th,
5G infrastructure? Is it something
2021.
else?
946
It's not necessarily
contracts.
building out traditional commercial 5G infrastructure, but it's using the technical capabilities and advantages of 5G waveforms and other technologies like distributed computing, artificial intelligence, to really weave together our defense systems in a way that makes them much more capable. So we're really talking about our defense system versus necessarily building a broad network for phones and other things to connect to.
I wonder what that means in terms of partnerships with Silicon Valley, with tech, with
Plug.
other industries.
27 calls.
Well, we're actually pursuing them
April
pretty aggressively
23rd,
right now. So when it comes to,
2021.
say, distributed computing,
500 contracts.
there are a number of firms that do very well at that. Distributed cloud computing firms that you would recognize. We're talking to some of those. When it comes to 5G, a couple of the largest telecoms in the United States, we're working with them on how to actually apply our security and crypto and cyber capabilities, their technologies, and to make a more resilient 5G communication system.
Has the Defense Department or the federal government in general expressed interest and talked to you about it?
Well, they absolutely have. In fact, the Joint Chiefs of Staff have a concept now they call joint warfare concept. And when I speak to the leadership there about the technologies we're investing in, the ones I just listed, literally it's the same exact list inside the Defense Department now at the highest levels on how do they incorporate with us, with industry, those kind of technologies in a much more accelerated fashion because they feel, again, that they have to take the initiative as well. So I think this is a great match between government, uniformed military, and industry here. And because of the position on platforms of Lockheed Martin, whether it's the F-35, Aegis shipboard systems, we've got space assets already up and flying, and we work with the Army as well. So we're cutting across all of the what's called domains, air, sea, space, undersea, and aerospace. To be able to tie all these things together. So I think our platform position gives us a leadership opportunity here, Morgan, and that's what we're really running after.
I'm curious what you think, and I realize Lockheed is sort of in the lead in many ways. It's still a small part of the portfolio. I think, $3 billion in orders so far, but expected to be a big future initiative is hypersonics. What do you envision that growth trajectory looking like?
We think it's going to be significant, and frankly, in offensive and defensive mode, because as I mentioned earlier, China and Russia are also developing hypersonic weapons, and we need to defend against those. So when it comes to offense and defense, hypersonics imply speed. That means not only does the vehicle have to go faster, it generates a lot of heat. That heat needs thermal management, and also the calculations to actually operate those systems, and the computing power that you need is even greater, especially if you're trying to intercept them.
Contracts.
And so we're going to need to integrate as much as we can into our engineering and operational capabilities to create the best possible hypersonic offensive and defensive products to add to our national defense.
Yeah, and just to shift gears a little bit before we wrap this up, I spoke to your CFO as well. And one of the questions I asked him, I'm going to put to you right now, too, and that is some of the changes or proposed changes to the corporate tax structure. How are you thinking about that at Lockheed, and how could that, I realize there's a lot of moving pieces and a lot of uncertainty still, but how could that affect the company?
Well, tax policy will certainly affect our company in a couple ways. The corporate tax rate, if it increases, will reduce all companies' cash flows and our abilities to invest back into the economy and create jobs. But specifically, there's a holdover issue from the 2017 tax bill that probably ought to get remedied because it actually makes it more difficult and costly to do independent or even contracted research and development. So I think if the tax policymakers have an eye on those two issues, and they're going to do what they need to do to conduct and create a fair tax policy for all of us. But in the process, we really hope that there aren't disincentives to investment and disincentives to research and development as well that come out of that. But we'll see where Congress goes and where the administration takes
May
it.
21st,
Yeah, it was a wide-ranging interview. That's a big chunk of it. We also discussed the F-35 Strike Fighter program, which is under scrutiny with a new administration in place. Lockheed gleans more than a quarter of overall revenue from F-35. Overruns do continue to crop up. A key cockpit electronics upgrade is in the news today, for example. But I did ask him what the company is doing to bring operating costs down, since the fighter is expensive to fly. And analysts do believe that that actually poses the greatest risk potentially to future production volumes. Takelet telling me they're working directly with the Joint Program Officer that manages the program for the government, also with foreign customers. And that Lockheed is actually also getting more involved with the military services directly to collaborate on bringing some of those numbers down. David, the other piece of the puzzle, of course, is Aerojet Rocketdyne, that $4.4 billion acquisition that's pending right now and undergoing regulatory review. When you talk about things like space, you're talking about hypersonics, Aerojet fits into that. I think it's pretty safe to say that Lockheed remains somewhat acquisitive, but also they're thinking about partnerships and all kinds of other ways to basically continue to grow this portfolio for what Takelet calls the 21st century warfighter in what is, at least according to analysts, expected to be a flattening defense budget in which we're looking as a country to potentially do more, especially on the tech side, with less or really the same amount of dollars.
Yeah. And again, back to the F-35, though, which I know is so important to them. I mean, any expectations there in terms of where that ends up? He seems, I guess, somewhat positive in terms of their ability to actually become more efficient, both making them and servicing them.
Yeah. So, I mean, I think a key thing is that when you talk about the pandemic and the pandemic impact on the industry more broadly, F-35 was one of those programs, especially for Lockheed, that saw some impact because it is a global program, a global supply chain. Nonetheless, they do continue to bring the costs of manufacturing and production down. Sustainment is very much in focus now. The operating costs are in focus, and based on all the conversations I've had, especially in recent weeks following this story, because the new administration does mean new scrutiny, the expectation is that all of these costs are going to continue to come down. We'll continue to see how it plays out. The other thing I would just note, unrelated to this, 114,000 workers for Lockheed Martin. Half of them were continuing to go in as essential workers, given national security in the middle of the pandemic, to factory floors over the past year. But the other half have been working remotely. And and I know you're following this as closely as I am, they are looking at and basically adopting a more
May
hybrid
21st,
model for
2021.
those employees, including offering some of those employees
contracts.
that have been working remotely the chance to work longer hours over a 4-day work week rather than a 5-day work week.
Interesting.
So
interesting.
Yeah.
Yeah, it does go to that new sense of flexibility that employers are going to have to offer given the last year.
Yeah. All right. Carl.
All right, guys, keep your eye on Canopy Growth this morning. Companies announcing a deal with wine and spirits distributor Southern Glazers, make it the
CNR.
distribution partner for Canopy
17
CBD-infused beverages.
May
Stocks moving a bit
21st,
higher on that news.
2021.
More Squawk on the Street continues.
1009 Vale. 21 calls. May 21st, 2021. 514 C72 calls. May 21st, 2021. 500 contracts. NFLX. 510 calls. April 23, 2021. 100 AAPL. 132 calls. April 23, 2021. 500 contracts. C72 calls. June 18, 2021. 735 contracts. C72 calls. June 18, 2021. 5,092 contracts. CRWD. 212 calls. April 23, 2021. 150 contracts. ARKK. 118 calls. May 7, 2021. 729 contracts. PRTY. 7 calls. January 21, 2022. 675 contracts.
We told you earlier in the morning stocks were going to try to avoid the first 3-day loss since early March, and all three indices have now moved into the green. S&P 4150, and you can see the Dow back above 34K. Also a bit of a move in yields here as the Bank of Canada becomes the first major central bank to trim the pace of QE, something we're going to watch as other central bank meetings happen in the next few weeks. Our ETF spotlight, taking a look at the healthcare sector, ticker
135
XLV hitting
May
a new intraday
21st,
all-time high today.
2021.
One name of the group is Anthem, posting an earnings beat.
778
Bit of a revenue
contracts.
miss. Company raises the full-year guide amid growth in the various medical plans and higher pharmacy benefit management revenue. Stock did hit a record intraday high yesterday.
Well, coming up, we've got another SPAC on the street with NFL data owner Genius Sports making its market debut. We're back in 2 minutes.
ASXC 10 calls. January 21st, 2022. 700 contracts. Retta. 110 calls. May 21st, 2021. 909 MDLZ. 60 calls. May 21st, 2021. 5007 GDX. 37 puts. May 14th, 2021. 500 contracts.
Welcome back. I'm Rahel Solomon, and here is your CNBC COVID update at this hour. And India crematoriums are struggling to handle the country's increasing COVID death toll. Less than 2 months ago, India was recording fewer than 100 deaths each
F11
day.
puts.
Today, it's reporting
April
2,000
23rd,
deaths and almost
2021.
300,000 new cases.
1,973 contracts.
The lower house of Germany's parliament has approved what's being called emergency brake legislation that standardizes restrictions in areas where COVID is spreading. It now goes to the upper house. Reuters reports that amid blood clot concerns, the EU will not exercise options for an extra 300 million doses of vaccines from Johnson & Johnson and AstraZeneca. It is not, however, ruling out future contracts with the companies. And production at an emergent biosolutions plant will remain paused. That's as it corrects problems detailed in a recently concluded FDA inspection that was made public this morning. Millions of J&J vaccine doses had to be destroyed due to an error at that facility. You're now up to date. I'll send it back to you, David.
Thank you, Rahel. Well, NFL data rights owner Genius Sports officially going
The
public
IDU.
this morning, in a sense.
240
This is after it
calls.
completed its SPAC
May
merger with DMY
21st,
Technology.
2021.
Joining us first
650
on CNBC is Mark Locke,
contracts.
Genius Sports co-founder and CEO. Mark, good to have you. Congrats on de-SPACing, as we call it, I guess. You know, back in
CNR.
October
17
27th,
calls.
when the deal was
May
announced,
21st,
you put out your
2021.
projections, and I just wonder, are you still
1,091
expecting
contracts.
roughly $238 million in revenues in 2022 and $68 million in group-adjusted EBITDA?
MDLZ.
Yeah, so we
60
reaffirmed
calls.
our
June
our
18th,
forecast in the
2021.
last, information
624
we put out. And,
contracts.
the business is performing very well. It's performing as expected, and we're incredibly excited about, completing the merger, completing the
WB.
transaction, going live on the New York
56
Stock
calls.
Exchange, and all the opportunity that
May
that really brings to the
21st,
business.
2021.
Well, what opportunity does that bring to the business?
1,400 contracts.
So, I've said it before. The reason that we wanted to go public, the reason we wanted to trade on the New York Stock Exchange was to give us access to paper and access to
130
currency
puts.
that really allows
April
us to sort of
23rd,
supercharge our
2021.
growth. We think of growth
500
in two
WB.
parts. There's a lot of organic opportunity,
56 calls.
increasing our technology
May 21st,
stack that
2021.
we have, driving fan engagement, really
1005
helping these sports
T29
leagues
puts.
access revenue
June
opportunities
18th,
in the face of some
2021.
really quite difficult
594
conversations around
contracts.
broadcast revenues.
WB.
And the other area we really think about is
48
through
calls.
inorganic growth. So
May
acquisitions. There are
21st,
lots of smart, interesting
2021.
technology companies that really complement what we do and
1,405
can really help
contracts.
our partners drive that growth and really access the future markets and the future areas of technology-driven solutions that they need to be thinking about.
Yeah, for people who may be watching, sort of focusing on your company for the first time, I'm looking at what you sort of had as a comparable company benchmarking. I mean, you have names like TradeWeb and S&P Global, obviously, which are in information and data analytics. You've got online gaming and DraftKings. Kind of where do you see your company fitting in?
So what we do as a business is we work with sports leagues and federations on a global basis, like the NFL, and we provide them with technology in exchange for the right to collect and monetize that data. So once we've got that data, we provide that wrapped in software to sports books effectively for outsourced bookmaking, but also into media companies as well. So the revenue model we operate is really a mixture. We take a proportion of what's known as gross gaming revenue or net gaming revenue from the sports books. So effectively, we participate in the growth of the sports betting market. It's almost like the rising tide lifts all boats. We're part of that entire ecosystem and that entire infrastructure. But on top of that, our revenue model also provides us software as a services type revenue model for other things that we provide around the data sector.
Mark, it's Morgan. I want to get your thoughts on what we're seeing play out in Europe right now where soccer is concerned. I realize that Genius partners with the Premier League.
VIPs.
Obviously, we just saw this
27 calls.
Super League
April
kind
30th,
of come and essentially go in recent
4,000
days.
contracts.
And while that might be the case, it does kind of shine a light on the economics and the business models and whether they've worked or not, where soccer, at least European soccer, is concerned. How are you thinking about it? What does that mean in terms of your business?
Sure. I mean, look, there's been conversations around the Super League since, I don't know, the 90s. And I think, while COVID's exacerbated the problems, I mean, what this is really doing is exactly, as you say, bringing into focus the issues around how sport is funded. I mean, there's a lot of change, a lot of dynamic situations going on at the moment with, some of the future broadcast revenues, how it's going to work. And in Europe, the way that the sports leagues operate is slightly different to the States. And it really has sort of brought into focus and really made people think about how revenue is going to be driven in the future. From our point of view, we see it as an opportunity. We're a technology company. We partner with sport leagues, and our Raising Depth, what we do is really help those sports leagues access that revenue pools. We do it in the sports betting sector, we do it in the media sector, we do it in the streaming sector. We allow those sports leagues to really maximize the revenue potential that they can have from their product, which is obviously putting on sporting events.
Yeah, all of which may make sense for why David Levy joined you as chairman. I know him when he was, of course, president at Turner. What are your expectations there for what he's going to be able to accomplish for the company?
Yeah, we're incredibly excited to have David join us. He's got a wealth of experience in the media sector. And really, when we think about the market, we think about convergence. As I said, the broadcast market is undergoing dynamic change. There's a drive for new types of fan engagement, new types of products to be provided to those fans. And really this convergence between the technology space, the sports betting space, and really the space that David comes from, which is
May
the traditional media
21st,
space,
2021.
is something that provides a
642
huge opportunity. So having David on
BAC.
board, having his
38
guidance
calls.
and his mentoring
April
around
23rd,
that sector will allow us
2021.
to position ourselves in the best way possible to take
694
advantage of the
contracts.
opportunities that this dynamic change that's going on in the broadcast market is bringing.
And finally, Mark, you went public through the SPAC process, as so many others have. It's come under a bit more scrutiny of late. What is your take? You glad you went that route as opposed to perhaps a more traditional way of going public?
Oh, I'm absolutely delighted. It was absolutely the right decision for us. And I've said before that SPACs are suited to specific types of businesses with specific types of growth profile. You've got to have, high growth. I mean, in COVID last year, we grew 26%, and again, we've got some strong growth forecast. So the SPAC process allowed us to move quickly. It allowed us to move into the open markets in a rapid way without really distracting the core business from its mission. Continuing to drive growth. So for us, the SPAC process
April
was
23rd, 2021.
All right, Mark, we'll be watching. Appreciate you taking time.
815 contracts.
Thank you so much. Thank you.
You're welcome.
Keep your eye on the cruise names today. Goldman upgrades Norwegian to buy from neutral. They cite several positive factors, including capacity
May
growth,
21st,
more flexibility, low
2021.
leverage compared to a lot of its peers.
1,159
Stocks up
contracts.
7%, one of the best S&Pers. We're back in a minute.
How big tech is making moves in e-commerce and posing a threat to traditional retail. Check out our conversation with Gene Munster on tradingnation.cnbc.com. More Squawk on the Street ahead.
FCX. 36 calls. May
While
21st,
the Federal Reserve believes supply
2021.
disruptions in global trade will be
1,000
temporary, the
LAZR.
situation's worsening,
19
and there's no
calls.
end in sight.
May
For at least what
21st,
appears to be several months. Steve
2021.
Gleason has more on what's a very important developing story,
1,387
Steve.
contracts.
Yeah, there's a macro and a micro part to this. Surging consumer demand in the U.S. and around the world. And
LAZR.
soaring prices for shipping containers
18
in the
calls.
months ahead. Raise
April
questions about just how
23rd,
temporary global
2021.
supply disruptions and the attached price
632
hikes will be.
contracts.
Mark Ciccone, he's executive editor at the Journal of Commerce, tells me the volumes have been getting so strong, it's like Christmas every month, and it's just going to get wackier. Good luck, he said, finding a container in May. The Port of Los Angeles has handled 800,000 TEUs. Those are 20-foot equivalent units. Those are containers, really, in 9 consecutive months through March. So 9 months in a row. That didn't happen during a single month in 2019. So the problem is not that the ports aren't working and have to be brought back up to speed. There are some COVID-related issues, but the real problem is the global supply chain is essentially overwhelmed. Bruce Kasman of JP Morgan points out that global trade volumes have actually surpassed the pre-pandemic level. He has his doubts that cost increases are going away anytime soon, telling me, quote, I think the bottleneck pressures are going to be significant enough to dominate. That will increase pricing powers for manufacturers broadly. A discussion on supply disruptions has now become a regular feature, as you guys know, in most company earnings and, by the way, in CNBC executive interviews. The price increases are already filtering down to the consumer level. If these issues linger, the only way to deal with them, of course, is building out ports and shipping capacity. That takes years, guys, so the problem could be around for longer than just being a temporary problem. Back to you.
Hey, Steve, really quick. I know on the 7th of this month, the National Retail Federation said that congestion at ports was abating as some of these new terminals adjusted to normal,
April
but that it still would
23rd,
probably go through
2021.
mid to late summer.
585 contracts.
Not really. I mean, what I've been reading, Carl, is that prices are still high, capacity is still difficult to find. In addition, that it is filtered to inland ports as well, like Chicago. So I'm not hearing that the problem is abating. I'm hearing that there are still major issues out there, and they're going to linger for a while.
I love that you just brought up TEUs on our air, Steve.
I knew you would love it, Morgan.
Intermodal. All right. Anyway, key thing for investors to watch, by the way. But there's the port piece of this. There's also the air piece of this, which I realize has more to do with some of those higher value, a lot of times more tech related, for example, products as well. I mean, when you don't see as many passenger planes making international flights, cargo sits in the belly of those planes, and I got to think that that's
April
part of
30th,
the problem as well. That some of those goods, I should say, are probably making their way onto ships and the like as well.
Well, that's right, Morgan.
RLJY.
I think in the first instance, depends upon the product and
September
what's promised and the
17th,
speed it's needed
2021.
with which it's needed. But when you end
1,000
up
contracts.
using that capacity when it's available in the belly of the planes, the commercial planes, the passenger planes, they're not there. They're not flying, so that's not there. And again, that price is being bid up as a premium as well. It doesn't. There's plenty of space for that in the ships because those are usually small items. But the point is that you can't, if you need to, necessarily turn to that quick response or quick solution to a problem.
422 calls.
Right. And Steve, you haven't
April
even mentioned the
28th,
global chip
2021.
shortage, which also
10,000
contributes
contracts.
just overall
Well, yeah.
to a lack of supply at this point in so many different. It's not just automobiles. We're talking a broad array of products at this point that are suffering.
You imagine, David, even 10 or 15 years ago, I think 15 years ago, somebody
JMIA.
saying auto production is
30
halted
calls.
because there's a chip shortage.
April
the chip
30th,
shortage, I think, is a
2021.
well-known and well-documented story.
2,485 contracts.
Is all this happening because, the cranes are idle, the workers aren't at the ports, or whether or not it's just a matter of we got to flip some switches on? But that's not the case. The switches are on, the cranes are working, the workers are at the ports, and they're working pretty hard right now. It's a matter of the volume being overwhelmed.
Steve, quickly becoming the major story to cover in any industry or company. We appreciate it. As always, that's our Steve Leisman. Watching the markets here, just off of session highs. Coming up on Tech Check, a big IPO to watch today with software company UiPath making its market debut on the NYSE. We'll talk to the CEO in the next
17
hour.
calls.
In the meantime, Squawk
April
on the Street
23rd,
is coming right back.
2021. 908 contracts. Jenny. 17 calls. July 16th, 2021. 1,900 AMD. 83 calls. May 21st, 2021. 723 CLF 20 calls. January 21st, 2022. 1,632 contracts. VTRS. 13 puts. May 21st, 2021. 1,100 FSR. 12 calls. April 23rd, 2021. 500 contracts. LYFT. 62 calls. April 23rd, 2021. 500 contracts. Ten. 85 calls. May 21st, 2021. 1,000 contracts. LVS.
Welcome back to Squawk on the Street. I'm
61
Dominic Chu.
calls.
Stocks are near their highs of the
April
session
30th,
right now with the S&P 500 up roughly 1/3 of 1%.
1,134
The communications services
contracts.
sector a notable laggard thanks in large part to that drop in Netflix shares. Now, on the other hand, the materials sector behind me here up 1.5% is closing in on a fresh record high of its own. Within that group, several of these specialty chemical products, industrial gases companies are leading the way higher, including Linde Group, also LyondellBasell, and Dow Inc., of course. Also keep an eye on construction material stocks like Martin Marietta, as well as paint coating supplier PP&G. So watch those particular shares, helping to drive Morgan some of that real strength near record highs for the materials sector. I'll send things back over to you.
Dom Chu, thank you. After the break, don't miss NASA's acting administrator, Steve Jurczyk, ahead of what's now Friday's SpaceX launch. We're back in 2 minutes.
NXPI. 215 calls. April 30th, 2021. 2,500 contracts. NXPI. 200 calls. May 21st, 2021. 901 contracts. NIO. 38 calls. April 23rd, 2021. 530 contracts. NA. 15 calls. July 16, 2021. 1,000 contracts. VIAC. 40 calls. April 23, 2021. 701 contracts.
Welcome back. NASA
INTC.
SpaceX Crew 2 mission is scheduled
66
to launch.
calls.
It was scheduled to launch
April
tomorrow
30th,
morning, just after 6 a.m. Eastern from the Kennedy Space Center. It's just been
670
pushed to Friday
contracts.
morning. Crew 2 will be the second operational commercial crew mission to the International Space Station. The Crew Dragon is scheduled to dock at the space station Saturday morning. Joining us now with more on this launch is NASA's acting administrator, Steve Jurczyk. Steve, thanks for being with us today.
Good morning, and thanks for having me.
All right, so why did the launch move to Friday?
Oh, yeah, the launch moved to Friday because of
132
poor weather,
puts.
downrange
April
over
23rd,
the flight
2021.
path as the Dragonfly,
511
Falcon
contracts.
fly over the Atlantic Ocean. And that's for crew escape. We need low winds and calm seas in case we need to do a crew escape so the crew can successfully land in the ocean and be recovered.
So this is the
ORCL.
third crewed mission by
77
SpaceX
calls.
for NASA in less than
April
a year. That's a big
23rd,
feat
2021.
unto itself. But there's still nothing
500
routine
contracts.
about this. You got the Falcon 9 rocket that already flew to space one time before with Crew 1 last fall. The Dragon capsule Endeavour carried the first astronauts for SpaceX in that demo flight last May. Why is NASA embracing reusability when it comes to these human missions, and how does that change the safety protocols?
Yeah, so, this is a different model for us. We're not purchasing, operating, and owning the systems, right? The spacecraft and the rocket. We're buying services. And so we tell SpaceX and the what and not necessarily the how. So SpaceX proposed to us to refly the spacecraft from Demo 1 and the booster from Demo 2 and the booster from Crew 1. And then we work with them to figure out what are the reviews and refurbishment and reviews that we would need to do on both the spacecraft and the launch vehicle. And it's a credit to the SpaceX NASA team and how they work together as an integrated team to do those modifications and refurbishment of the vehicles, and then do these extensive engineering reviews, system by system, to basically get through the certification of flight readiness for the Crew 2 mission.
Yeah, one of my favorite pieces of the story is that Megan McArthur, one of the NASA astronauts, is actually going to be riding in the same capsule that her husband, Bob Behnken, flew to the ISS in last year. Just shifting gears, when it comes to commercial crew more broadly, Boeing is also part of the program. We just got some guidance in terms of when it's going to retest its capsule Starliner, that's looking like it may not happen until August or September. What is the likelihood that we could actually see
April
crewed flights
23rd,
by
2021.
Boeing by year's end as well?
800 contracts.
Yeah, great question.
AAPL.
So we're finishing up
135
the final
calls.
review of the vehicle.
May 21st, 2021.
Both the Starliner
1,000
and
contracts.
Atlas 5, and that'll be complete pretty soon. And then we're just trying to find the a launch date on the range here at Kennedy Space Center and Cape Canaveral Space Force Station. And so busy time down here in Florida for launches. So yeah, it's looking like August or maybe September. And then we'll have to see how that orbital flight test 2, what we call OFT2, goes, and the progress towards the commercial flight determine the earliest launch date for what we call CFT1, which is the crewed flight test 1. So hard to say when that's going to be right now until we get the data from OFT2 and analyze it, examine the progress, and make sure we're safe to fly.
Okay. I mean, it's been such a big week for NASA in general. I want to shift gears to the Human Landing System contract
April
award that happened
2021.
last Friday. Certainly surprised the number of
500
people in fact that you
contracts.
down selected
DISA.
just one SpaceX
35
for that lunar
calls.
lander
May 21st,
competition. I wonder how much of this is a
2021.
reflection of current
815
budget constraints
contracts.
Versus the fact that you do have this track record now of human spaceflight with SpaceX.
Yeah, so it's a factor of two things.
35
First,
puts.
we independently
April
evaluated the
23rd,
three proposals
2021.
from SpaceX,
500
Blue Origin,
contracts.
and their team, and
CCL
Dynetics.
26 calls.
April
April 23rd,
a matter of the proposal
2021.
evaluation and how that came out, as
600
well as
contracts.
available funding and what we can anticipate as funding for human spaceflight, and particularly for the human landing system. And we thought given the proposal evaluation and our assumptions on available funding, selecting one and that being SpaceX would be the best plan for NASA. Now, soon after, though, we want to go out to industry with a request for information broadly, all of industry who's interested, and see what we can do to keep them engaged between now and what we're calling the services contract, which will be for the next landing, because we really want to maintain competition moving forward for those services contracts for the human landing system.
Yeah, we didn't even get to the Ingenuity Mars helicopter flight that happened this week because we're up against the end of the show. But we do hope you'll come back to talk about everything that is afoot at NASA. Good luck with Friday's launch. Thank you, Steve Jerzik.
Thank you.
And just
a quick programming note before we go. Tomorrow, don't miss Southwest Airlines CEO Gary Kelly. He's going to join us at 9:30 a.m. Eastern. Of course, the company will report earnings before the bell. That will do it for Squawk on the Street.
Tech Check starts right now.
Good Wednesday morning and welcome to Tech Check, our new show about technology here on CNBC. I'm Deirdre Boza with Carl Quintanilla and John Fort and Julia Borston here with us as well. A big day for tech news. Netflix shares plunging as the company's growth slows. Is this a bump in the road or a sign of something amiss for the company? Plus, how Apple makes money. New products, new services, the prices, and the cut that Apple takes is in focus for us today. And
April
speaking of Apple, a
23rd,
hacking group is
2021.
threatening the company, vowing to release confidential
658 contracts.
documents unless it receives $50 million. John?
Stocks, meanwhile, broadly recovering from a string of losses. The S&P
240 calls.
Netflix, as
September
Deirdre just mentioned,
17th,
by far the biggest
2021.
laggard on the S&P
717
and NASDAQ. FANG
contracts.
broadly lower. Facebook and Alphabet off by more than 1%. And another stay-at-home winner, Peloton, is down again today. That stock's lost 15% in a week, Carl.
Yeah, John, as you point out, most important thing this morning, Netflix shares were down as much as 13% after the print, currently down almost 8%. That's about a 3 or 4 week low. One of the most important stories in tech today, obviously. Julia is going to break down what we knew from the quarter and what they're saying about the current one. Hey, Julia.
Well, Carl, Netflix's results show the ongoing impact of COVID. Far lower than expected user growth shows that the user surge we saw last year was pulling forward growth that the company could have seen this year. And that fewer new shows this past quarter due to COVID-related production delays boosted the bottom line in the quarter, but also depressed user growth. Now, take a look at this chart of user growth over the past year and a quarter. Now, the first quarter of last year, the company added a record 15.8 million subscribers, then 10 million subscribers in the second quarter of last year. Now, in the first quarter of this year, the company added fewer than 4 million subscribers and forecast the addition of just 1 million subscribers in the second quarter. Also, look at the domestic market and how that is maturing. Now, this was the third straight quarter of under 1 million net additions in between the U.S. and Canada. Now, this all just points to how important international markets are for Netflix's growth going forward, and also how important it is that the company keep churning out more hits. That's why the company is spending $17 billion on content this year. That's up from just under $12 billion last year and about $14 billion in 2019. Now, the company says it expects growth to accelerate in the second half when it comes to those subscriber numbers as it launches more series and original movies, Carl. But the analysts are still optimistic. I have to note that about 3/4 of analysts still have a buyer overweight rating on the stock.
Yep, and we're going to talk to one in a minute. I see Stifel went to a buy. You know, yesterday at this time, Julia, we talked about going into the print with some pretty muted expectations. We talked about
calls.
potentially a
April
crackdown
30th,
on password sharing,
2021.
which apparently Reed Hastings has very
500
little
contracts.
interest
I wouldn't say he has little interest in it. I would say that they want to be careful about cracking down on password sharing. They were asked a question about what they're planning to do about password sharing, and they said they didn't want to be seen as turning the screws on people who use the service, but at the same time, they want to make sure that people who are watching are paying. So I think we might see some more options in terms of maybe they'll offer an additional stream or two if you pay for the middle tier of Netflix, which now offers 4 streams. But I think they want to tread carefully here because they don't want to alienate people who maybe they'd like to rather convert them to being subscribers rather than sending them over to the competition entirely.
Right. Julia, you mentioned that content spend. It seems like every year we see these huge jumps.
18 puts.
How important do you think profitability is to Wall Street versus
2021.
those subscriber numbers, which were so focused
contracts.
on? I mean, earlier Netflix said that it expects to break even on a cash flow basis this year. Is that still going to be key for the Street?
Look, I think this is a company that's very much in growth mode. There was a big earnings beat this past quarter, but I think the fact that the company did give that guidance for that cash flow break even, I think that's something that Wall Street's going to be focused on. But this is a company with massive international potential. Yes, we are seeing that domestic growth slow, but the company has pointed out that it has less than 10% of total video subscribers in this space. So there is so much room to grow, especially overseas. Here, the market is more saturated, but I think that's where they're going to be
May
investing
21st,
their resources in terms of
2021.
original content, in terms of marketing, really getting the word out in these markets, including Asia, as well as Europe. So a lot of potential internationally, and this is just being really treated as a growth opportunity still, especially by all these analysts, including one you have coming up.
Well, it's where we're going to start with our next guest. Evercore's Mark Mahaney can walk us through what he thought of the quarter. Mark, great to have you back. Good morning.
Good morning, Carl.
Last week, a lot of the coverage was about the balance sheet getting better, building cash, potentially creeping toward investment grade, long-term positive dynamics. Was any of that undone last night?
A little bit. Every time you go through a Netflix earnings, you should ask yourself, are you more or you're less confident on subs growth, margin expansion, and ARPU? The revenue that they can get per user. And I thought the big question mark really was the subs that came out of last quarter. They showed record high margins. ARPU growth expanded despite the fact that they're mix shifting towards the ARPU growth. There was ARPU growth despite the fact that they're mix shifting towards lower paying markets or economies. So you got 2 out of 3 things right. And our view on the subs numbers are you are going to have pull forwards. It is impacted by the content slate. The stronger the content slate, the better the sub numbers. The weaker the content slate, the softer the sub numbers. But long term, this market, the entire entertainment market, is moving towards streaming, and it's moving towards a streaming bundle. And Netflix is almost certainly going to be part of that. So if I'm going to be soft in some place, I think they can make up for it later on with subs. That's why we like this as an entry point. This isn't a backup the truck price, but it's a backup the minivan
Now, Mark, I know nobody
fan price.
Yeah, nobody likes to go bearish if you've been bullish in a situation like this. But to me, we've talked about the Netflix angle on Netflix. But what about the broader idea here that, that thing that you thought was momentum? Oh, well, it was just a pull forward. What if you extrapolate that out to so many of the other stocks that you cover? I mean, what if they said, oh, yeah, I know we've been talking about that, COVID
calls.
changed everything and it's a
April
transition to digital.
23rd,
But that boom that we
2021.
saw, a lot of that was just a pull
500
forward,
contracts.
and now we're lowering
VIDU.
our guidance for the coming
240
quarters.
calls.
Wouldn't that be a concern? And how
May
do you know that
21st,
we're not going to hear more of this?
2021.
We don't know. It's possible,
22
John,
puts.
we'll see something like that.
January
We've got
20th,
other assets that we think were
2023.
clear winners of a permanent
1,000
pull forward of demand. I think that's Amazon and some of the advertising
337
names.
puts.
But it's possible
April
that we're going
23rd,
to hear the same script
2021.
going forward. I don't think that's likely, but it is
AMD.
possible. And there's no doubt
85
there's
calls.
huge bump up in new
June
subs
18th,
for Netflix last year.
2021.
There was going to be a little bit of a
1,000
trade-off.
contracts.
The good thing for
WB.
stock pickers at this point is you just
56
passed
calls.
the toughest comp
May
quarter for
21st,
Netflix. The comps get
2021.
easier going forwards, and when a company talks
700
about accelerating
and
sub
WB.
ads in the back of the half of the
50
year,
calls.
that's what's going to cause the
May
stock to start
21st,
grinding or gapping
2021.
up, depending on the order of magnitude of that
1,400
acceleration
WB.
in the back half of the year.
56 calls. May 21st,
Mark, good morning.
2021.
Given fierce competition, I know that Netflix last night said that it wasn't competition weighing on those numbers, but we can see this happening. We can see content spend increasing. Should Netflix be focused on profitability?
Calls.
Is that calculus changing,
January
do you think, for
21st,
Wall Street?
2022.
Should it say, okay, be in growth mode again, invest money
NMR.
back into the business
5
to
puts.
fend off the other
May
players in this space?
21st,
Does Wall Street sort of need
2021.
to adjust their thinking
917
on that metric?
contracts.
Well, I guess the way that Deirdre, the way the stock's trading, it's clear that the street puts growth over profitability because you had record margins, but the stock traded off. So growth still matters. Subs is still the single most important metric for Netflix. I think it's going to be that way for a long period of time. The company has shown the ability to march up margins. The question is, can they continue to add 20, 25 million new subs a year going forwards? And maybe they get a little past this year, maybe 20, maybe it's high teens sub ads, but we're going to expect them to get back to that mid 20 sub ads post this.
June
Competition
18th,
where it shows up is
2021.
where we're not going to really be
500
able to track it.
contracts.
It's going to be in the 90% of the sub ads that come from outside the US. So it's markets like the Philippines and Turkey and Japan and Korea and India. And that's where
OMC.
Netflix faces a lot of competition, but
85
much
calls.
less so that than
June
the ones that
18th,
we focus on here. You
2021.
have a Disney global presence.
532
but really none of the other
contracts.
assets that we talk about in this market have that kind of global presence. So they're really taking on local champions in each of those markets.
Hey, finally, Mark, we're going into Oscar weekend. They do have 36 nominations, 2 up for Best Picture. How should viewers think about the degree to which Netflix is accepted among the artistic community and whether or not that's transferable to the stock?
I think it transfers not so much in terms of the Oscar wins, although those help, but in terms of the commercial wins. So if they can show that their shows get 40, 50, 60, 70 million people watching it in the first 40 days, 30 days of the launch, that tells the people who are creating the content and the big actors and the big producers and the directors that you want distribution. You actually can get just as much global distribution going through streaming, whether it's Netflix or another service. You can every theater. The last 12 months, wake up call. You want distribution? You can get it via streaming. It's not a niche market anymore. That's the real win for Netflix, that the content companies are bringing their scripts to Netflix. They've been in this position now for a year, and it seems like it's getting stronger.
Mark, great analysis. Fascinating, very layered story coming out of the quarter. Appreciate it, as always. Mark Mahaney.
Thank you, Carl.
And guys, that ties into today's crowdsource. Those disappointing Netflix
Teva.
numbers got us thinking,
8 puts.
what can or should
September
Netflix do to
17th,
boost growth
2021.
once again? Tweet us your ideas. We've
600
also added a
contracts.
QR code on the bottom left of your screen, which goes right to our Twitter page. Some discussion of video games on the call last night. What else do you think that Netflix could do? Additional revenue streams, perhaps. We will show the best responses at the end of today's show, John.
Yeah, speaking of additional revenue streams, another big tech story today, the implications of Apple's product announcements at its Spring Loaded event. We got a lot of updates, iPad Pros with M1 processors and 5G, M1 iMacs with new designs and a range of colors, and AirTags, little trackable buttons that use wireless technology to help you find stuff you've lost. And beyond hardware, Apple also laid out a plan for podcast subscriptions, and
IEF.
Apple's not shy about taking its
116
cut of that
puts.
podcast sub
May
revenue here, and that's where we're gonna
21st,
start with the Wall Street
2021.
Journal's Joanna Stern.
2,000 contracts.
Joanna, I don't blame Apple for taking 30% of podcast subscription revenue in the first year, but I'm not sure I would trust them to provide more than a storefront here. They have ruled the roost in podcasts pretty much since they became a thing, and they've largely ignored it, failed to innovate, promised we're going to give all these tools to podcasters, and I think largely it's been weak. Would you trust them to innovate here now?
I mean, I wouldn't say this is much of an innovation. I agree with you here, right? It's subscriptions, giving creators of podcasts the opportunity to charge for their podcast rather than rely on ad revenue. What this really is the heating up again of the war between Apple and Spotify. Spotify has been dominating in podcasts. They've acquired some companies in the podcast area. They are innovating in product in podcasts. That's not what Apple's been doing, right? It's sort of like you said, the podcast app is sort of languishing. It's kind of one of the worst podcast apps you can have on the iPhone.
Right. And Joanna, look at Spotify's strategy here. They've been paying big money for talent, names like Joe Rogan, and a lot of them have been coming off of the Apple Podcast platform. Do you think that we're about to see Apple start to spend more on this kind of talent? Would they be spending on certain studios or platforms? What do you think?
It wouldn't surprise me. I think also looking at the Apple TV Plus strategy is actually a smart thing to do here as well. The focus on high quality versus quantity. I mean, it's different, of course, because Apple is a major podcast distribution platform, but I could see them going that route as well.
Joanna, they've always, in their announcements have done animations of the inside of the hardware, but I don't know if I've ever seen them play up the M1 quite like they have about the insides in prior rollouts. I just wonder, are consumers being conditioned now to go into a store and say, I want the M1 thing?
I mean, I was fascinated about how much time and how much drama and showmanship there was around the M1 yesterday. I mean, Tim Cook pulled off a mask. There was this whole interlude. I don't know if you guys have footage of this. There's an interlude where Tim Cook is an imposter and he's stealing the M1 chip from the Macs and putting it inside the iPads. And it was clever, but it's a lot of attention on the M1, which really signals how important it is to Apple that they are controlling the entire hardware, software, services stack. I mean, they made a lot of interesting points yesterday around how this all works well together. Even if you look at the products that were not M1 based, you saw the AirTags and the Apple TV all relying on other Apple products, right? Relying on the iPhone. So this is all part of the ecosystem. Apple controls it all. Apple controls it. That's their message.
Yeah, we got you turning into an icon there. Let's see if we get Joanna's video back, guys. But this reminded me of classic Apple, the M1 Focus. Back when Phil Schiller and Steve Jobs would get on stage and talk about the Power Mac chip versus Intel. And, Joanna was with us and talking about this yesterday. The idea that it's unclear, Carl, where the iPad Pro fits versus the Mac. It got even muddier for me yesterday because they're rolling out these iPad Pros now with the M1 chips in them. And the iMac also has the M1 chip, and so does the MacBook Air, et cetera. It's like, well, how is the iPad Pro more than a MacBook Air without a keyboard on it? And so which one should I buy? I'm very unclear. It takes me back to when Tim Cook was saying that a touchscreen computer is like a refrigerator toaster. It seems to a degree like Apple's making refrigerator toasters, and one's a little bit more like a toaster, and the other one's a little bit more like a refrigerator. But hey, maybe it's what people are demanding.
BMY.
And
66 calls. April 23rd, 2021.
Yes, what is
700
what is cheaper?
BMY.
That is for sure. I guess it's a
68 calls.
first-class, first-world problem.
April
if you're
23rd,
Apple, right, to have that kind
2021.
of layering within the product.
751
stack.
contracts.
We'll talk more about it after a break, and our thanks to Joanna Stern of the Wall Street Journal. By the way, this $29 billion robotics IPO, but it's not these robots. It's software automation. The CEO is coming up next. We're just getting started here on Tech Check.
WB. 56 calls. May 21st, 2021. 1,470 contracts. SQQQ. 11 puts. April 23, 2021. 800 contracts.
Time for a gut
HIMS.
check on chips. We don't talk
10
about
puts.
this one enough. Semiconductor
May
manufacturing
21st,
supplier ASML
2021.
holding in the green after an
500
earnings beat,
contracts.
forecasting strong demand in the shortage. Full year sales growth projected up 30%. Lam Research also getting a boost this morning, one of the top NASDAQ 100 gainers, alongside Applied Materials with both names up for the year. Deirdre.
Well, John, UiPath is set to go public on the NYSE today. A CNBC disruptor. It makes software robots that automate mundane office tasks. The technology allows employees to customize AI capabilities rather than engineers or developers. Ticker is PATH, and it priced above its range with a valuation near $30 billion. Joining us now is CEO and co-founder Daniel Dines. Daniel, good morning. Thank you for being with us, and congrats on this milestone.
Good morning. Thank you so much for inviting us.
AAPL. 135
Daniel,
calls.
you don't have the typical
April
Silicon Valley
30th,
or startup story.
2021.
You grew up, started the company in
AVGO.
Romania. You once said no to
500
$1
calls.
billion from
October
Masasan.
15th,
So what is the
2021.
capital going to
60
allow
contracts.
you to do today that it
AAPL.
wouldn't have earlier on in UiPath's
135 calls. April 30th,
We have a
2021.
vision to accelerate
521
human achievement.
contracts.
And this capital is gonna help us to continue on our vision to invest heavily into research and development, into our go-to-market. And I believe that we can build a generational company that will completely shape the way people work.
Right, and you know, software, and cloud listings have been very hot over the last year or so. Notably, you guys priced this IPO lower than your last private valuation, which was about $5 billion higher than your IPO price set yesterday. I'm seeing that your latest range is between $62 and $64, about a 14% premium. Talk a little bit about the thinking. Were you worried about leaving money on the table by pursuing especially a traditional IPO when many companies these days are looking at direct listings?
Well, we thought quite a long time if we have to do a traditional IPO or a
133
direct
puts.
listing. But
April
we believe this
23rd,
is
2021.
still a great market
506
to raise capital.
contracts.
It's a bit of a choppy market, but we are one of the unique company that got a lot of attention from the investors. I can tell I enjoyed quite a bit understanding how the IPO process works. I am happy with the price that we got on our float. I am really happy with the investors that we were able to attract in the company. And I think our price, market adjusted, was actually higher than the last round.
Right. But you weren't worried, Daniel, about leaving money on the table? I mean, you're one of the few software companies to, price at sort of a more reasonable range. And we've seen the likes of Snowflake, C3 AI, really, really jump on their debuts.
No, I think on all rounds of
AEO.
investments, you
34
might
puts.
leave money on the
April
table.
30th,
I don't
2021.
think this is the main question
600
here.
contracts.
The main question is, can you attract the best partner in the cap table? Are they long-term investment? Are they gonna sustain the company over a long time or not?
That's a fair point. And as I mentioned at the top, you did say no to $1 billion from Masasan once. Let's talk about the business. Last year, you were able to grow revenue by more than 80%. How much of that was due to the pandemic and the need by corporations to automate more tasks? And how much does that have to do with companies inside and outside of tech already leaning further into robotics?
Well, I would say that from a revenue perspective, the pandemic was net neutral to us. We've seen solid growth in industries like financial sector, like healthcare, public sector went pretty well for us. But of course, other industries like travel, like retail, were the most affected, and they slowed down a bit their investments. But I would say that the awareness of digital transformation and the position of automation as a cornerstone technology to power up the digital transformation strategies has increased 10 times. And we have achieved a clear market leading position. And this is a great momentum when many of our customers are making 3 to 5 years decisions. And we are accelerating, actually, and we are poised to get a bigger market share.
Right. So, Daniel, can you sustain this kind of growth? What are you anticipating? And I know that you guys have been cutting losses as well. Do you anticipate that trend to continue? How important is profitability to you?
Yeah, we continue. We always have invested heavily into our growth. In the same time, we learn how to operate this company with rigor. And our long-term strategy is durable growth and operational efficiency. We intend to drive this company for next few years into the net cash flow neutrality while providing really durable and sustainable growth.
Daniel, a practical question for you here. You got started in Bucharest, but now you're based in New York. So this is kind of another big IPO, tech IPO moment for New York. What's your strategy when it comes to locations and physical facilities, how and where employees are going to be working from here?
Well, we have started out of Romania, and that was an advantage because we thought on a global expansion since day one. So we expanded in the last 4 years on all 3 major continents. We have bases all across the world with large bases in Tokyo, in Seattle, in New York, in Bucharest, in Bangalore. So we have a few centers. I believe that we are heading maybe into a mixed environment. We were prepared really from day one to operate as a completely remote company. But also nowadays, I believe that really there is a lot of value into meeting people in person. So truly, we will try to offer the best facilities to our employees and give them the best mix between the freedom of working home and the joy of working with their colleagues, on our sites.
Yeah, that hybrid model that many CEOs are looking at as they think about the future of work. Daniel, congrats again, and thank you so much for being with us today. Daniel Dines, UiPath CEO and founder.
Thank you so much.
Coming up this morning, hackers are asking Apple to pay up big or face one of the biggest leaks in the company's history. We've got that story later this hour. Speaking of Apple, top analyst Katie Huberty of Morgan Stanley
ORCL.
has high confidence going into earnings
calls.
next week. She literally says
April
the company
23rd,
is firing on all
2021.
cylinders. For more of her
500
comments, subscribe to
contracts.
CNBC Pro at cnbc.com/pro. More on tech valuations after the break.
SPY. 416 calls. April 23, 2021. 500 contracts.
Welcome back to Tech Check. I'm Carl Quintanilla with Deirdre Bosa and John Fort. We're recovering from a couple days of losses, although the major indices, Dow, S&P, still on track for the biggest weekly loss in a couple of months. Nasdaq's up 0.5%. Netflix, the big decliner. Tesla up about 0.5%. Let's get a CNBC News update. Rahel Solomon has that for us. Hi, Rahel.
Hi, Carl. Good morning, everyone. Less than a day after the guilty verdict in the Derek Chauvin trial, the Justice Department is announcing a sweeping investigation into policing practices in Minneapolis. The trade group for the major global airlines lowering its forecast for international air travel this year. Now expects global traffic will hit 43% of pre-pandemic levels. That's down from a 51% estimate back in December. As interest rates fall to a 2-month low, weekly mortgage demand has jumped nearly 9%. It's the first increase in weekly mortgage applications since the end of February. And the Soccer Super League has all but imploded. Only 2 of the original 12 teams remain, FC Barcelona and Real Madrid. The remaining teams face strong opposition from many fans and even some players. But, John, you have to wonder if they, conducted any focus groups because support has not been on their side.
Yeah, not a good reception at all, Rahel.
But you were up to date.
Thank you.
FB.
Well, it's also been a mixed
305
bag for
calls.
in 2021
April
so far.
30th,
Alphabet's
2021.
the only big outperformer versus the S&P.
500
Famous value
contracts.
investor Bill Miller discussed the trade on the exchange. Take a listen.
There's some valuation discrepancies in the overall market. I mean, I think that the big names, the big FANG stocks are all pretty attractive. But something like attractive, yeah. Amazon, Alphabet, Facebook. We own them. We don't own Apple anymore. We should have kept it, but I think they're all fine.
Our Dom Chu joins us now with more on what's, relatively cheap in tech. Dom?
On the other hand, right, there's always a trade to be made, relative winners, relative losers, what's cheap, what's expensive. We'll take a look overall in technology because we looked at technology and communication services, 2 of the bigger sectors in the S&P 500. Within that particular realm, cloud computing, internet-related stocks and semiconductors have stood out as real outperformers over the last year. You can see up 65%, 68%, and almost a double for the semiconductors on a one-year basis. The reason why I'm showing these 3 is because each of these 3, over the course of the last few weeks here, has now pulled back from the highs that we've seen. Each of these is sitting right around their 50-day average price. So again, just at or below that pullback, maybe some relative weakness on an otherwise very strong trade.
PLTR.
Take a look at some of these individual names that have been real outperformers within technology
April 30th,
and communication
2021.
services. Look at the big names.
689
IBM, Oracle, and
contracts.
NVIDIA. Each of these stocks is trading roughly 9 to even 14% above their 50-day average price. That's a trend indicator for the medium term. So these have now broken out to, in some way, a little bit above where their trend line has been. So keep an eye on those as relatively maybe more expensive given where they've been. And then check out these other ones that have been underperformers within that realm of tech and comm services. We're talking about social media, in Twitter, also Disney and Netflix. Each of these is now 3 to 4% below their average trading price during that same span as well. So keep an eye on media stocks within that. And by the way, Bill Miller mentioned those big names, the consequential ones within the S&P 500. Take a look at names like Apple, also Microsoft and Amazon and Alphabet. Each of these is now roughly 5 to 7% above their 50-day average price. So when it comes down to it, Deirdre, there is real relative strength still in certain parts of technology and communication services. That might be what's keeping the markets at or near the record highs. We'll see if that trend continues. Deirdre, back over to you.
Yep. Great context, Dom, as we head into earnings season, too. Meanwhile, Apple is facing off with a ransomware gang. We will get to that story next. And don't miss Tech Check's pre-Oscar party live on CNBC.com, LinkedIn, YouTube. This Thursday at 7 p.m. Eastern, I'll be co-anchoring alongside Julia Borston with a star-studded cast discussing Hollywood and the future of entertainment. We are back in just 2 minutes.
Spike. 416 calls. April 23, 2021. 500 contracts. INTC. 67 calls. April 23, 2021. 688 contracts. AMD. 70 puts. August 20, 2021. 500 contracts. AAPL. 125 puts. April 30th, 2021. 1,253 contracts.
Later this hour. And next, Amazon and Dish teaming up on 5G. That news has Dish up nearly 5%. We will talk to the man behind that deal and why some say it could be a nightmare for names like Verizon, T-Mobile, and AT&T if they can't keep up. Stay with us.
INTC. 67 calls. April 23, 2021. 671 contracts. WB. 56 calls. May 21st, 2021. 250 LAZR. 20 calls. April 23rd, 2021. 261 contracts.
Apple's caught up in a hacking problem related to one of its suppliers, and the hackers are now demanding payment. Our Eamon Javers has details on that. Hi, Eamon.
Yeah, hi, Carl. It's a company called Quanta that's a supplier to Apple and other companies around the world. They're Taiwan-based, and what's happened here to Quanta is that some of their data has been exfiltrated by a hacking group called REvil, which has now posted some of that data on the dark web. Here's the note that REvil put up on the internet. They say, today, we, the REvil group, will provide data on the upcoming releases of the company so beloved by many. Tim Cook can say, thank you, Quanta. Now, we've gone on the dark web and had a source provide us with some of these documents. These are the internal
CCIB
documents
17
from Quanta
calls.
that appear to show
October
the Apple
15th,
logo on
2021.
products being developed right now.
161
Don't want to get
contracts.
too detailed on those because presumably there's a possibility at least that this is stolen intellectual property that is now circulating on the dark web. So a challenge for both Quanta and for Apple in terms of how to respond to this. The hackers are demanding ransom be paid by May 1st. No indication of whether the companies will pay that ransom or not. The hackers are threatening to release more data day by day between now and then. So we'll see what happens there. Meanwhile, we're getting news now from the Department of Justice on a related topic saying that the Department of Justice is going to establish a ransomware task force at the federal government designed to get its arms around all this because there are corporate security issues here and, of course, there are national security issues here. This may not be a conventional piece of wisdom, but I did talk to one cybersecurity group this morning who was speculating that this particular piece of ransomware, this particular attack may be a response to the U.S. sanctions on Russia just last week. So there's some question about how much companies are being caught in the crossfire here of the sanctions and the back and forth diplomatic tussle between the United States and Russia. But meanwhile, for Quanta and for Apple, the bad news is these documents are now circulating on the internet. People can go look at them, and the threat is that there's more to come, guys. Back over to
May
you.
21st, 2021.
Eamon, a couple of questions. I guess one is what kind of
538
precedence
contracts.
is there around obviously companies that are leveraged highly to their intellectual property? And is there the sense that we're going to see more episodes like this if the crossfire that you're talking about continues?
Yeah, you know, we talked to a cyber consultancy called Arete a couple of weeks ago who told us that tech companies actually are the companies that are paying the most in ransom because they're so dependent on that intellectual property. So we are seeing hundreds of millions of dollars being paid from American corporations straight to criminal gangs, sometimes through intermediaries who handle the negotiations for them. But the money is going right from corporate America to the criminal underworld. Oftentimes, these entities, like REvil allegedly are based in Russia and have the sort of de facto protection of the Russian government, Carl.
Eamon, you've been reporting, doing a great job reporting on these ransomware attacks for ages. And it's notable that finally we're getting a ransomware task force. Is it seen as late? Do we think that they're going to be very effective?
Well, look, something is better than nothing, right, from the perspective of those companies who are being victimized. You know, and the talk in this world always is on how do you get a better public-private partnership between the government and the private sector. This will probably go a long way to making some of that more seamless. But you do get the sense that there's this massive escalation right now in ransomware. The country doesn't really have its arms around it. The corporate sector doesn't really have its arms around it. And the criminals are making out like bandits here. And the challenge for individual executives and leaders around corporate America is, do you pay these bad guys or not to get your data back? If you're Tim Cook now, do you lean on this supplier and say, you know what, you guys have got to pay them. We can't afford to have any more of these documents circulating on the open internet.
May 14th,
or do you say, you know, we're just going to take a beating here and hunker down
contracts.
and try to ride this thing out? That's a really tough decision for executives in any type of company.
Yeah, Eamon, Thanks. I imagine Apple, with as much money and as many secrets as they have, are not eager to create a market for that.
Right.
We'll see. Eamon, thank you. Now, Amazon Web Services and Dish teaming up to build a cloud-based 5G network. Las Vegas is going to be the first city to see that network deployed. David Brown is the VP of Amazon Elastic Compute Cloud, EC2, joins us now. David, so interesting. I talked to Mark Huan, the Chief Network Officer over at Dish, said you've been working on this for a year and a half. How big a disruption do you think this technology can be in cutting costs and adding flexibility to 5G?
Well, thanks, John, and it's great to be on Tech Check. Absolutely. We're super excited about what we're doing with Dish. And in terms of how big a disruption, I think, we've seen what the cloud has done to technology over the last 16 years, and just how it's been able to cut costs for companies and allow them to innovate at a pace that they just haven't been able to do before. And you've seen that happen industry by industry by industry. And the telco is really an industry that we haven't actually seen the sort of innovation that we believe is possible and transformation that's possible from the cloud. And so I think Dish taking the first step here and saying that they're going to build the world's first a public cloud 5G network completely on AWS is really the start of a lot of transformation to come in the industry. So we're very excited about where it's going to go.
But how does it happen? Because a lot of the carriers have sunk costs. They've got this legacy equipment. It hasn't certainly been on the public cloud. How is that transition going to work? Or are you just going to kind of scare them into the public cloud camp?
Well, obviously, that's one of the advantages that Dish has. Dish doesn't have any network or legacy infrastructure today that they have to worry about. So they really have the benefit of being able to build a completely new network and think about it in ways that traditional carriers haven't been able to do. I think there's going to be a lot of innovation that's going to happen between AWS and Dish. And there's a whole partner ecosystem as well, from providers like Ericsson and Nokia and Altiostar and Mavenir. And we're working closely with all of them. And I think that's going to drive an enormous amount of innovation. And we also work very closely with the Verizons of the world,
2021.
the Vodafones of the world, SKT,
676
KDDI, telecoms
contracts.
around the world. And I think you're going to see some of that transformation as well. They're constantly looking at their new network builds. They're looking at how they're going to do things differently. And I believe if there's an opportunity for them to be able to leverage a cloud provider with something that they believe will give the right performance and latency and innovation for their end customer, it's definitely something they would look at and find a way to do.
David, so often with 5G, I hear that, yes, in a lot of Western countries, certainly in the U.S., there's all this legacy equipment. There's extensive LTE, 4G, et cetera. But then in some other markets, they're coming into 5G more fresh. So is this Dish partnership going to be sort of a case study for you guys to say, look, here's how it can work, and maybe go into some of those markets and use it to sell the idea of 5G built on a public cloud?
Absolutely. I mean, I think working with Dish, like I said earlier, we have this incredible opportunity to do something fresh. It's a greenfield telco. And so I think it's going to allow us to innovate rapidly together and do things that just haven't been possible elsewhere. And I think that's going to signal to other countries, as you say, where there are other greenfield telcos, or maybe where mobility hasn't been so entrenched. But I also think it's going to be true for some of your tier one telcos, like the ones I mentioned earlier. We'll all be looking and watching very closely to see what we can do together.
Well, David, thank you. Between Microsoft using the cloud to push into healthcare, you guys pushing into telco, we are seeing the next phase of this cloud revolution. Now, I also spoke with a top Dish exec, as I mentioned, about the deal. You can watch that interview with Mark Huan by scanning the QR code on your screen. Head over to the Tech Check LinkedIn page to get more details on this.
770 calls. April 23rd,
well, John, in other
2021.
Amazon news, the company is expanding
273
its
contracts.
scanning payment system to a Whole Foods store in Seattle, and it plans to roll out to other locations later. The technology debuted in September at about a dozen Amazon stores that allow shoppers to pay for items by placing their palm over a scanning device. The first time a shopper uses the kiosk, they have to insert a credit card with a link it to their palm print. Amazon says it hopes to sell the palm scanning technology to other companies, including retailers, stadiums, and office buildings. Carl, don't count out Amazon as a major player in payments either, is my takeaway here.
Yeah, I think, it sort of reminds me, John, people have wondered whether or not the level of synergy between Amazon and Whole Foods has lived up to the hype on that day when that deal was first announced.
Yeah, I just wonder if they're going to sell me gloves once they have my palm. I'm not sure I'm going to give it to them, Carl.
FSR. 16
Sand
calls.
down your fingerprints.
May 21st,
guys, the
2021.
SPAC slump is not just impacting stock prices.
Baba.
The raw number of SPAC
230
IPOs
calls.
this month massively
May
lower
14th,
compared to March. We've gone
2021.
from the high 80s, low 90s,
414
and even above
contracts.
110 month to date, leaving many to wonder if the run is over. We'll talk about that. Coming up, a tech antitrust icon and now a hopeful FTC commissioner. We're going to break down what Lina Khan's confirmation could mean for big tech in a minute.
TSLA. 740 calls. April 23, 2021. 100 IQ. 12 puts. June 18, 2021. 593 contracts. LAZR. 20 calls. April 23, 2021. 601 contracts. GE.
Take a look at
15
shares
calls.
of Luminar Tech jumping more
June
than
18th,
10% here in the last few
2021.
minutes as the company adds two former Tesla and
3,386
Intel executives
contracts.
to its ranks. This is a company that went public via SPAC last year. It specializes in LiDAR tech for autonomous vehicles, adding Alan Prescott as Chief Legal Officer and Trey Campbells as VP of Investor Relations. We will continue to keep an eye on that stock
LAZR. 20 calls.
Meantime,
April
there's a big critic
23rd,
on the Hill today.
2021.
President Biden has nominated Lina Khan
550
to
Baba.
the FTC. She's known as a big critic of
232
big
calls.
tech, and for her thesis
April
on how Amazon
23rd,
theoretically
2021.
could be broken up. She was at the Senate today for
KNDI.
confirmation and was talked.
5 puts.
Was asked about the
May
degree to which
21st,
tech has had influence
2021.
on media.
1,000 contracts.
Increasingly, news publishers are dependent on a few gatekeepers to disseminate their news and to disseminate their information. And so a single change in an algorithm can plummet readership and subscriptions for any publisher. And so I think there are some concerns generally there about the arbitrary whims and the arbitrary power that these firms can exercise. I think there are also serious concerns about concentration within the digital
KNDI.
ad market, as well
5
as
puts.
vertical integration.
May 21st, 2021.
The appointment does seem to indicate
1,000
the White House
contracts.
will be taking a strong regulatory approach when it comes to tech. John, you know, they say personnel is policy, and between Khan and Tim Wu now advising the White House, that's something big tech's going to watch.
Yeah, and it would be awkward at this stage for the GOP to push back hard when at the same time
Disk.
they've been creating a
35 calls.
a narrative about
May
big
21st,
tech leaning too
2021.
far to one side.
1,000
So,
contracts.
the texture of this confirmation hearing will be interesting for sure. Now, Mizuho naming Twilio a top pick.
KNDI.
Adding a positive watch
5
on
puts.
Microsoft.
May
Goldman
21st,
reiterating its sell on
2021.
Apple. For a look at
1,000
today's biggest analyst
contracts.
calls, check out that story. Subscribe to CNBC Pro at cnbc.com/pro. And we will be right back with today's crowdsource.
KNDI. 5 puts. May 21st, 2021. 1,000 contracts. SPY. 415 calls. April 23rd, 2021. 5. NIO. 38 calls. April 23rd, 2021. 500 contracts. EQT. 15 puts. January 21st, 2022. 535 contracts. DDOG. 90 calls. April 23rd, 2021. 800 contracts. FSLR. 85 calls. January 21st, 2022. 1,866 contracts. FSLR. 85 calls. January 21st, 2022. 2,225 contracts. NKLA. 10 calls. April 30th, 2021. 609 contracts.
Before we close the show, one more thing. Discord has reportedly ended deal talks with Microsoft, instead exploring a potential IPO. Discussions between Microsoft and Discord had previously valued the chat startup at about $10 billion or more. This is just the latest deal to be put on hold for Microsoft in the social space after a bid to purchase a portion of TikTok last year. That never happened. Count Facebook's Mark Zuckerberg, a fan of the company. Here he is being interviewed by CNBC contributor Casey Newton this week.
What the Discord folks are doing, I think it's a great product. Well, I think the team has done a very good job with it. I mean, I think it's, I think it's impressive technically. I think the product is well implemented. I do think that the Discord folks have done a great job.
We will see if more potential buyers emerge or if it IPOs. John, I wonder if Zuckerberg has thought about buying Discord.
Well, or better yet, when you've got as many messaging platforms as he does, it's nice to point out somebody else who's succeeding in messaging. Less of an antitrust argument. Okay, for Crowdsource, we asked, what does Netflix need to do to boost subscriber growth? Jake saying Netflix should have their own smart TV that gives subscribers early access to Netflix originals. Paul Keith says VR content is the future. And another loyal viewer thinks to add games to the platform. Now, if you didn't write in today, don't worry. We will continue to crowdsource. Carl, Netflix probably doing just fine. Anybody who was on the fence over the past year probably ended up just getting Netflix.
Yep, indeed. And it's obviously off session lows. We talked with Mark Mahaney at the top of the show, John. And Stifel also today going to a buy, saying, look, a lot of this pull forward was expected. We were simply waiting for the quarter that would make that evident. By the way, not a huge amount of tech earnings tonight. We'll get Chipotle, but tomorrow will be interesting as we work our way through AT&T and, of course, Intel tomorrow night. Thanks for watching. Let's get to the judge in the half.
All right, Carl, thanks. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, the FANG fumble, what the Apple, Amazon, and Netflix underperformance means to the markets and your money, and whether stocks can really keep climbing if those names keep struggling. We debate that with our investment committee today. Joining me for the hour, Jenny Harrington, the CEO and portfolio manager, Gilman Hill Asset Management, Amy Raskin, the chief investment officer of Chevy Chase Trust, Joe Terranova, Pete and Jerry, and rounding out our four today. Let's go to the wall. Stocks trying to reverse that two-day losing streak. We're green across the board. Yields holding in on the 10-year, 157. Obviously, a lot of focus today on the tech trade. That after Netflix earnings, that stock slide. Pete, Apple is flat on the year. Amazon's barely up on the year. Netflix is today's biggest loser in the S&P, the NASDAQ 100. It's negative on the year. How much of a problem is that if those big-name tech stocks continue to struggle?
Yeah. I don't know that that's a problem at all, Scott. I mean, quite frankly, I think it's actually healthy for the markets that it's not just the 4 or 5 names that we bring up all the time and it seems like have been the leadership for so long. I think it's great that we're seeing some form of rotation that's actually sticking. I mean, just take a look at, for instance, the financials. How well they've been trading. You go all the way back to November, but year to date, they're doing extremely well. You look at the material space. You also look over at some of the other names in the energy space, particularly those beta names in the energy space, but even the big names. And I think it's very, very healthy that we're seeing a market that's not so dependent. It doesn't mean that we don't want these names to participate. I think we do. Many of us own a lot of these various stocks, but I think the reality is it's great to see the markets don't have to depend on those 4, 5, 6 names that we bring up all the time. And there's much more diversity out there. Even the consumer discretionary, you look at a lot of different areas in the marketplace that we have seen that performance that's being made up. And let's not deny the fact that just a few days ago, again, we were setting record highs, right? So it does say a lot about what's going on, I think, underneath, and it's not just a FANG trade anymore.
Let me ask you this, though, Pete. What happens if the other areas of the market that you just cited are overextended and these aren't performing at the same time? Isn't that a problem?
That would be a problem. I don't know that I would say that the financials by any measure are necessarily overextended. I think there's a lot in the energy space that's not overextended, especially when you consider the fact of where was crude? Crude was $38 back in November, and now here we are we were 63 just a couple days ago. We're still somewhere above 60. So, you know, I think there is support out there, Scott, for a lot of what these moves have been in a lot of these different areas, different sectors. And, you know, we talk about the semiconductors all the time. Many of those names still trade at a very fair value, but there are many that are obviously that probably are extended. So I think there's within some of these sectors we have individual names that certainly reflect what you're talking about, which is, hey, some of these are extended, they're overpriced. I specifically would say that the high multiple names that had such a great run have certainly been an area that always makes me scratch my head and makes me a little bit scared because of the fact that they've run with absolutely nothing that can really truly support it other than the potential into the future. But outside of that, I think that there's a lot of different areas in the marketplace right now that still feel very comfortable for me to buy.
Let's be real, though, Jenny. I mean, it certainly makes it harder for the NASDAQ to do well if Apple and Amazon and Netflix can't pull their own weight. I mean, these were the ones that were driving the train. Now they're, you know, at risk of being the caboose. Don't go anywhere, camera. I'm here. There we go. We're back. Jenny.
And I think how wonderful is that? And I've been arguing for a long time that we don't need them to continue to be the driver of the train. It's okay if they take a turn being the caboose. And I think the way Pete phrased it is really well. We're broadening the base, and that's creating a healthier market. I was writing when he was speaking that diversity of leadership builds a stronger, more resilient market. That's what's happening now. And when we talk
45
about
calls. January 21st,
one of the things Amy and I were talking about before the call is how many pockets and little areas in the market there are that aren't overvalued. You can look
April
at many of the banks, and Pete was mentioning this too, and they're still trading
500
at 10
contracts.
times earnings, 12 times earnings, 8 times earnings. There's plenty of energy stocks out there that are trading at a fraction of the market multiple. So as those grow from 10 times earnings to 12 times to 13 times, you're just building a stronger market that's good for everybody. It's okay if FANG takes a break and is the caboose. They have done their work over the past 5 years. Give them a break. Let them take a breather. Let them grow into those multiples.
Well,
that's healthy and good for everybody.
Unless, Joe, you're wondering where the next leg of the rally is going to come from, right? I mean, like I said before, the recovery story at this point is obviously well known. And I don't know how much of it is already in the market, but you've got to believe a good portion of that is already in the market. So maybe those gains are a little muted going forward. Like I said before, if you have FANG gains that are muted going forward, do you not have a problem? At some point, Apple and Amazon need to start performing, don't they?
BB. 9 calls.
You're making the assumption
May 28th,
that looking
2021.
forward, Microsoft,
500
Alphabet,
contracts.
Apple, they are going to begin to underperform because actually they're outperforming over the last 6 weeks. They're doubling the S&P 500.
BB.
And it's about that
9
rotation
calls.
that Pete is identifying.
May 28th,
Earlier in the
2021.
year, we
500
were gearing
contracts.
towards high cyclical, high beta, low quality type of equity names, and that's where the underperformance was occurring for the FANGs. Now we're back to focusing on quality. So I think the question becomes, looking forward, it goes back to Treasury, Scott, and it goes back to, are you able to continue to have this rotation within the equity market? If you're not, if you begin to see Treasury yields decline even further, money's going to come out of equities, go back into fixed income. And I think it's at that point that you're going to see this consolidation or correction phase for the S&P 500 that over the last week or so people are beginning to talk about.
So that's not really, I mean, it's a good point
April
you make,
30th,
and it certainly
2021.
feels like it matches what Scott
600
Minerd was saying on the
contracts.
network earlier this morning
SLV.
on Worldwide Exchange.
27
you get
calls.
some near-term chop, you're going to
June
get more of a
18th,
bid
2021.
into bonds as a result because you'll have some of that money
604
coming out of
SLV.
equities. Amy, how do you see
27
it?
calls.
What should we make of
June 18th,
the fact
2021.
that those three FANG stocks
1,000
have done
contracts.
nothing for, since the beginning of the year? I mean, they're either flat over the last 3 months or slightly negative.
Well, I don't think it's surprising. Towards the end of last year, I was talking about trimming the FANGs, and we did that. So I think during the pandemic, when there was massive liquidity and no story that people wanted to, felt comfortable with, you got money rushing into the FANGs. And now you've gotten some of that coming out and diversifying and going into other places in the market. So I think that's completely normal and to be expected. I like the valuations better down
50
here,
calls.
relative.
January
than I did
21st,
before, but,
2022.
with some of the FANGs, we don't own all of them. In general, we're underweight, but
9 calls.
I think it's to be
April
expected.
30th,
I think the market's
2021.
searching for a leadership right now. I don't think
986
it's clear
contracts.
where it is. There's a tug of war between the liquidity and people looking for stories and something that they feel comfortable that they're going to earn a
WFC.
return. Versus
50
a very,
calls.
very expensive market
January
in general. Certainly there are
21st,
pockets here and there,
2022.
that
1,704
but in general, the market's
contracts.
expensive. And in general, right now, the market S&P is 50% growth. So you're going to need growth. Maybe not the FANG specifically, but growth overall if you want the overall market to go up.
Let's talk about Netflix more specifically. I did mention it is one of the biggest losers today out of the 100 and also the S&P. Stock's down about 7%, maybe a little bit less than that at this point. It's certainly recovered off the lows. The subs were a problem. The pull forward, as you know, was rather significant because of the pandemic. Jenny, you say this stock was priced for, quote, delusion. Tell me what you mean.
When you have a company that reports as unbelievable numbers as they did, right? 24% earnings growth, they added 3 million subscribers, and it's down 7% on those earnings. The stock before that wasn't priced to perfection. It was priced to delusion, delusional expectations for that level of growth to continue to go into the future. One of the things that I've been thinking about a lot lately is how there needs to be a concert between the valuation of a stock and the story of a stock to make a great investment. And what we focused on a lot, particularly over the last year, is the stories. I always focus on the valuation. Maybe I need to incorporate the stories more, but you need to marry that valuation and that story to actually have a great investment. So let's not argue about what a wonderful story Netflix is. We all love watching it. I loved The Queen's Gambit. That was terrific. But the valuation was totally delusional. It was as if sunshine and rainbows were going to continue for the rest of eternity, and they're not at that level. There's competition
ENTG.
here, and we're going to see that with
100
all of the
puts.
big super caps,
August
tech
20th,
stocks as they start to report
2021.
There's competition.
910
when you get that big
contracts.
piece of the pie, everybody wants some. And they actually said on the earnings call, like, oh no, we don't think this was from competition. But there is a lot out there. And I don't think it's winner takes all. I think there's plenty of room for Disney and Hulu and Apple TV. There's room for all those guys. But there is competition, and that's meaningful. And when there is competition, there needs to be a correct valuation. And that's what they did not have going into this earnings call.
Okay,
so it was,
So
to
I
think
wrote,
that it was going to go up more
I
was
wrote this
delusional.
down. I wrote that down, what you said. Netflix was, quote, priced for a delusional level of growth. And I wrote it down because I'm guessing that our guest right now is going to disagree with you. It is one of our own, Tiffany McGee. She bought more Netflix before earnings, and now she says she is buying more on the drop. She is on the phone with us. Tiff, are you there?
Yes, hi. How are you guys?
Man, Jenny just hated all over Netflix. What's your counter to that? Because clearly you
only the valuation.
No,
love the story.
Yeah, but only the valuation. But I mean, you said it was priced for a delusional level of growth, right? That's hating. That's hating on where the stock price is right now and the valuation. So, Tiffany, what's your counter to that? Because clearly you disagree with what Jenny just said.
Absolutely. And I'm just going to remind everybody that somebody else hated on Netflix, Blockbuster, right? There's a whole story behind that. First, I think that we really need to remember, this is a company that started in 1997. And when they started, really thinking about their evolution from DVD by mail to streaming, right? And they've really powered through with this evolution from U.S. only to global, from licensed to original content. So that's how I'm thinking about this. But in terms of competition, Jenny mentioned, I really disagree. So their biggest competition is with linear TV, right? And they still have 10% less than 10% of the linear TV viewer share, right? So their second biggest competition is YouTube, right? And Disney really pales in comparison. So I'm looking at the whole story, right? So they've been expanding in their international markets, really focusing on producing that original content in those markets, not sitting in the U.S. and producing what we think are good for those markets. And they're able to spend less on content. There is a direct line between the amount of content, original content that Netflix makes, and their revenue. And of course they had this pull forward with us subscribers, but they also had a shutdown in production. So I expect this, right? So, and they also said in their earnings call, it's really hard to forecast in a traditional quarter, much less a really crazy quarter, 5 quarters, like we've had in the past year. So, this is right in line really with what I was thinking. And I'm not looking at this from, a Q1 perspective. I'm looking at this in terms of Netflix going forward. There is really, in my mind, we sit and talk about Disney Plus being competition. I really don't see that as competition, right? This is Netflix's sole business. They just did this deal with SUNY that gives them access to all this, Sony IP, and they're really focused on continuing their production of original content across the world.
Well, when we had this big debate yesterday, you and me, about what to expect going into the number, you were not negative going into the print. Like you say now you were expecting this sort of thing, but you weren't looking for as big of a sub-miss as they had. There's no way, given what you said to us yesterday, I don't imagine that you were looking for as much of a pull forward, because part of the conversation that we had yesterday was on what the impact of the post-pandemic is going to be on Netflix's ability to continue to grow its subscribers. The other issue of what you just said is that they're spending less on content. They're spending a ton on content. They're going to spend $17 billion on original content this year. They're going to spend, say, analysts, $26 billion on content by 2028. And the fact is they have to spend more on original content than some of the competitors like Disney, because they don't have the kinds of catalogs that Disney or Viacom or Comcast, our parent company, have through NBC Universal. Isn't that an issue as well?
With respect to the amount that they're spending on content,
IBM.
what I'm talking about is
135 calls.
Remember, they had this transition
May
from licensing
21st,
content to
2021.
content. And so
398 contracts.
So when I say they're spending less, I'm not talking about their overall spend. I'm saying that it costs them less to produce
UAVS.
than it does to license
7 calls.
And so
May
for them,
21st,
that's
2021.
definitely a good thing.
1,295 contracts.
Your first point, if in our conversation yesterday, I wasn't expecting this big of a miss, but all in all, I'm okay with it because I really do see the long-term picture. I'm not judging Netflix solely by this quarter and their misses because it really is hard to predict, to forecast.
I understood. Look, you're backing it up with your dollar. Because you bought more into the number and you bought more today on the drop. So that says more than anything. Tiffany, I appreciate you calling in. We'll see you back on the desk soon. That's Tiffany McGee, Pivotal Advisors. Joe, so you have Netflix in the GOT ETF.
7 calls.
What are we supposed to
May
think about this
21st,
now?
2021.
Exactly what you
406
highlighted
UAVs.
in your question to Tiffany.
7 calls.
Scott, let me ask you something.
May
You've got a bunch of
21st,
companies that
2021.
offer a digital product or service in
362
2020.
contracts.
How are these companies ever going to be able to comp in 2021 against the numbers that they were posting in 2020? In Q1 of 2020, Netflix had 15.8 million new subscribers. So the expectation was they were going to have 6 million in this quarter. They missed badly. The guidance looking forward is for another quarter where they're going to miss again. Here's the question. Can they recover from that? And here's where Netflix, to Tiffany's point, has some support. They're finally fixing the balance sheet. Their free
NRG.
cash flow positive.
42 calls.
They're buying back their
June
stocks.
18th,
You're correct. They're going to
2021.
spend 17
500
billion on
contracts.
new content, and they need to focus specifically on international growth in that new content, and they're going to spend even more next year. So over the course of time, Netflix is going to be able to recover.
Of course.
But I think the real question is, how many of these companies, Scott, that pulled forward all the expected revenue growth in 2020 and now have to comp against those critical numbers?
Okay.
Do they have balance sheets like Netflix does in which they recover?
Okay.
The answer to that is no.
I'm glad you went there because that's sort of where I wanted to go next. But let's just point out one more thing on Netflix. Churn was low. Kramer also thinks this is an opportunity. The company's betting a lot on the second half of this year. So, that needs to be mentioned as well. But to your point on the pull forward, Michael Batnick, who's a good follow on Twitter, by the way, was also suggesting today that Netflix can't be the only one with a massive pull forward, right? So is that now going to be an issue, Amy, when we hear from other companies, the Zooms and the Pelotons and whoever else you want to lump into that group of the stocks that just thrived incredibly over the last year with the stay-at-home, who pulled forward so much of their business that the next couple of quarters may look a little lumpy? Do we need to rethink now based on what Netflix just said?
Yes, it's going to be a huge issue. We've been expecting this to be an issue for a lot of the beneficiaries last year of the stay-at-home trade. Everybody who benefited is going to have a very tough comp. And we're going to see that going into 2022, that a lot of the companies that are going to benefit now from some pent-up demand are going to have a tough comp next year. So the pandemic caused havoc in a lot of our numbers and forecasting, and it's going to be a choppy, challenging environment. But especially for the companies, as Jenny said, they're priced to delusion. I'm not going to comment really on Netflix because we don't own it. But there are a lot of companies out there that are going to disappoint.
Next week, Pete, you better not get disappointments from Microsoft
calls.
and Alphabet
April
on Tuesday,
23rd,
or Apple and Facebook
2021.
on Wednesday, or Amazon
500
on
contracts.
Thursday,
Spy.
given what we've gotten from Netflix now and the
416
fact
calls.
that the stocks, like I mentioned
April
at the top of the program,
23rd,
are either flat or
2021.
negative.
500
I'm talking,
contracts.
of course, about Amazon, Apple, and now Netflix. Facebook and Alphabet have been setting, new records, it seems like, almost every week. And of course, the street is now out with notes ahead of earnings. Katie Huberty, who dropped her price target a couple of weeks ago, she raises it back by $1 to 158. But Goldman, Pete, today reiterates their sell and their price target. I mean, It's incredible when you look at the price target that they have, just relative to not only where everybody else is, but where the street and where investors are overwhelmingly in their own minds. $83 is the Goldman price target. That represents a 37% downside. You've got positive notes on Microsoft, positive notes on Amazon, but I can't get past this Goldman $83 price target, Pete.
Well, and they've been there for a long time, Scott, and they've been wrong for a long time.
CCIV
and I think
20
it's always
calls.
good to point out who's
April
been right and who's been
23rd,
wrong, who do you want to follow, who's, and that's why for I don't know how many years you've gotten tired of me saying, hey, look, I listened to Katie Huberty. You had just mentioned Katie Huberty. What she was looking at was not just the phone and not just this and not just that.
T31
she went
calls.
directly to
May
services.
28th,
That's where the margins are.
2021.
That's where they continue to grow.
520 contracts.
And she's talking about how they're seeing iPad sales as well, and that sort of category where we didn't have that in the past. Maybe they've pulled forward a little bit there, but I think going forward for a long period of time now, I think we're going to see that folks are going to go more and more and more, especially
calls.
in the hybrid society.
April
They're going to need
23rd,
to upgrade. They're going to need more memory. They're going to need more
500
speed.
contracts.
And all of that, I think, bodes well for companies like Apple, for Microsoft, and some of these others that are in that world of competition. I think on the Apple side, you've got to listen to Katie because she's been far more right than just about any other analyst out there. And she has been talking about and pounding the table about some of the different growth aspects that she sees going forward. And if she's right on some of the growth that she's projecting going into this next quarter, talking about an 80 billion quarter, and she's also talking about adding to and buybacks, the 60 billion in buybacks, putting the dividend yield that much higher, maybe jumping it by 10%. There's a lot of different categories that I think make Apple really, really interesting going forward. And I understand what you're saying about the Goldman Sachs. I don't understand how long they've been wrong and how long they want to wait on this particular call on Apple, because they have not been close for a long period of time, Scott. This has been a stock that's been trading plus 120, plus 125 for this year, even though they haven't really produced much, and like you said, unchanged essentially for the year.
Yeah.
But still, that's $40 away, right?
I hear you. Look, I mean, I would have a counter. I would try to come up with some counter for you, as I try and do. I don't have one, though. I mean, the numbers don't lie, and that's just a fact. However, the weakness in the NASDAQ, Pete, is one of the reasons and one of the warning signs that Jonathan Krinsky is watching closely. He's the chief market technician at Baycrest Partners, back with us and a frequent guest. So you say, it's good to see you, by the way. Thank you for coming on today. You say the breakdown in the NASDAQ internals is either a warning for the broad market or an opportunity for those names to catch up to the indices. Which you think it is? Because that matters.
It does. I think we think it's a bit of a warning.
30 calls.
And part of the reason,
May 14th,
just to
2021.
Kind of, flesh it out a
500
little bit.
contracts.
The NASDAQ Composite, which has about 3,000 securities, was near a 52-week high. It's above its 50-day moving average. But over the last few weeks, we've seen deterioration in breadth, and we now only have about 30% of the index above their 50-day moving average. And a lot of that weakness is coming from the more speculative areas of the market, the SPACs, some recent IPOs, some of the China tech names, clean tech, the electric vehicle names, all this stuff that was kind of viewed as a bit frothy and parabolic in the early part of the year. That's come down, and it hasn't been able to bounce back with the NASDAQ. So that's really where you're seeing the deterioration. And when we look back historically, when you see these type of divergences in the NASDAQ, there's been a couple times, notably November 07 and October of 18, where this divergence obviously did lead to a meaningful, bigger pullback in the market. And the other times actually was what you said. It was more just a time for those lagging stocks to kind of catch their breath and play catch up to the index. But on almost every occasion, even if it was within a strong cyclical bull market, you saw some weakness over the ensuing couple of weeks. So I think that's consistent with what we've seen the year-to-date pattern so far this year, which is you've seen very strong gains in the first half of the month, and then you've given back, you've retraced some of that in the back half of the month. We were up over 5% by the midpoint of April. And I think a lot of good news has been priced in. You're coming into earnings season. You saw what happened with Netflix. So I think there's just going to be a little bit of a choppy pullback here.
42
And,
puts.
we think the S&P
January
could actually probably pull back
21st,
to
2022.
3950, which sounds like a big
907
pullback,
contracts.
but it's really just kind of retest that trend line and shakes out some of the new longs here.
And then you think we would reload and then have another go at it?
Yeah, I think so. Some of the other things you've been talking about over the last couple of weeks is that we actually, while the NASDAQ breadth is very weak, on a short-term basis, you have long-term breadth, like 95% of the S&P is above the 200-day moving average. So that kind of speaks to the long-term strength. So it's kind of, there's a little divergence where you're getting short-term weakness within a long-term uptrend. So I think if you get back to 3950, 4,000, that would be a good point to reload. I just think right here, the risk reward is not very good.
Yeah, interesting. Appreciate your time as always, Jonathan. Thank you. That's Jonathan Krinsky with the call there. Joe, I'm wondering what you think of that. And also, in looking for areas of froth in the market, some are clearly looking at crypto. Like, again, I mentioned Scott Minerd at the top of the show, who was on the network this morning. He's looking for a major correction in the near term. He calls Bitcoin, for example,
SPY.
quote, very frothy.
416
He's looking to a
calls.
pullback, and this is a significant
April
one.
23rd,
20,000 to
2021.
30,000.
600
50%
contracts.
decline in Bitcoin. I wonder what the broader stock market would do if that happens. He is bullish over the longer term. I bring this all up because before I go, I want to talk about Coinbase, which you bought. We mentioned that, right? Your order was filled at 325. You sold yesterday at 315. That's it? That was quick.
Yeah. Now, it was quick, but I told you the other day I was uncomfortable with it. And I was going to be very impatient. Scott,
700
basically,
puts.
Coinbase
April
spent 90
23rd,
minutes
2021.
trading above 350 on the first day that it's
315
open.
contracts.
In the 6 subsequent days, it has not developed any positive price momentum. I still think fundamentally the company in the long term is going to have the ability to grow its earnings and see a higher share price. But in the near term, I didn't want to accept the risk that there could be a further deterioration as this company tries to find what the right pricing coming off this IPO is. I didn't want to take that exposure in this environment, so I'm going to move to the sidelines. I'll take another look at it at some point.
Okay. We are going to take a break. I do, though, before we do that, I want to show you UiPath. It is an IPO today. It's one of the biggest software IPOs ever, and it has just begun its trade. It's up just shy. Oh, there it is. I was going to say just shy of 17%. And right before I did that, of course, it burst above a 17% gain. 65, pushing 66 bucks. We're going to talk more about that coming up, and we will debate software stocks as well. We're back in 2 minutes.
ITUB. 4 puts. January 21st, 2022. 900 contracts. SPY. 414 calls. April 26th, 2021. GDX. 36 puts. May 7th, 2021. 2,000 contracts. UAVS. 7 calls. May 21st, 2021. 500 contracts. QS. 35 calls. April 30th, 2021. 589 contracts. UAVS. 7 calls. May 21st, 2021. 501 QS. 35 calls. April 30th, 2021. 740 contracts. UAVS. 7 calls. May 21st, 2021. 503 contracts.
Welcome back. I'm Rahel Solomon, and here's your CNBC News update at this hour. President Biden wants businesses to give their employees paid time off to get vaccinated and for recovery time if needed. He's announcing a new tax credit to pay for it. That'll be offered to small companies and nonprofits with fewer than 500 employees. A dozen governors are urging the White House to set a path to eliminate greenhouse gas emissions from cars and trucks by 2035 for most vehicles and then 2045 for larger trucks. In Afghanistan, U.S.-backed peace talks have been postponed. Taliban leaders have dismissed the conference, and no new date has been set. And winter apparently not letting go. Buffalo, New York was covered in snow by the time rush hour was over this morning. Up to 5 inches is expected, blowing away the previous record for April 21st, which was just over 1 inch. So, Scott, apparently it's rare, but clearly still possible. I'll send it back to you.
Yeah, I don't even want to see those pictures. Just get them out of here.
Nah, no energy like that over here.
Yeah, exactly. All right, Rahel, thank you. Shares of UiPath, as I said before the break, are trading now. It's one of the biggest software IPOs ever. Our Leslie Picker following the money on this IPO, as she does for all of them. So how are we supposed to think about this one?
Yeah, so I would say this one is a perfect reflection of what's been going on with its peers in the publicly traded marketplace. You look at a lot of the recent activity among software stocks recently, and we have a great chart that can show you some of the bigger names off of their recent highs. You can see a major revision in how investors are valuing software right now. UiPath, their decision to go public right now is a perfect reflection of that. So you can see Snowflake off 46%, Zoom Video off 45%, Qualtrics 39%. And so the way that these IPOs are valued is they basically take companies that are similar, whether it's business model or customer base or so forth, and they pull together all of those inputs. They say, this is how we should value a company, a new issue like UiPath in the public markets. Well, when you have those peers, those comparables in the publicly traded markets that are down significantly like they are here, you have to take a step down in the valuation for these IPOs, maybe more than they would have wanted. For example, UiPath right here is at 65.48. That is just about in line with where they raised money back in February at a $35 billion valuation. Their IPO pricing, however, during their roadshow, they were actually looking to price significantly below that round and then raise the price range and then priced above that price range, but still below their latest round from February, which is just the perfect microcosm of what we're seeing in the software industry as a whole right now in the publicly traded markets.
There is a lot of talk, too, about the private down round, right? When sort of looking at that company and then gauging what the IPO was going to look like. Do you know off the top of your head, and forgive me for just throwing this at you if you don't, like what kind of price to sales we're talking about with a company like this? Only because it was such in focus with a Snowflake, for example, which was, in the stratosphere.
In the 70s, yeah. When Snowflake went public, I think it was about 70 times. This one's about 52 times annual revenue at the IPO price. So trading a bit above that right now, maybe about 53 times. So significantly higher than most software stocks that you think of. Still below that of software, but higher than almost all cloud stocks that we've been tracking. So it's certainly not cheap on a price to sales metric by any means. But, from a psychological standpoint, if you're an investor and you say, OK, well, it's still coming below its latest private round. So, maybe we are getting a bit of a deal here. Another important kind of technical factor for this one, they're only floating about 4.5% of the stock. Oftentimes when you see that, you do get quite a bit of pop because of the various supply and demand dynamic. Now, this is a $1 billion plus IPO, so there is that. But, 17%. We're not used to seeing 17% for software IPOs within the last year or so, especially
April
some of the bigger
30th,
ones that were
2021.
heavily anticipated, such as this one. Now, I think people who will look at the IPO process would say 17% pop is perfect because that means they didn't
April
leave
30th,
as much money on the table. But just kind of noteworthy for, especially as we look at what's gone on with IPOs in the software space over the last few years or so.
Yeah, you can't win either way.
You can't.
Right? All right, Leslie, I appreciate it. Thank you. That's Leslie Picker. Joe, I don't think I have any takers on this one on the desk, even though, as we said, it's one of the biggest software IPOs ever, right? Nobody's raising their hand saying, I'm buying this thing, right? I know Pete's not from what he said about these other high-flying names. Joe, no?
Nope. No, I'm not going to buy this one. I'm going to take a look at it. I'm also, I've been watching Snowflake. I think what you want to do is let there be several quarters where you get to understand not only what the earnings are going to look like, but also how management communicates with investors. I think that's critically important.
May 21st,
that's been what I've done in the last couple of years as it relates to IPOs.
500
I think
contracts.
that's more of the prudent strategy.
All right. Up next, our call of the day. It's on a financial stock. It's doubled over the last year. We'll see how much more room is ahead. Plus, as you know by now, April is Financial Literacy Month. We here at CNBC are committed to sharing messages from business leaders about the importance of financial education. Here is Dallas Mavericks owner Mark Cuban.
The best financial advice I ever got, number 1, don't use credit cards. Number 2, spend less than you make. Number 3, invest in understanding finance. If you don't understand finance, it's awful hard to know what you're doing. Good luck, everybody.
VIAC 36 puts. May 7, 2021. 590 QS 37 calls. May 21, 2021. 649 contracts.
That's our call of the day. Morgan Stanley upgraded at Berenberg to buy. Price target goes to $91. They say it has more room to run. It's about $79 right now. Joe, you own Morgan Stanley. Is it going to get to $91 or beyond?
Oh, I sure do own Morgan Stanley. What took them so long to finally come around to it? They've had a hold on this stock since 2017. The average 12-month price target is $91. Yes, I think it's going to get there. It's going to get there on the strength of capital markets and global wealth management, and clearly the integration as it relates to E-Trade. So I like that they're finally coming around. I wish they do the same with Goldman Sachs. They have a hold on Goldman Sachs. I don't understand that.
Yeah, speaking of Goldman, Amy, you own Goldman and JP Morgan.
Yep. Yeah, we have been underweight financials for a long time, closed that towards the end of last year,
2021.
Still a little bit under market weight. But these
GM
is financials
59
time
calls.
to shine. If they don't
May
work
7th,
now,
2021.
with yields rising,
1,412
There's still
contracts.
overcapacity in the industry in general. lack of demand for loan growth is a problem, but they're cheap certainly relative to the market and even absolutely. And this is their day. This is what we've been waiting for financials.
All right, Rahel's back with us. She has some more calls that we need to talk about and trade as well. Rahel?
Hi again, Scott. Yeah, so let's start with Pepsi getting upgraded to buy at UBS. Target bumps up $20 to $165 a share. Analysts here, Scott, expect further revenue and earnings growth from investments already underway. Also thinks that compared to its peers, Pepsi's valuation is compelling. You can see shares are up less than 0.5% right now. Deutsche Bank is naming United Airlines a catalyst buy idea. Shares are down about 15% in the last 2 weeks, and the firm thinks that's a bit extreme and sees recovery in travel demand also continuing. And then Citi is opening a positive catalyst watch on both AbbVie and Bristol Myers. Analysts say that both stocks have been held back because of concerns related to one of
April
Pfizer's
23rd,
drugs, which could then lead to more
2021.
labeling restrictions on related
700
products. But Citi
contracts.
thinks that both AbbVie and BMY will be able to escape those labels. Analysts also like that both companies, their acquisitions with Allergan's commercial focus helping AbbVie and then
DSX.
Bristol Myers pipeline
5
getting
calls.
a boost from its Celgene
June 18th,
acquisition. You can see Bristol Myers
2021.
up about half.
995 contracts.
Thank you very much, Rahel. Pete, let's talk Pepsi first.
Yeah.
Right? You also own Coca-Cola, but
Sure.
for the purposes of this upgraded to buy UBS 165 from 145. You buy it?
It does. It makes sense to me, yeah, Scott. I mean, when I look at this name, they have grown so well into where they are that they trade virtually at the same PE level that they've traded at in the past. So they continue to grow. They continue to grow in many, many categories. So, yes, I think there's plenty of upside, and I think that 165, that might even be a little bit light in terms of depending on what their
WB.
time frame is for that. But yeah, and
56
I know
calls.
everybody's got a little bit of a different
May
one, but I
21st,
think there's plenty of room here still
2021.
to the upside for Pepsi and for Coke.
1004
Jenny,
Mark.
AbbVie, Bristol Myers,
2
both
calls.
are in your book.
May
And they are both
21st,
positive
2021.
catalyst watches over at Citi.
1320 RKT.
Right, so this has to do with a
20
study that's
calls.
going on at Pfizer.
April
that,
23rd,
that had some potential
2021.
FDA concerns coming up on it. It sounds,
499
according to Citi,
contracts.
like as of next week, those concerns will be removed, which would be a boost to potential future revenues for both AbbVie and Bristol Myers, even though it's different drugs at both companies. So we own both of them and are happy to see the clouds lifted ahead. Think that there's plenty of room for upside.
Okay. There you go. Both stocks in the green today. Pete has unusual activity coming up next. We'll be right back.
NXPI. 215 calls. April 30th, 2021. 2,300 contracts. Baba. 230 calls. April 23rd, 2021. 400 contracts. F11 puts. June 18, 2021. 2,913 contracts. CVX 101 puts. May 21, 2021. 1,500
Unusual
contracts.
activity, Pete. What do you have for us today?
Yeah, I'm going to start off with one everybody knows. You mentioned it earlier as well, Facebook. Now, Facebook was under a little bit of pressure today. Stock was trading right around $300, Scott, and we had a buyer of the April 30, so not this Friday, but the following Friday, expiring options. They're the 305 strike calls. And they bought 9,000 of these, Scott. Now, there's a fair amount of premium there as well, but there's also a little bit of time for these to work. They were paying anywhere between $7.30 all the way up through $8 for these options that will expire, as I say, in a week and a half. That does include earnings, which is on the 28th. Next, I've got for you FXI, which is the China large cap ETF. Now, this is one that, if you look year to date, started off the year around 46.5. It's about where we are right now. It did get up towards 54 in February, but it's pulled right back down to that level again, like I mentioned, at 46. So a big buyer of July 49 calls, about 7,000 of those getting bought there for about 80 cents. Now, last week or a couple weeks ago, they were buying the June 49s. Now they're buying the July 49s and hedging those off as well. So somebody out there expecting some sort of recovery in the FXI in the next couple of months.
Good stuff, Pete. Appreciate that. Thank you. Ask Halftime's coming up next. You can send your questions by video. We'll play them on the air. You can email us, askhalftime@cnbc.com. We're back right after this break.
TSLA. 735 calls. April 23, 2021. 201 contracts. Cube. 35 calls. June 18, 2021. 5,006 contracts.
All righty, we're answering your questions now. First up, Joey, I have a video question for you.
Cube.
Hi, my name is Mark Marshall from Sarasota, Florida. My question
June
is
18th,
CarParts.com.
2021.
After doubling
5,500
in
contracts.
price recently and having two good quarters, the stock is now floundering around 14. I was wondering, is that a victim of the reopening trade or just temporary?
QCOM.
Thank you.
125
Joe, what's the
puts.
answer?
June 18th,
Mark, that's a great
2021.
question. Yes, it is a victim of the reopening trade.
3,402
This is a
contracts.
pure play e-commerce auto parts story. They next report earnings on May 10th. If you're long the stock,
RLX.
I want you to put a stop
12
in
calls.
below the 200-day moving
July
average, which
16th,
sits at
2021.
1393. Let's wait to hear
1,000
what's going to
contracts.
occur on earnings. And what's really cool is they do earnings calls in the traditional sense, and then an hour later, they jump on Clubhouse to talk to the retail investing community.
Oh, okay, that is cool. Thank you for that, Joe. Thanks for the question as well, Mark, down in Sarasota. Pete, a video question for you now.
Hi, this is Carlos Manzano from New York City. Thank you for your great show. I would like to ask about Palantir and space. I think they have potential for the future, and I would like to hear your perspective. Thank you.
Pete, you own Virgin Galactic shares, so what do you think?
Yep. I think there's potential for the future as well. The problem lately has been that Sir Richard Branson's been selling some of his stock. ARK Investments been selling some of their stock. There's a little bit of pressure on the company right now. They do bleed some cash, but they got a great balance sheet, Scott. So I continue to own this stock. I sell options against it. I have since I started owning the stock. I get a lot of premium there, and it gives me a little bit of comfort, at least some downside protection by getting the kind of premiums I am for selling upside calls. But I like the company, and I still think there's plenty of upside.
Okay. Amy, to you from Janice. She says, I hold Chevron, which is 17% of my portfolio. That's a big number. Have $46 a share cost. Hold, buy, or sell. What do you think?
Well, at 17% of the portfolio, I would trim. Congratulations on a great purchase at $46. You've more than doubled your money. I think 17% is a big part of any portfolio, probably too big, so I would diversify a little bit. But in general, we like the energy sector. There's been years of underinvestment. We still think the stocks are attractive. We could have a major summer driving season. So I like the fundamentals for Chevron, but you've made a lot of money and it's probably too big a percentage of the portfolio at this point.
Okay, Jenny, lastly to you from Art in Vancouver. Hi, Jenny. Saw your Medical Properties Trust pick recently. Thoughts on that one versus Physicians Realty, DOC? What do you think?
Frequently when I research a new investment for the portfolio, I don't look at just one company. I look at that company and its peers. So in this case, I was actually actively researching Medical Properties as well as Physicians Realty. And it was interesting because they're both fantastic stories. Medical Property owns hospitals, Physicians Realty owns medical office buildings. They're both really good businesses, really stable cash flows, great stories. And this is where we get back to what I said earlier in the show, where the story needs to work in concert with the valuation. So here's where they diverge.
Baba.
With Medical Properties Trust, you've got something that trades at 14
calls.
times, 5%
May 7th,
dividend yield,
2021.
6% earnings, no, sorry, 8% earnings growth,
269
3.5%
contracts.
dividend growth. With Physicians Realty, you've got 0% dividend growth, 4.7% earnings, 18 times.
SLM.
So you actually have two great
20
stories,
calls.
but one that also has
May
a great valuation,
21st,
and that's Medical
2021.
Properties. So I would go with that over Physicians Realty all day long.
5,540
Story has
contracts.
to match the valuation. I like that. We're going to talk about that a lot. Jenny, thank you. All right, final trades are next.
SLM.
Have a question for the
20
Halftime
calls.
Investment Committee? If you
May
want to send us a
21st,
video, we can play it on
2021.
air. Email us.
8,000 contracts.
AskHalftime@cnbc.com.
LAZR. 20 puts. April 23, 2021. 870 ACMR. 70 puts.
Missed
June
the show?
18th,
Don't sweat it.
2021.
The Halftime Report now has a
833
podcast.
contracts.
Market-moving interviews, call of the day, unusual activity, and of course, Ask Halftime. Look for us on Apple Podcast or your favorite podcasting app, and subscribe to the Halftime Pod today.
SLM. 20 calls. June 18, 2021. 1002 contracts.
Final trades in just a moment. But, Pete, you do have a new buy, and it is Toro. Tell us, TTC.
Yeah, I love this name, Scott. They do a great job. They have incredible growth right now in their earnings, and it continues to accelerate to the upside. And when you take a look at their balance sheet, it looks phenomenal as well with their free cash flow. So the combination of that, and throw in there that the pros, as far as the sales go, the pros, that's going to be up about 9%. You take a look at the residential, that's up about 30+%. There's nothing but growth going on here. They've built themselves an incredible business, and that just continues. So I love this name right now. That's my most recent buy.
I have to talk to Farmer Jim to see if he agrees with this one for obvious reasons. We'll see. And he knows a big Tractor Supply guy.
Yeah.
So, but he drives like a Japanese tractor. I never even heard of it. Not even a Toro or Deere or anything like that.
40 puts.
But that's another story for another day.
April 23rd,
Pete, thank you.
2021.
Amy, do you have a final trade?
526 Inda. 40
morning,
puts.
80% revenue growth.
April
This is the big
23rd,
winner
2021.
with,
529
Okay.
Inda.
Jenny?
40 puts.
Viacom,
April 23rd,
9 times earnings with a
2021.
2.5% yield. Great content library that's already
555
produced and paid for.
contracts.
Okay. Joe, quick, and then Pete with a quick name.
IHI Medical Devices ETF all-time high.
Pete, quick.
I'm going to give you First Solar.
All right. Appreciate it. Thank you. The exchange is now.
And thank you, Scott. Hi, everybody. I'm Kelly Evans, and here's what's ahead of us today. Buy the dip is something you're often told from strategists on Wall Street. But what if there aren't any dips to buy? Plus, Inspiring America will speak with one of the key researchers behind the Pfizer vaccine about the breakthrough technology and why she's not overly concerned about all those COVID variants right now. And as Apple announced its new lineup this week, a key supplier was suffering a multi-million-dollar ransomware attack aimed at stealing Apple's product blueprints. We'll tell you what we know on this developing story ahead, but we do begin with the markets, and Dom Chu is here with the very latest for us.
And people
Dom?
did buy the dip, Kelly, because you're seeing green on the screen today so far. Even the dips from this morning, they were pretty shallow. We were marginally lower for certain of the indices, but you can see here decently higher, up by about 2/3% for the Dow Industrials, now 34,050, the last trade there. 4158 for the S&P, up by about 0.5%, and the Nasdaq, similar percentage gains, 13,862, the last trade there. Powering some of the gains today has
May
been some of the dip
21st,
buying in
2021.
the reopening trade type stocks, the ones that are banking on the economy
INTC.
getting going again. Norwegian Cruise
65
Lines on
calls.
travel side of things up about 7%.
August
They're
20th,
helped by an analyst upgrade
2021.
over at Goldman Sachs. United Airlines
709
also
contracts.
1.5% gains there. Caesars Entertainment on the casino side and Occidental Petroleum 5% gains there for the oil and gas giant. So we'll talk about those particular moves. And then, of course, the IPO du jour, the IPO of the day, UiPath, those shares opened up at 65.5 after pricing at $56 a piece. Now, one measure of market value at that level of pricing for the IPO price puts its market value at around $31 billion. It got up as high as around $70 and change. That puts its
SGX.
valuation upwards of nearly
75
$39 to $40
puts.
billion. So
May
this automation
21st,
software company is certainly
2021.
one of those stocks to keep an eye on. It signals perhaps
593
there is still an
contracts.
appetite for even traditional IPOs, especially when it comes to automation software and that sort of thing, Kelly.
$40 billion is a huge number, even if it was a very small float. But, Dom, I want to ask you about what we were just talking about. With all the market volatility in general the past few months, we haven't seen any big major dips other than a couple of brief pullbacks, right?
They've gotten shallower. I mean, one measure of stock market volatility is the S&P 500 volatility index, the VIX, so to speak. It's around 18 right now. To give you some context, the longer-term trend lines are around 20. It's still very, very, very shallow in terms of volatility. But take a look at the S&P over the last year. The last time we saw any kind of a real dip, really, you can see that was about an 8% dip back in June of last year. Here in September and October, those were the bigger ones. We were down roughly 9-10% at that point there. And then you can see here the dips we've seen as of late, much shallower. We're talking 3 to 4% at that level. So yes, the stock market volatility has gotten shallower and shallower the closer we've got to these levels we've seen today. That's a worrying sign, though, I will say, Kelly, for some traders out there who think it's a sign of complacency and that we could be due for a deeper pullback at some point. But right now, the markets are constructive, still near record highs.
Now we're going to talk to my next guest about whether he is worried about that or not. Dom, thank you. Let's dive a little deeper into why the dips are drying up lately and what it tells us about the stock market staying power. Joining me now is Brian Reynolds. He's the chief market strategist at Reynolds Strategy. Brian, it's good to see you again. Welcome.
Welcome back, Kelly.
Thank you. So let's put it this way. You have also highlighted the fact that the dips are going away lately. Are you worried about that, though, or do you take that as a positive sign?
October 15th,
I view that as a positive sign because
2021.
the forces driving this
617
equity bull market are
contracts.
stronger than the last bull market. Back then, from 2009 to 2020, it was just debt-fueled stock buybacks. Now those are coming back. I had said they were dead last April. Now they're coming back. But we're also seeing retail participation. We're also seeing new forms of shadow banking, which is non-traditional lending. So we're seeing companies like insurance companies find new ways to lever up their investments to try and get higher yields than the market's offering. So this is more powerful than the last bull market.
That's remarkable because we've often spoken about how big a contributor stock buyback, corporate stock buybacks are to an ongoing rally and to an ongoing expansion. We thought maybe it was unique last time around. Maybe with the pandemic, people were going to use their money to pay down debt instead of starting stock buybacks again. But as you point out, Kohl's, if anybody who's been hurt by the pandemic, Kohl's increased the size of its stock buyback. How about this? Procter & Gamble raised its buyback by $1 billion yesterday. Netflix approved a $5 billion buyback program yesterday. Whirlpool, $2 billion repurchase program Monday. Bank of America, $25 billion approved last Thursday. And the Kohl's program that I already mentioned. How big on aggregate here are we talking?
I think by the end of summer, it'll be easier to list the companies that are not doing buybacks than the ones you just listed. During the summer, there were less than 100 firms buying back stock. 2 months ago, that was up to about 145 companies. Now it's up to about 177 companies. So I think once again, we'll see more companies, most companies in the S&P 500, doing stock buybacks, But this time around, we've also got retail participation and we've got increased shadow banking. That doesn't mean we won't have any dips going forward. I've written that I think we'll have another taper tantrum sometime in 2022. But I think the dips will be shallower and briefer than we saw in the last bull market on average.
So 2 follow-up questions on this. The first, a lot of people ask, isn't this sort of a frothy sign? And don't companies always buy at the highs? I mean, they are not known for being good stock timers. What would you say about this idea that, companies just keep buying at higher and higher prices, and maybe that itself is something that you'd want to lean against instead of chasing?
Well, it went on for 11 years in the last cycle. So the only way to time it was when the credit cycle ended, and that happened when the virus kicked in. So if the
May
virus hadn't
21st,
kicked in, they'd still be buying stocks, and we would probably still be
500
around these
contracts.
levels. We had a detour because of the virus. I said that stock buybacks were dead, and they were for about 6 months. I said debt buybacks would be ascendant, but I thought it would take a year for the debt buybacks to happen. It took 3 months.
Wow.
And then we did it again. We refinanced twice. And now junk bond yields hit an all-time low a few months ago. They were only a few
May
basis points above that. So every company that comes to the bond market is borrowing near the lowest
contracts.
yields ever. That gives them more borrowing power, and they're increasingly using that to buy back stock.
So you hear all this, Brian, and you wonder if this is just too much financial engineering, or to put it differently, is there a macro case that can continue to support this? And to add on to that, if everyone goes, geez, I listened to this Brian guy and I think he's right,
July
and we saw it last time, we're going to see it this time, so I'm going to go triple leverage up long, and it fuels this kind of market euphoria. I mean, we've seen it in GameStop, we've seen it in parts of crypto, maybe for different reasons, but what happens if the entire investment universe suddenly goes, you know what, I want to be overly leveraged and long?
We're not at that point yet, and I'm not encouraging anyone to go out and lever up their own portfolios. They need to make decisions based on their own circumstances. But our main investor are public pensions. Number 2 is insurance companies, and they're bringing in money hand over fist. And the money, the yield they need to make is around 7.5% for pensions, around 6% for insurance companies. The yields are at all-time lows, around 4% in junk. That's a historic gap. That means that every tax dollar that our pensions bring in, every dollar that insurance companies raise, has to be invested as aggressively as ever in the history of finance if they're to make their above-market yield bogeys. So we're just beginning this process. I think it's going to intensify over the next few years. Whether that's a good thing or a bad thing, I can't moralize, but I can say that I think it's going to increase.
Well, and I take your point. So where does this leave the Fed? You mentioned the taper tantrum
18
concern.
calls.
Do you think we can start hearing them talk about asset prices? I mean, we're not there yet, obviously, but if it gets to that point.
1,356 contracts.
I think we will hear them talk about that, but one of their main priorities is to reliquify the banking system after a crisis. And the virus really got bank assets and liabilities out of whack. So the Fed, I think, is going to keep rates low until banks reliquify. Now, last few weeks, we've taken a big step toward that. We've seen record amounts of bank bond deals as investors, again, those pensions, those insurance companies are rushing to fund them. But that's created a situation now where banks and bond investors are competing against each other to see who can give away the most money to companies on the easiest terms. That process just began in the last week and a half or so.
Pretty good time to be maybe in the treasurer's office in corporate America. It's fascinating the way you connect all the dots, Brian, and it's unconventional. So we appreciate it very much. Thank you. See you again soon.
Thanks, Kelly.
Brian Reynolds of Reynolds Strategy. Speaking of the bond market, we're getting some results from the 20-year auction today. Rick Santelli has more. Rick?
Yes, Kelly, this is the 12th 20-year auction since they brought it back, and this was a good one. The grade for demand at 1 a.m. Eastern, I gave a B+, Boyd plus. Let's go through it. The yield at the Dutch auction, 2.144.
416
now,
calls.
That was lower than when the
April
when issue was
23rd,
traded.
2021.
So lower yield, of course, is a higher price.
500 contracts.
2.42 bid to cover, well above average. But here's the real highlight. On indirects, which is kind of like pension fund, the foreign entities that we like to pay closest attention to, that was the weak link at 58.7. But direct bidders, hedge funds, pension funds, like the gentleman was just describing, all those buyers in the Treasury market, they were aggressive. 20.2, the highest of all 12 auctions, and dealers took the least amount at 21.1% of all the dozen 20-year auctions. So some big highlights there that really do accentuate the notion the long maturities still find some love on the investor side. Santelli, back to you.
Rick Santelli rounding things out for us. Thank you very much, Rick. Let's turn now to Netflix, seeing a big drop today after those disappointing numbers last night. Company only added 4 million global subscribers in its first quarter. That was far below the street's 6.1 million estimate. But Stifel's Scott Devitt is upgrading the stock to a buy, and it's because of the bad quarter. He joins me now to explain. Scott, it's good to have you. Tell me why.
Well, if you go back to 2020, I mean, Netflix clearly had a pull forward in its business, and we actually downgraded the stock on the back of the first quarter last year when the company added 15.8 million subs. It was the strongest quarter in history in terms of net sub adds by about 60%. Netflix went on to have the second best quarter in history in the second quarter, and then the business began to fade just because of the fact that there were so many subscribers that were added in the early part of the pandemic. And so we've been sitting back and just kind of waiting for the capitulation moment where the sub estimates would finally come into line with this new reality. And now we think the stock's been mostly de-risked. You could have another 3 to 9 months of kind of transition period. But when you look at Netflix on an annual basis, what's so interesting is there's so much volatility in their quarterly subs. But in 2018 and 2019, Netflix added 57 million subs. In 2020 and 21, based on our estimates, they'll add 57 million subs. It just so happens that 8 million of those subs got pulled into 2020. So there's really not a story here when you step back and look at the long-term aspects of the model.
August 20th, 2021.
Because we thought the news was
2,650
Sure, and just reiterating, you have a
contracts.
$560 price target. You upgraded it to a buy today. Why is this the capitulation moment? I mean, an 8 or even a 13% move at the lows after the kind of run it's had is not exactly capitulation, or maybe it is, because we were just talking about how there's rarely any dips to buy in the stock market and how they've been one of the people involved with stock buybacks. But why shouldn't the stock be dead money for a while? What's the case for it to accelerate higher when all of that growth you're talking about is now in the past and not in the future?
It could be. And, what's interesting is when you look at the history of Netflix, they tend to miss a quarter a year on average. This year's unique. Last year was quite unique. And so it's possible that this period lasts longer than a 1 quarter reset. And that's something that we said in our note. This could be a kind of 3 to 9 month window where before it's back to normal. But when you take a step back, I mean, this is a business now that trades at mid 30s to upper 30s times forward earnings multiple. That's now cash generative. We're on the verge of being cash generative.
XLI 95 puts.
That has the
June
capacity
18th,
to generate
2021.
$90 billion worth of free cash flow that can be utilized for
978
buybacks
contracts.
over the next decade. It's like it's a totally different story now, and been de-risked in so many different ways on top of just this sub number.
Sure.
Because of it also becoming self-funding during this period as well. And so I could see it at 490 to 510, 520 for some time, but this from here with a multi-year horizon is probably a 15% annualized compound.
So you mentioned the $70 million. My last question is that all going to stock buybacks? How much needs to continue to be spent on content when this kind of global appetite for content and the competitors that it has to vie against are higher than ever?
So let me, kind of clarify that comment. Netflix currently spends around $17 to $18 billion annually on content. We expect that will grow to $35 billion over the next decade. But as the company has now turned free cash flow positive, it should begin to generate cash more consistent with its operating earnings as they're taxed. And so over that time period, we anticipate that they'll have about $90 billion of unlevered free cash that the company can use to recapitalize the business, which is roughly 40% of the current market cap. So you have steady growth, rising margins, clear global leader with a reasonable PE multiple and the capacity now to recapitalize the company as they grow.
That's very interesting. I hadn't heard that argument been made before. Scott, thanks so much today. We appreciate it.
Thank you.
Scott Devitt of Stifel. Coming up, as COVID began to make its way around the world, a husband and wife team in Germany got to work and developed what is now the Pfizer vaccine. I've had the first shot. We'll speak with them about we'll speak with one of them next about what the COVID fight could look like going forward. Plus, supply disruptions have hit almost every industry, from autos to retailers. Is relief on the way, or will the logjams get even worse? That's all ahead on The Exchange.
This is The Exchange on CNBC.
Welcome back to The Exchange. We are leading up to the launch of an NBC special event called Inspiring America. We're highlighting extraordinary people making a positive impact in their communities. And my next guest certainly fits the bill. Today, we are thrilled to welcome one of the scientists behind Pfizer and BioNTech's COVID-19 mRNA vaccine, Dr. Özlem Türeci. She's the chief medical officer and co-founder of BioNTech. It's great to have you here. Welcome.
Thank you, Kelly. It's a pleasure to be here.
I have a number of questions about the vaccine and COVID right now. But first, what's it been like for somebody? You and your husband have described yourselves as the kind who celebrate over a quiet cup of tea. What is all of this attention like for you? And do you enjoy it? Or is it, do you feel like it's almost your duty to be one of the chief communicators globally about this disease
September
and how to fight it?
17th, 2021.
We are
577 contracts.
We have to be because we still are in the pandemic situation. However, we also feel that we have to communicate and be very transparent about our vaccine, the data we have obtained with it,
56
and
calls.
educate
May 21st, 2021.
As I understand, you were working with this mRNA technology to treat
1,466
cancer
contracts.
patients. You then pivoted as the pandemic struck and were able to come up with a vaccine fairly quickly. Now the concern, we've heard it from Pfizer themselves saying we might need a third shot. What would your explanation be of why that might be necessary, and do you think it will be?
Yes, I think that it will be, because it is the nature of immune responses that after they have been induced, they spike and stay for a time. But with time, immune responses wane. And we see indications for this also in the induced, but also the natural immune response against SARS-CoV-2. We see this waning of immune responses also in people who were just infected and therefore also expected with the vaccine. So yes, there will be an additional boost necessary, and we might see the situation that similar to flu shots, we would need yearly or every second year additional shots.
That said, why are you not overly concerned about the mutation of this virus? Do you think that we are being somewhat effective, or perhaps that we're not overly vulnerable to mutations causing
138
anything like
calls.
what we saw
April
as this first
30th,
spread around the globe over the
2021.
past year?
4,003 TME.
Mutations
18 calls. April
in the nature
23rd,
of viruses.
2021.
It's expected
1,001 contracts. Flood.
Natural that a
30
virus
calls.
which replicates
June 18th,
also
2021.
mutates. So what we are seeing, variants which
1,378
are
contracts.
occurring, that is not a surprise. The question is, will variants occur which escape the immune response generated either by our vaccines or by natural infections? We, at the moment, don't have indications for virus escape, at least for the variants we have circulating now. However, it's important that we continue to gather data and to analyze
NIL.
whether
38
any of the
calls.
variants which
April
occur
23rd,
escape the immune
2021.
response, and be prepared
500 contracts.
for adapting our vaccine to a novel variant of concern, which is easy to do with mRNA vaccines.
Interesting. Well, and that's somewhat reassuring. You know, the long-term question that is often everybody talks about, you know, when they're now allowed to gather together in some kind of informal neighborhood setting is, what happens if we all grow two heads, you know, in 30 years because of these vaccines we've been taking, and this reference to this idea that they're unproven and untested, and this is a giant science experiment on the population. I mean, when you hear these concerns from people who say we've all just signed up to take the same thing that we have 1 year's study about, what do you tell people to reassure them that there won't be long-lasting negative effects as a result of the vaccines that we're taking to fight off COVID?
Yeah, our vaccine and all other COVID vaccines have gone through the usual steps of clinical development, which are optimized to ensure identification of risks and mitigating them, and really assessing
a potential
INFL
risk
27
of
calls.
vaccine or of
June
any
18th,
medicine. So
2021.
in principle, the
900
way this
contracts.
vaccine was developed is according to rigorous scientific, ethical, regulatory standards. The difference to, so to say, normal vaccine development is because everyone has worked together. All these processes have been compressed, and it was feasible to develop the vaccine within only 10 months. So what I would say is that in principle, everything we could assess and which would be normally assessed for a vaccine in order to ensure that it has tolerability has been assessed for this vaccine as well. And in the meantime, as you know, millions of people have been already vaccinated, and this all happens under rigorous observation of potential effects of the vaccine and assessment of any reports of potential side effects.
Yeah, although I admit I snuck out a little early from the 15-minute waiting period myself. Dr. Özlem Türeci, thank you so much for your time today and for the work that you've done. Thank you. We really appreciate it.
Thank you.
And you'll be hearing from many other incredible individuals on Inspiring America, the 2021 Inspiration List. It airs Saturday, May 1st on NBC at 8 p.m. and here on CNBC on Sunday, May 2nd at 3 p.m. Eastern Time. Still ahead, while Apple was showing off its shiny new toys yesterday, one of its key suppliers was in the midst of a ransomware attack, and a pretty expensive one. We've got the details of this developing story. Plus, forget your credit card, cash, or phone. Amazon wants you to pay with your palm now. That story is ahead.
RBBN 7 puts. October 15th, 2021. 529 contracts. PLBY 60 calls. June 18th, 2021. 634 AAL 18 puts. June 18th, 2021. 2,500 contracts.
Welcome back to the exchange. Let's get you a check on the market right now. We're pretty much near session highs with the Dow up 230 points today. A rebound after the declines we've seen the past couple of sessions, and the Nasdaq is leading the way, up about 0.7%. Let's check on the sectors where materials and energy are your leaders today. Gains of about 1.3%, not major. Utilities, communication services, they are going the other way just slightly. Some of the individual movers include Bitcoin, hit again today and down 10% this week. It's just under the $56,000 mark despite Bill Miller's enthusiasm here on the show yesterday. Moderna is higher after it struck a COVID vaccine deal with Israel for 2022. Israel also got the option to buy doses of the vaccine tailored to treat COVID variants. We were just speaking with Dr. Aslam Turici about Moderna shares are up 6%, and shares of Intuitive Surgical are hitting a 52-week high after strong first quarter results. Procedures using its Da Vinci surgical system were up 16% from last year, and shares are up nearly 9%. Now to Rahel Solomon for a CNBC News update. Hi, Rahel.
Hi, Kelly. Hello, everyone. Senate Majority Leader Chuck Schumer says that the conviction of Derek Chauvin does not mean that the nation can move on from addressing police misconduct. He says that he will push for legislation that will end systemic bias in law enforcement. 7 Republican congressmen have pledged to not take donations from big tech companies or their executives. They accuse them of being monopolies that can threaten personal liberty. Facebook has already paused its donations, and Alphabet and Amazon have halted donations to lawmakers who voted against certifying the 2020 election results. Russian President Vladimir Putin warning the West not to threaten its security interests and promising swift retaliation if so-called red lines are crossed. Now you can see what else Putin said about the pandemic and his opponents within Russia tonight on the News with Shepard Smith. And starting today, the FAA is allowing small drones to be flown over people and at night. That is a big step towards their use for widespread commercial deliveries. And Kelly, you can only imagine all of the industries that stand to benefit from that.
And so this could be happening in my neighborhood tonight?
It appears so, according to the press release. So I'm not sure how I feel about that personally, but at least for the industries that stand to benefit, I'm sure some good news for them.
Kids would love it.
Yeah, that too.
Past bedtime. Rahel, thank you very much. Rahel Solomon. Still ahead, a key Apple supplier is the latest high-profile victim of a ransomware attack. The eye-popping amount hackers are demanding and whether the company plans to pay it is coming up. But first, once red-hot SPACs seem to be cooling off. We'll talk about what's behind that slowdown later on The Exchange. Don't go anywhere.
WMT 145 calls. May 21, 2021. 1,804 contracts.
Welcome back. It's no secret the pandemic has disrupted the supply chain, but as people emerge from lockdown and begin to spend at record levels, it could get even worse. Steve Leisman has more on just how long this could go on. Steve?
Yeah, Kelly, surging consumer demand in the U.S. and indeed around the world have ports backed up and prices soaring for shipping containers. That raises questions about just how temporary global supply disruptions and the attached price hikes are going to be. Mark Ciccone, executive editor at the Journal of Commerce, says it's like Christmas every month, and he means the volumes of shipping that's going on, which is quite remarkable. I don't see when it's ending when I talk to the container lines. Good luck trying to find space on a ship in May. The Port of Los Angeles has handled 800,000 TEUs, or 20-foot equivalent units, or containers, in 9 consecutive months through March. That didn't happen during a single month in 2019. So the problem is not that the ports aren't working. They're working overtime despite some COVID-related issues. The real problem is the global supply chain right now is overwhelmed. Bruce Kasman of JP Morgan points out that global trade volumes have actually surpassed the pre-pandemic level. He hasn't doubted these cost increases are going away anytime soon. He tells me when you run the global industrial complex hot for 6 to 12 months, there's enough pressure to push prices up. Supply disruptions, now a regular feature in many company earnings reports this season. The price increases already
2,766 contracts.
If these issues linger, the only way to deal with them is, well, you got to build ports and you have to build shipping capacity. And Kelly, that takes years, so this could be a problem that is maybe more than a bit temporary.
And everybody has their own anecdote about this. Every industry you talk to, even just, we're putting an aluminum fence across the backyard twice as much as it would have been last year, but we're trying to pen the kids in. But have all countries benefited equally from this export surge? Because a lot of it does seem to go back to China.
I'm ignoring that comment about penning the kids in, and I'm moving on to answering your question. We can talk about that offline, Kelly. But for the moment, what looks to be happening is China and North Asia, indeed, is really dominating this process. If you look at the China share of global exports, it has surged recently, so it's really taking up the slack. And interesting, relative to U.S. growth, which has been quite strong, U.S. exporters are not doing as well to this point relative to, they're really underperforming. And the reason is because they can't get, in some cases, they can't get space on container ships.
Yeah, I absolutely get it. And you don't want to build out all this extra space
April
and not need it. You'd have a horrible,
2021.
Following that.
549 TME.
Steve, we appreciate it for now. Thank you. We'll talk about penning in
April
the kids another
23rd,
time.
2021.
One of the biggest software IPOs ever.
518
Soccer's
contracts.
Super League and Palm Payments. It's all coming up in rapid fire right after this quick break. And it's Financial Literacy Month. CNBC is sharing messages from business and thought leaders about the importance of financial education. Here's the president of the New York Stock Exchange, Stacey Cunningham.
The American dream is not only about being able to start a business and earn a living, it's about sharing that success too. It's a story of shared success.
XLV
and every day here,
127
we see
calls.
companies coming in, changing
May
the world, and
21st,
allowing investors
2021.
to dream alongside
500
them.
contracts.
Financial literacy is such an important part of that, so investors know how to take advantage of the opportunities that are out there for them.
Welcome back. Let's catch you up on several stories that need to be on your radar today. It is time for Rapid Fire. Here to help us break down those headlines, John Ford, Deirdre Bosa, and Wilfred Frost, who we welcome for a reason you might be able to guess, but we're going to save that for just a couple of minutes. We're going to begin with software firm and CNBC disruptor UiPath making its debut on the New York Stock Exchange with ticker PATH today. It is up about 22%, well above its range of $52 to $54 a share. They make software robots that automate office tasks. The CEO telling Deirdre earlier he believes they can completely reshape the future of how people work. Its $34 billion valuation today makes it one of the biggest software IPOs in U.S. history, Deirdre, and nobody's talking about it. No one cares. No one seems to ever have heard about this company before outside of, you guys and us here on CNBC. Even, it was interesting. You saw Scott ask the traders about it at halftime, and they were all like, it just, no one was, why? What's the difference between Snowflake and this one?
Every once in a while, Kelly, a software company comes along that no one cares about or feels that way, and they sort of blow up. And, UiPath could be one of those. It is well known in Silicon Valley. I've had many conversations with many VCs about this company, and they are very, very excited. What it does, also, the business model is super interesting. It's in this, really edgy robotic space, but what it does, it's software that actual employees can use. You don't have to be an engineer or a developer. It grew its customers from 700 to 8,000 in the span of just a few years. And the founder is really interesting, too. He once said no to $1 billion from Masasan. And today I asked him, are you worried about leaving money on the table? And he said, no, because we choose our investors for the long term. You always have to decide. So I certainly think, even though it may not be a household name, this is one company to watch.
Fort, what would you say?
I say it's an enterprise company. Like, most people have not heard of enterprise companies, don't care about enterprise companies, even when they blow up. Now, that said, this is one of those Athena situations where it's springing full grown from the head of Zeus. I mean, $34 billion roughly. That's not small. This isn't one of those typical kind of SPAC offerings that we're seeing that I know we're going to talk about. So you got to be careful on valuation here, as always.
Actually, let's skip ahead to talk about the SPAC craze for just a moment. We'll come back to everything else. We've got new data showing that this is actually hitting a wall. So yes, UiPath, okay, it's up decently today. SPACs, not so much. In fact, we've kind of hit a brick wall. After more than 100 SPAC deals in March alone, there have been just 10 SPAC IPOs this month. That's in part to a crackdown by the SEC,
December 17th,
which recently proposed accounting guidance that would essentially mean all SPACs would have to completely reconfigure their financials, which which could be an accounting nightmare. Just 2 firms audited 90% of all SPACs over the past 6 years, Wilf. Yesterday on the show, Bill Miller told us he thought the SPAC game is winding down and that many of the names that went public came at an extraordinarily expensive valuation. So what's kind of the meta takeaway here, Wilf, do you think? Or is it just that this is an accounting flub that's going to blow up in a big way?
Well, I think clearly they have slowed down, and I guess not total surprise there because last month was such a blowout and last quarter was such a blowout. I think the thing that's interesting to me, and don't forget all those investment banks had blowout capital markets, this was a big part of it last quarter, is whether if there is more of a pullback in SPAC activity, if that is correlated with or also causing a pullback in other capital market activity. Doesn't seem that way so far based on comments from the Citi CEO yesterday, Brian Moynihan, last week. Whilst they weren't saying this boom in capital markets is going to continue forever, they weren't warning us off another good quarter to come. Whether the SPACs part of it slows down within it, seems it's not dragging down the rest of the capital market activity.
And maybe that's the way, Deirdre, to tie together what's been kind of this collapse and what's been going on with the SPACs and this kind of mildly exciting UiPath IPO that is exciting in all the ways it should be, right? But is it that there is kind of not froth coming out of the IPO space, but maybe people kind of taking a breath here?
Well, this is the key difference to me between traditional IPOs and SPACs. Traditional IPOs have to look backwards at a record of financial performance. SPACs can make these sort of huge claims about the future. The whole model to me is really curious. You have someone like Chamath Palihapitiya who burst onto the scene, told investors, I'm going to choose a great company, so put your faith and put your money into my blank check company. And then what does he do in the case of Virgin Galactic? He cashes out a few months later, and it's those retail investors left with a lot of the losses. So I just wonder if there have to be different rules, as you talked about, but perhaps different lockup periods too.
John, a final word on all this?
You know what I like about SPACs is they brought the IPO market a little bit back to what it used to be. And I know SPACs aren't IPOs, but that earlier stage company that you're really kind of taking a flyer on. Now, the accounting stuff needs to be worked out, yes, but there are too many UiPath type stories where
May
these companies are coming
21st,
to market.
2021.
There's too much
2,799 contracts.
Give investors a chance to do the research, get in on something early, become one of those couples in the next, Bezos shareholder letter that happens 20 years from now where you got in super early and put a couple bucks in and now you can send a kid to college.
Yeah, exactly. Wouldn't that be nice? Deirdre, speaking of bringing it back, the new Uber CEO is behaving a little bit like the old one on Twitter right now. What's going on? Can you bring us up to speed?
Yeah, so there's been, let's call it a Twitter spat this morning. Uber is expanding into Germany, where Just Eat Takeaway, European food delivery company, is the dominant player. So you saw this back and forth between the Just Eat Takeaway CEO,
25 calls.
And
November
Uber's current
19th,
CEO, Dara
2021.
Khosrowshahi.
532 contracts.
Here you are trying to sort of hit our stock in the short run. Dara said, don't worry about your stock price. Look at the long term. Yitzhak hit back saying, look at your labor model, which of course we know, Kelly, Uber has been under a lot of pressure. So it's all sort of this is kind of a microcosm of this really fierce battle in food delivery, right? This business that has overtaken ride sharing for Uber, that it's putting so much money and resources into. And it raises the question, how much more money are they going to spend? Just Eat, by the way, acquiring Grubhub. So this battle, it's not just on the other side of the Atlantic. It's going to be coming home, too.
This just reminds me of why I love Twitter so much, is being able to... I learned so much watching CEOs fight with one another where there's no other forum where you could see it this candidly. Speaking of Europe, this is really the main thing I want to talk about today. And Wilfred Frost, I need to hear... They create this super league, this soccer league, okay, seemingly out of nowhere, catches everybody by surprise. It'd be like if the NFL said, we're going to take the Cowboys and, I mean, who are the other big teams? I was going to say the Giants. I don't know if that's true anymore. We're going to have our own super league. We're going to have our own TV contract. You guys have to fend for yourselves. Hopefully you'll make it. The fans freak out. The whole thing implodes. And so what happens next?
Well, I mean, we go back to normal. I mean, that's what's the monumental failure of execution, as you were alluding there to, Kelly, and a massive PR disaster for the 12 owners involved. So what exactly happened initially? Those 12 shareholders decided that they would greedily steamroll the interests of their stakeholders, in this interest, the players and the fans, but they totally underestimated the power of those stakeholders, particularly the fans, particularly in a social media age. And within 2 days, it's been turned on its head. It's totally collapsed. And what I think will be interesting to see from here is whether it's more than just a PR disaster for those owners. And if somewhere or another, some of them get forced out. Of course, that would take someone to buy the club.
I mean, did they just think, we kind of like this? So how could they have gotten it so wrong?
The starting point was, and don't forget there's a few US owners here who may also have owned some US sports franchises. What they wanted to do was move towards the valuations that the NFL teams have here, which is many multiples of, say, Manchester United, listed on the US New York Stock Exchange, valued at $2.7 billion, despite having many millions more fans around the world than an NFL franchise. Why the difference in valuation? Because there's no relegation in the US. There's no need to qualify for the biggest competitions every year. And that's what they were trying to design here, so that these 12 founding members would permanently be in the top competition. They wouldn't need to qualify each year, and with that, more guaranteed revenue. And they traded their, essentially, money for merit, which is the driving force in European soccer at the moment, and the fans.
May 21st,
Here's what I love, John, about this year. It seems to continue this trend. If you look at what's happened in GameStop and crypto to some extent here, it's like the little guys, and I don't mean it, they're fighting back and they're saying no. And to me, it all kind of melds with with social media and the changes the internet brings us, which are you can harness the power of the fan base in ways you could never before. I mean, look what Taylor Swift is doing. She's harnessing the power of her fan base to fight against investors and big music labels. And I think people realize, to Will's point, John, if they don't like this deal that the owners came up with, they can literally shut it down.
I love those connections you made, Kelly. I'm just stunned that we have found yet another way that I don't understand soccer. Super League, like what are the leagues that are there already? How many teams? Manchester United, Barca, what? I don't get it. But but I love hearing
John?
Wilf talk about it. It's very important. I know it's very important, and it's football, not
It's like
soccer.
UI. Yeah.
Yeah, it's the
I'm
enterprise
so with
tech,
you on that.
of sports.
I haven't been this bewildered by a story since Dogecoin's rise earlier this week and last week, Kelly. I got nothing to add here.
Wilf, then we'll bring it back to you for a final word on this, because I think you put it well that this is a battle of shareholders and stakeholders in which the stakeholders appear to have won.
So I think the interesting thing from here, it's probably unlikely that these people will be forced to sell because there's only so many buyers with the billions needed. But in Germany, there was no German clubs as the founding 12 members. 51% by law is mandated to be owned by fans groups, and then there's an election every year for who runs the club, so the fans have a say. I think there's a high chance now that the consequence of this, and that those owners will be regretting the day that they tried to push the boundaries too far, will be some kind of law, and Oliver Dowden, the Minister for Sport in the UK, is already talking about this,
August
where
board
20th,
representation
to some level will have to contain some fan membership. And those owners will regret the day they pushed their stakeholders too far, and the stakeholders got something written into the law to protect
Why
their
do they
interests
even need
moving
a seat on the board? They've proven they don't even need one to make their case.
Well,
They're
quite.
powerful enough. Look at John's face. They're powerful enough
What
as
now?
it is. We're
That's
going to
great.
move
I
on.
love it.
Before we go, Amazon is getting hands-on with grocery shoppers, testing palm scanning at Whole Foods in Seattle. They're planning to roll it out across other locations. But the Amazon One software allows shoppers to pay for items simply by scanning their palm over a device. And they have to pair that, obviously, to a credit card the first time, but then they can just use their palm after that. Deirdre, I feel like every 2 weeks we hear, Amazon's opening a hair salon and Amazon's doing. I mean, is this a legitimate, innovation that we're going to be using and have to pay attention to?
It goes back to the Bezos philosophy. It's always day one, always be innovating. Some hit the mark, some don't. The hair salon, I have my doubts on. But Amazon is a major player in payments. I think that could be something. We know that they've been making moves in this space in terms of payments with their just walkout technology. This is a little bit different, but the question has always been, will they license it out? And in today's press release, Amazon said that they were looking at putting this in places like stadiums. So this could be another major moneymaker revenue stream for Amazon. Never count them out, of course.
Will
Maybe even the
power
hair salons.
or a
Who knows?
passing fad? What do you think?
Well, I just think that this is slightly less scary to me than what we already all do now on our iPhones, is having our face scanned. So I'm kind of a little more open to having my hand scanned. I get it, fingerprints are important and all that kind of stuff, but it's not an eye scan or a face scan. So I think if it speeds it up and it's well protected by a company that's unlikely to get hacked and has all the necessary protections, I'm kind of okay with it. Not embracing of it, but okay with it.
John Ford, final word.
I was just happy I don't have to touch anything to do it, but I'm
Right.
still not sure I want to give them biometric information. I'm fine just waving my phone over the thing to pay. I think I'll just stick with that.
Yeah, as you unlock it with your face. At least I do. John
Yeah,
Ford,
but at least
Deirdre
it's still
Bosa.
on the device.
Yeah, okay. Wilfred Frost, we appreciate all very, very much for this special edition of Rapid Fire today. Coming up, as Apple was unveiling its newest hardware yesterday, one of its main suppliers is dealing with a $50 million ransomware attack. We're going to look at who the hackers are, what they were able to steal, and more next. Don't forget, you can always watch us live using the CNBC app any time of the night or day. We're back in a couple. Welcome back. One of Apple's key suppliers is the latest high-profile victim of a ransomware attack, and the cyber criminals are demanding $50 million by May 1st. Eamon Javers has the story for us. Eamon?
MUDs. 12 calls.
Yeah, hey Kelly, the company
May
here is called
21st,
Quanta Computer. It trades out of
2021.
Taiwan. It's a supplier to Apple
659
and
contracts.
other American technology companies. The hacking group here is called REvil, and they put out this statement earlier this week announcing that they had hacked Quanta and have some technical documents from inside the company. They say, today, we, the REvil group, will provide data on the upcoming releases of the company so beloved by many. Tim Cook can say, thank you, Quanta. So to prove that they have what they say they have, the hacking group has put up documents like these all over the dark web. We have a source who went on the dark web for us. These are technical specs for some Apple products, or at least REvil says these are technical specs for some Apple products. I don't want to get too close to them so we don't show them because they're potentially stolen intellectual property here from the company. No comment yet from Apple on this. We've reached out to everybody involved, but it is fascinating and does put a decision point here for the company. Now, at the same time, the Department of Justice today is deciding to launch a new task force on exactly this issue, ransomware.
May
and they say they're going
21st,
to focus on the relationship between
2021.
the government and the private sector. They say the task
949
force will
contracts.
examine the ways the department can encourage organizations to come forward and notify the department if and when they become victims in order for the government to investigate and provide information that enables effective incident response and remediation. So the Department of Justice saying its new task force is going to go at exactly this issue, which is this wave of ransomware attacks that we've seen all across the economy that have been impacting companies, and that decision point that companies have to make now of whether or not they should pay these hackers. The Department of Justice, Kelly, says it's going to devote more resources toward intelligence and all sorts of education inside DOJ to get to the root of this problem, but a very tricky one now for Apple and its supplier.
Yeah, this is at the one end of the spectrum. Eamon, most of the activity is now happening at the other end. Small and medium-sized businesses out $150,000 trying to deal with this. How does everybody decide whether to pay or not?
Right. Well, that's the big question. It's a lot of money here, right? One company we talked to, a negotiator we talked to said he had heard of a company being hit for $70 million, in this case, $50 million. And the bottom line is, Kelly, they decide to pay based on whether or not they feel like they can stay in business without paying, right? If a company feels like it can unlock its computers on its own, it can control access to its data, then it won't pay. But if it feels like it is out of business if they don't pay, that's an existential threat.
GLD 170 calls.
This is a conversation for next
December
time, but they need more
31st,
help.
2021.
This is warfare.
593 contracts.
Anyway, you're all over it now. Eamon, we
is.
appreciate it. Eamon Javers in Washington. That does it for us today. Coming up on Power Lunch, the White House Climate Summit kicks off tomorrow. We'll talk about the impact that could have on ESG investing. I'll join Tyler Matheson for Power Lunch after this quick break.
Snap. 65 calls. April 23, 2021. 1,531 contracts. VAB. 140 calls. June 18, 2021. 526 contracts. CBRL. 155 calls. January 21st, 2022. BBBY. 30 calls. November 19th, 2021. 963 contracts. VIPs.
Good afternoon, everybody, and welcome to Power Lunch. I'm Tyler Mathisen. Kelly Evans will join me in just a moment. Stocks are rebounding today after a two-day sell-off, but what's left to buy when we're at peak everything? We'll try and give you some advice there. And are investors saying get out of the at-home trade? Netflix tumbling after its earnings report. We're going to look at these names one by one and see which could have some staying power and economic opportunity. Of the billions of dollars in VC money, only a tiny percentage goes to businesses owned by black women. We're going to talk to a woman trying to change that with a little help and a lot of cash from MasterCard. Power Lunch starts right now.
Yes, welcome to Power Lunch. I'm Kelly Evans, and we are seeing the markets head higher today after 2 days of losses.
2021.
But a lot of people are wondering if things are this good. It must mean it's time to start worrying again, right? Let's go to Bob Pisani for more. Bob?
Hello, Kelly. No particular catalyst for the move up today. Banks and reopening stocks doing a lot better, but there was no particular catalyst for the move down the last 2 days. We're just churning around right now, but there are some very interesting things happening. We're in the middle of earnings season, and CEOs are giving guidance again. I'm so happy to hear that, and so is the stock market. So we had comments today from Anthem, Tenet Healthcare, some of the Edwards Life Sciences, some of the semiconductor equipment makers, ASML, all raising guidance, as you see, all to the upside. Not a single CEO that I have seen has declined to give any guidance or commentary. Nobody's hiding behind that old story anymore. But the market's got two problems, and Kelly alluded to it earlier. One is what I call peak everything. Right now, we're in the middle of peak optimism. Peak earnings growth is happening right now. The peak of the economic cycle is happening right now. And probably the peak of the reopening news is happening. That means that a lot of this is already priced in. And how does the market move forward? That's one particular problem. There's a second problem. Even with a broad swath of the stock market at new highs, there are what I call speculative parts of the market that have taken a hit.
2021.
We've been talking this afternoon about SPACs and how they're well off of their highs. But there are other speculative sectors well off of their highs. The IPO market is represented by the IPO ETF, more than 20% off the 52-week highs. Then we had the cannabis market, which was red hot in the early part of the year. It's
635
contracts. Clean energy stocks that were so hot towards the end of last year are well off the highs. Lithium batteries, cloud computing, 3D printing, I could go on and on. I just call it the speculative part of the market. And if Cathie Wood, of course, which represents much of that, well, her big portfolio has been hit very hard. She still hasn't recovered from the big run-up in January and February and the big move down ever since then. Okay, so what does all of this mean here? There's two things that all of these have in common. The first is they had a sort of speculative frenzy in January and February. All of these sectors moved to the upside, and then in the middle of February, all of them started dropping. What happened then? That's when interest rates started moving up very aggressively. And guys, I think that's the main problem here. Speculative fever in January and February pushed these stocks up to new highs, and then the concerns about higher rates pushed them down, and they've been trying to play some kind of catch-up ever since then. Guys, back to you.
All right, Bob, thank you. Guggenheim's Scott Minerd also weighing in about his expectations for a volatile market earlier on CNBC. Here's what he said.
We will at some point here see some moderation, if not some decline in equity prices, I think, over the coming months. And that would reinforce a desire to do portfolio reallocation toward fixed income.
But my next guest says don't take your foot off the gas just yet. Let's bring in Brian Belsky. He's the Chief Investment Strategist with BMO Capital Markets. Brian, it's good to see you. So explain the bullishness, not so much maybe as it relates to the very, very near term, but how do you make a structural case for higher stock prices over the next couple of years?
Well, anybody that just listened to Bob Pisani got a wonderful tutorial on what's wrong with the market and why people were chasing too much momentum in January and February, Kelly. I think we're still, as investors, making too many binary decisions. In 2019, it was all the big cap tech stocks. In 2020, it was the stay-at-home stocks. In 2021, we saw a lot of those heavy, more speculative names like the SPAC-driven names and the lithium names and the clean air tech and those Cathie Wood type names really recover. But anything, more than anything, the value names. And so I think this momentum trading has to stop, and we have to be more diversified. And I can make a case with respect to stocks from here. We think stocks are higher a year from now. We think bond prices are lower a year from now. Yields are going to be higher. I think bonds are the speculative era. I mean, think about this, Kelly. We've had a 39-year bull market in bonds, and I think that's where the stress on is. And think about this also. Lastly, $2 trillion at least of money sitting on the sidelines. Institutional investors have underperformed. I think dips will be bought. I don't see a deep correction of more than 10%. We could be choppy from here, Kelly, and consolidate, but I don't see a deep correction. The more people are looking for a correction, the more likely it will not happen.
Yeah, no, we were talking last hour about how the dips are disappearing. Let me ask you, though, about, you make a really interesting and important point about technology, saying a lot of people bailed on that trade too soon. What do you mean by that?
Well, I think they saw bond yields heading in the wrong direction, and I think they rushed to judgment on tech. I mean, think about this, Kelly. We would not have a vaccine without technology. We would not have these unbelievable productivity gains without technology. We would not have been able to socially change the way that we have the last year or so and turn to this normalcy trade that is really stay at home. And we talk about the communication services names as well, but technology made that happen, whether or not it's the consumer tech names like Apple or the productivity names or the software names or the payment names like PayPal or Visa or MasterCard. I think technology is here to stay 3 to 5 years. It still remains one of our 3 favorite sectors. I think for the next 12 months, clearly you want to be more focused on cyclical, especially those areas with strong earnings and strong themes like financials especially. But I think people bailed on tech too early, and it was part of my notion and fear that people are making binary decisions, sell tech, buy value, and I think it obviously did not work.
Which brings me to a question that's kind of one of the eternal questions, Brian. If investors are prone to buy things too late and sell things too early, why not just invest in a simple index fund and figure that you're going to match the market one way or another? You're not going to be left out of anything. You're going to collect basically a market return, which is pretty good.
Great question, and we were very honored to be on your program the first week of January, and we talked about diversifying. We talked about having be more of a stock pickers market, focusing less on ETFs and more on stocks. The stock market is a market of stocks, Tyler, and we want to play themes and stock-driven stories, and there's themes for every sector. And I think investors would be doing themselves a great disservice by buying the DRG or biotech ETF and instead buying the strongest biotech or drug stock. Same thing with the financials, same thing with tech. And so we want you to be a stock picker. And oh, by the way, active investing is outperforming ETFs this year.
Is there any better way to diversify than by buying an S&P 500 fund? I mean, isn't that perfect diversification?
Well, sure there is. I think, well, I mean, from a short-term perspective.
Or a Schwab 1000 or whatever it is. I mean.
Yeah, I mean, I think the best way to do it, Tyler, is you want to have, if you're only buying ETFs, and the best way to do it is buy an ETF or ETFs that are representative of all cap, whether or not it's mid cap, small cap, large cap, because we continue to believe that U.S. stocks are going to lead the way. And I think that's the best way for those that are looking for exposure to have more of a Russell 3000 product or a S&P 1500 product.
Mr. Belsky, always good to see you, sir.
Thanks, Tyler.
Thank you very much. President Biden is expected to lay out aggressive measures aimed at cutting greenhouse gas emissions.
July 16th,
and just now, Treasury Secretary Janet Yellen is speaking about the financial side of that issue. Elon Moy has the details.
Well, Tyler, Treasury Secretary Janet Yellen is pledging a whole-of-economy approach to fighting climate change.
She's speaking today
April
to the
23rd,
Institute of International
2021.
Finance, and in her prepared remarks, she says that investors need
1,599
more
contracts.
reliable, consistent, and comparable ways to assess climate-related risk, and that she's working to develop those standards with international partners. In addition, Yellen also emphasizes the role of the public sector in achieving zero net emissions by 2050. President Biden's infrastructure package includes tax credits for clean energy investments that are technology neutral. She says the market will determine whether solar, wind, or hydropower end up being the winners. Now, her remarks come as Democrats on Capitol Hill today unveiled a similar idea, providing a tax incentive for any facility, fossil fuel or otherwise, with zero emissions. Now, under that plan, new facilities could also qualify for a production tax credit of 2.5 cents per kilowatt hour or a 30% investment tax credit. Senate Finance Committee Chairman Ron Wyden, who's sponsoring this bill, said that he has spoken with Secretary Yellen about these ideas and that his proposal is closely aligned with the administration's goals. Guys, back to you.
Elon, thank you very much, Elon Moy. Up next, we're looking at companies getting ahead of that news and how the ESG investing trend could be affected. Plus, we'll look at what Americans have been cooking, eating, and especially drinking during the pandemic. Stay with us.